Very good morning, everyone. How are you all? Last class we were doing financial instrument revision. We have done up to topic number 7. Topic number 6, sorry. Topic number 7 also. Yeah. So we have completed derivative financial instrument. Up to that, if you have done any question, you can ask me, or if you have any doubt, you can once again ask me. Follow. Do you have any doubt? So what we have done in the last topic, that derivative financial instrument may be either held for the purpose of trading. If it is held for the purpose of trading, then of course FBTPL means initial recognition at fair value, not plus minus transaction cost, correct? Initial recognition at fair value, subsequent recognition at fair value, and any gain or loss will be transferred to PL. Correct? I hope it was very simple. One question we have taken, no doubt about that. That question is only the question in ICAI study matter here. So if they will ask that question only. Now let us come to hedge accounting. Now, whenever derivative instruments are held for hedging, I hope you all know about hedging. Hedging means to minimize the risk. Now, whenever we say hedging, so there are three aspects need to be considered. Means there must be what India says, that there must be hedged item. There must be hedged item. So hedged item are those items which are exposed to risk. For example, it can be either recognized asset or liability. It can be either unrecognized firm commitment, or it can be either highly probable forecasted transaction. Highly probable. So when I am saying either recognized assets or liability, means the assets and liability are already recognized. Firm commitment means some contract has been done which is binding. Means a commitment has been given about that contract, but till now not executed. So that contract may be also hedged, correct? And then highly probable forecasted transaction. There may be some transaction which is highly probable, but no commitment has been given for that, but is highly probable. For example, I announced a batch. So no commitment has been given, but it is highly probable. So this become highly probable forecasted transaction. So this can be what hedged item. Then there must be an hedging instrument. Now the hedged item are exposed to risk. So to cover up that risk, will enter into an hedging instrument. This hedging instrument will be normally a derivative instrument. So derivative instrument will be used to hedge the risk of hedged item. Correct. Then third condition is that there must be relationship between hedged item and hedging instrument. Of course, relationship is required. Correct. So relationship must be there, and that relationship must be documented also. It must be documented, and the relationship must be effective also. So from examination point of view, whenever they say that the hedging instrument has been entered into, the contract has been entered for hedging purpose, so even the question is silent, will assume that this four condition has been satisfied. And if these four conditions are satisfied, then we need to apply hedge accounting. Means will not apply our normal accounting whatever we have done till now. Will not apply normal accounting whatever we have done till now. Means hedge accounting is a different accounting. Are you getting what I am saying? Yes, sir. Now there can be two type of hedging. One is known as fair value hedge. One is known as cash flow hedge. So whenever we have recognized assets or liability or firm commitment, so this type of hedging is known as fair value hedging. And whenever we have highly probable forecasted transaction, this type of hedging is known as cash flow hedging. Means from the question it is understood whether it is a fair value hedging or cash flow hedging. Means whenever we have assets and liability in our balance sheet and that are exposed to this, it is what? Fair value hedge. And whenever we have firm commitment, means some contract has been entered, already the contract has been entered, but till now not executed. There is one type of executory contract. So in this also we will enter into fair value hedge. But whenever they say expected transaction, in the question they will say expected transaction. Transaction is going to happen in future and there is no commitment. So it is known as what? Highly probable forecasted transaction. Then it is automatically understood that it is what? Cash flow hedge. Now, from examination point of view, they have given only one question based on cash flow hedge. Till now, no question has been given on fair value hedge. However, fair value hedging is very simple. Cash flow hedging is thoda sa technical, I will say. However, it is also very easy once you have understood. Correct. So can I say we need to understand what will the accounting treatment in case of fair value hedge. So accounting is very easy. Just try to understand whenever there is a fair value hedge, so we have one hedged item, one hedging instrument. So can I say hedged item is exposed to loss, and this loss will be covered by gain of hedging instrument. So both gain and loss. What hedge accounting says that both gain and loss will be transferred to PL or OCI. This is the concept. Means for example, we have investment in equity shares. So can I say either we can apply FBTPL or FBTOCI as per our previous understanding. So if FBTPL gain will be transferred to PL, if FBTOCI gain or loss will be transferred to OCI, correct? And we now to hedge the loss of such item will enter into hedging instrument, derivative instrument. What we have done till now, if there is a derivative instrument, the gain or loss, we see to measure the FBTPL, the gain or loss will be transferred to PL, correct? Now suppose investment in equity shares has been classified as FBTOCI and we have entered into derivative contract. So that is FBTPL, it is FBTOCI. So can you see their gain or loss is transferred to OCI and their gain or loss is transferred to PL. Can I say mismatch in accounting? Because this gain will offset this loss. So this gain will offset this loss. So of course we need to apply matching concept. Either this gain or loss will be transferred to PL or this gain or loss will be transferred to OCI. If one is transferred to PL, one is transferred to OCI. So can I say it is mismatch in accounting? Mismatch in accounting. Therefore the accounting is very simple. What hedge accounting says that forget whatever you have done in previous discussion. Forget. Means don't apply whatever we have done in till now. Once you have entered into hedge accounting, apply the principle given in hedge accounting. So what they said, if the hedged item is AC or FBTPL or FBTOC debt instrument and hedging instrument is derivative financial instrument, so their gain or loss will be transferred to PL. Both gain or loss will be transferred to PL. Means hedged item can be AC, hedged item can be FBTPL, hedged item can be FBTOCI, debt instrument. Because can I say if it is FBTOCI debt instrument, the cumulative gain or loss is recycled to PL. Understood now? Therefore, what they said, the entire gain or loss of both will be transferred to what PL only. But if the hedged item is what? FBTOCI equity instrument. Means right now we have taken one example of investment in equity shares. If it is FBTOCI, their cumulative gain or loss will never be reclassified to PL. Therefore, in this case, both gain or loss will be transferred to what? OCI. This is the rule. Rule is very simple. Correct? Means one more. Suppose the hedged item can be non-financial asset also. Hedged item can be machinery. Hedged item can be inventory also. Suppose you purchase one inventory. Now you have a expectation that NRV of inventory may decline. So you will enter into forward contract. You will enter into a forward contract to sell such inventory at current price because you have an expectation that price might decline. You will enter into forward contract to sell at current price after 6 months or after 9 months, whatever the case. So forward contract, whatever you have entered, that become derivative instrument, and in this case inventory become hedged item. Are we able to understand? So inventory's loss will be offset by derivative contract gain. Now inventory is a non-financial asset, is not covered in this chapter. Normally it is covered under Ind AS 2. Ind AS 2 say the cost price or NRV which is lower. Now we will not apply that. Now we will not apply Ind AS 2. Now let us come to hedge accounting. Hedge accounting says that this gain or loss, whether gain or loss will be transferred to PL, and this gain or loss will be also transferred to PL. Means in this case also this will be transferred to PL. Understood what I am saying? Have you understood this point? Follow. No question has been given in ICAI study material, but I hope you are understanding. Bolo. Have you understood this point? Means only to explain thoda sa what I want to say. Suppose you have what investment in debenture. correct? And you purchase at a cost price of 1 lakh, correct? Now you are expecting that after purchase you are expecting that the price may decline. Quite, this cost price is nothing but fair value as on this date. Investment, the first journal entry you have done investment account debit to bank how much? 1 lakh. 1 lakh. Now you are expecting that fair value may decline. So you will enter into forward contract. You enter into forward contract to buy or sell. To sell at rupees 1 lakh only, because you have a expectation that price may decline. So you will enter into forward contract to sell. Now when you enter into forward contract sale, then no consideration has been paid. If it is put option or call option, some premium is paid. Correct? So can you say no entry for this? No entry for this. Suppose you have entered a forward contract to sale after 3 months. After 3 months. Are you getting what I am saying? Now this was 1st Feb. So 31st March will come after 2 months. Now the price become what? Let us assume price become 90,000. 90,000. So can is this gain or loss will be transferred to PL? Even though it is measured at AC. Even though it is measured at what? FBTPL. Even though it is measured at what? OCI. Now forget whatever you have done previously. Because you have entered into what? Hedge accounting. Now entire gain or loss will be transferred to PL. Are you able to understand what I am saying? So now this 10,000. So what journal entry will do? This loss PL account debit to investment. But just try to understand, because you have entered into a forward contract to sale at 1 lakh and now the price become 90,000. There is a gain, because you have entered a forward contract sale at 1 lakh. You will sell at 1 lakh even though the price decline. There is a gain of what? 10,000. So you can see this gain will offset this loss. So now one entry will pass. What journal entry will pass? Derivative financial asset account debit to PL. So there will be one asset in derivative contract, because you can realize now 10,000 from this contract. So this journal entry will be 10,000. This journal entry will be of 10,000, and you can see this gain will offset this loss in profit and loss account. Are you able to understand? This is what hedge accounting. Hedge accounting you understood. To apply matching concept, simply as the matching concept. In CA Foundation, CACPT, we have done matching concept. It is nothing but match accounting. Are you able to understand? Yes? Are you the yes? Correct. Now suppose after 3 months, means this was 31st March, this is 30th April. Now actual price become what? 80,000. 1 second there is a loss. So 1 second there is what? Will pass one journal entry PL account debit to investment by 10,000. 1 second there is a gain. Will pass journal entry derivative financial asset to PL 10,000. 1 second you can see this gain will offset this loss. But now this is settlement date. Settlement date. So can you see you will sell investment at current price? So you will sell. What journal entry you will do? Bank account debit to investment. How much? 80,000. But can you see you have a derivative financial asset of 20,000? That will be also realized. One more journal entry you will do. Bank account debit to derivative financial asset 20,000. So ultimately how much you have collected? This is hedging. Your intention was to sell at rupees 1 lakh and now it become 1 lakh. So your intention achieved or not? Means your intention to sell at rupees 1 lakh and now you are getting 1 lakh. This is known as hedging. This is known as hedging. Understood hedging? Have you understood? So I hope if you have understood this type of question may be asked. No question given in ICAI study material. But what is the rule? Rule have you understood? This is the rule. If it is AC, FBTPL, FBTUC, debt instrument or non-financial asset, the gain or loss will be transferred to what? PL. But if it is FBTUC equity instrument, gain or loss will be transferred to what? OCI. Thus, this is the rule. So, okay, understood? Any doubt? Have you understood? Now, can I come to one question related to what? Cash flow hedging. Cash flow hedging expected because they have given one question based on that. Correct? Means previously I used to say that this topic is not important. Why not important? Because there was no question. But now they have given one question, it become expected. Correct. So cash flow hedge means what? Already I have said that whenever there is a expected transaction, highly probable transaction, it means it is a cash flow hedge. Whenever there is a expected transaction, highly probable transaction, and we want to hedge the loss of that transaction, it is cash flow hedge. Correct. So when I am saying cash flow hedge means, can I say we are expecting that either our inflow will be less or our outflow will be more. Cash inflow will be less or cash outflow will be more because of that transaction. Correct. For example, abhi after COVID-19, we are getting less student in face to face. We are getting less student in face to face. That is also one risk, na. Now I announce one batch, so I know that my cash inflow will be less only. So I have a fear of getting less student, means my cash inflow will be affected. So this is highly probable transaction. Now how to hedge that? By entering into some derivative contract, that we are able to, that we are going to understand this. So what Ind AS 109 says that if there is a cash flow hedge and the hedging is ineffective, hedging is ineffective. Ineffective means, suppose you enter into a hedging instrument, you have entered into a derivative contract to hedge that loss, but after some time, your after some time, I cancel the batch. I announce the batch, but after some time I cancel the batch. So can I say now hedging become ineffective? If there is no batch, the question of hedging will not arise now. If the hedging is ineffective, then transfer entire gain or loss of that hedging instrument in PL. Correct? Means now it will become as simple as derivative instrument held for the purpose of trading. So if the hedging become ineffective, in the question they will inform you whether it is effective or ineffective. So if the hedging is ineffective, then transfer entire gain or loss to PL. Very simple. It's very simple now. But if it is effective, just try to understand what I am saying. When I am saying highly probable transaction, so can I say any loss due to that transaction will arise in future? So right now there is no loss. Right now there is no loss. It will arise in future now. But in derivative contract, there may be gain or loss right now only. So this gain, whatever we are recognizing on derivative instrument, can offset the loss which will arise in future. So right now this gain should not be transferred to PL. This gain should not be transferred to PL. Why? Because the loss will happen in future. Understood now? Once again, we have some highly probable forecasted transaction. The gain or loss on that transaction will arise in future, but we have entered into derivative contract right now only. So any gain or loss on derivative contract will arise right now only. Correct? So what they are saying, this loss and this gain or loss of derivative contract will offset the gain or loss of probable transaction which will arise in future. Therefore, this gain or loss should not be transferred to P right now. It will be accumulated in separate component of equity through OCI. And that separate component equity is known as cash flow hedge reserve. Simple. Really simple. Correct also na? Are bolna rahe? This correct or not? So what they are saying, this gain or loss on hedging instrument shall be recognized in OCI and accumulated in what? Cash flow hedge reserve. Means what journal entry will pass? If suppose there is a gain in derivative contract. So derivative financial asset account debit to what? OCI accumulated in what? Cash flow hedge reserve. If there is a loss in derivative contract, what journal entry? So it will be liability. So OCI cash flow hedge reserve account debit to what? Derivative liability. Simple. Yes, sir. Now what they are saying, if the means on settlement date, what they are saying, if the hedge forecast transaction result in a non-financial asset, means suppose the highly probable transaction was for the purchase of machinery. Means what was the highly probable transaction? You are expecting to purchase machinery in future. This machinery is a financial asset or non-financial asset? So in this case, hedge forecast transaction result in a non-financial asset. What they are saying, due to hedge forecasted transaction, either non-financial asset will arise or non-financial liability will arise, then that cash flow has reserve will not be recycled to PL, will be adjusted with that non-financial asset. Means whatever cash flow has reserve debit and credit balance will not be recycled to PL, that will be adjusted with the non-financial asset and non-financial liability. Means it will be adjusted with the carrying amount of non-financial asset and non-financial liability. Simple only. But in other case, means if the highly probable forecasted transaction will result in a financial asset and financial liability, we can say in this way. In other case, for example, if I am saying a highly probable transaction is to sell inventory. So when we sell inventory, what is the journal entry debtor account debit to sales? It is not resulting in any non-financial asset or non-financial liability. In that case, sales is what revenue, and revenue is transferred to what PL. In that case, the cash flow has reserve will be recycled to what PL as reclassification adjustment. You can see the amount shall be reclassified from cash flow has reserve to PL as a reclassification adjustment. Rule is very simple. Have you understood? Can I repeat once again? What they said, if hedging is ineffective, transfer to PL. What you transfer to PL? The gain or loss in hedging instrument will be transferred to PL. If the hedging is effective, then any gain or loss in hedging instrument for the time being will be transferred to OCI and accumulated in cash flow hedge reserve. Now on settlement date, if that highly probable forecasted transaction result in a non-financial asset or non-financial liability, then the cash flow hedge reserve will be removed from equity and will be adjusted with the non-financial asset and non-financial liability. Correct? Have you understood this point? This point have you understood? Correct? But in other case, it will be reclassified to what? PL. Rule is very simple. Can we take one question? Question can we take? If in exam they will ask this question only. Come to this question. Question number 70. Beside construction activity, Building and Company Limited is also engaged in the trading of copper. Trading of copper. So it means copper means inventory here. On 1st April 2001, it had 100 kg of copper costing rupees 70 per kg, totaling rupees 7,000. This is the cost price of copper inventory. The company has a scheduled delivery of 100 kg of copper to its customer on 30th September 2001. So it means they have scheduled delivery. Scheduled delivery. So can you see it become highly probable forecasted transaction? Means on which date? On which date? The company has scheduled delivery to its customer on 30th September. Right now it is 1st April. So can you see it become highly probable forecasted transaction? But there is no commitment given. If some commitment is there, then it becomes fair value hedge. At a rate of $100 on that, means they have a scheduled delivery and they want to sell at what, 100 per dollar? 100 US dollar, correct? To protect itself from a decline in the currency exchange rate. Now, because they have scheduled delivery and the sale price fixed was 100 US dollar, so there may be some decline in exchange rate. If decline in exchange rate, so can I say my cash inflow will be less? So there is some risk. There is some highly probable risk. The entity has its position by entering into currency future contract for equivalent currency at rupees 76 per US dollar. Means they have entered into forward contract to sell US dollar at what? 76. Are you getting what I am saying? The future contract mature on 30th September 2001. The settlement date is same. The management performed an assessment of hedge effectiveness and concluded that hedging relationship qualifies for cash flow hedge accounting. Means it is effective. It is effective na? Are bolna rahe? The entity determine and document the changes in fair value of currency future contract will be highly effective in offsetting variability in cash flow of currency exchange. You can see all the conditions satisfied. On 30th September 2001, the entity closes out its currency future contract. On the same date, it also sell inventory of copper at US dollar when the spot rate was actually what? What is the current spot rate? 72. You are required to prepare detailed working and past necessary journal entry for the sale of copper and the corresponding hedge instrument taken by the company. Pass the journal entry as on initial date, first quarter and reporting date means 30th June is the first quarter reporting date and the date of sale, that is 30th September. They have given assume exchange rate as follow and the yield rate is 6%. Whenever they give yield rate or discount rate, it means you need to perform discounting, correct? You need to perform discounting, correct? They have given yield rate 6%, means you need to find out the present value. Now they have given what date? First April. This is the forward rate. 76, 30th June, 30th September. Means what they want to say. Everyone just wait one to say. On this date, what is the date? 1st April 2001. Correct. What is the cost price of copper? What is the total copper? No. 100 kg na. 100 kg into 70. But they have entered into contract to sell at 100 kg into 100, and this was the sale date was on 30th September. Understood? On this date, what was the forward rate? They have entered into a forward rate of what? 70, 76 na. Forward rate is they have entered into contract. They have entered into a future contract na. Future contract to sell what? To sell US dollar, 100 US dollar na. 100 US dollar at what? 76. At 76. Now on first quarter end means on 30th June, the forward rate become what? 74, and on this date the forward rate become what? 71. But on this date, what is the spot rate? This spot rate is not given. This spot rate is not given. This spot rate was 72. Correct? Just try to understand this 76, 74, 71 are forward rate. Means this is how many month? 6 months. So this is 6 month forward rate. This is what? How many month? This is 3 month forward rate. And this is what? 0 month forward rate. Can you say at the end this should be equal? So I will say there is some question mistake. On settlement date, because now there is no forward na, because now to it is going to be settled. So at the end of the contract, forward rate and spot rate are always same. I will say some question mistake, but can you change the question? We need to respect the information given in the question. But normally this 71 and 72 will be same. Are you getting? You know SFM na? Are you able to understand what I am saying? Yes, sir. Now for these informations even given are not relevant. Kasam khao. Means whenever we have entered into forward contract to buy or sell foreign currency, then spot rate is not relevant. For cash flow hedge accounting or any derivative contract also. Kasam khao. Means it might happen they might give spot rate, ignore it. They might give spot rate also, ignore it. Chalega? Yes, sir. Now you have entered into 76. Now it becomes 74. But the gain or loss, at the first we need to calculate what? The present value. You can see what they have given. This is what? Forward rate 76, 74, 71. Now we need to apply discounting factor. Discounting factor. So just try to understand what I want to say. Because this is what? This amount is realizable immediately. this amount will be realizable after 3 months and this amount is realizable after 6 months. Means in this case discounting factor will be for what? 0 month, in this 3 month, in this 6 month. What is the yield rate? 6%. So you can see they have given 1 for 6%. Can you calculate discounting factor for 3 months? So you will do 6 by for 6% per annum. Now the 6 by 4. 6 by 4, this become quarterly. What is the quarterly rate of interest? 1.5. अरे बोलना रे. Now 1.015. 1.015 divide equal to, it is coming 985. Jadu coming. Normally student will do mistake यहीं पर. Even though you are doing before exam same question you are doing, but if you don't revise you will do mistake. Have you understood this point? 6%, don't apply 6%, apply 6% divided by 4, 1.5 na, where it is quarterly information given. Now divide equal to, it is coming 971. Have you understood this point? So this is not 6%, it should be 1.5%. Is given also on quarterly basis. Have you understood this point? Correct. Are you able to understand? Now, can I say in this way? Just try to understand, everyone. So can I say in this way? We enter into a contract at rupees 76. So can I say on this date of fair value is 0? Fair value is nil na? On entering into forward contract, what is the fair value? Fair value become nil. Now 76 becomes 74. 76 becomes 74. Correct. So now 76 becomes 74. It is favorable, unfavorable. You entered in a contract to sell at 76. Now the exchange rate becomes 74. Favorable, unfavorable? Favorable. It is forward contract to sale at 76. So even though it becomes 74, you will sell at about 76 only na? Think here. I am not teaching you SFM. I am assuming that you know that. It is a forward contract to sale at 76. Now it becomes 74. There is a gain of what? 2. 2 means 2 into what? $100. It becomes 2000. So this is what fair value. This is what fair value. This is positive 2000. Now 76 become how much? 71. So once again it is favorable. Now it become what? How much? 76 becomes 71 means 5. 5. It become 5 into 100 means how much? Oh, 200 no? Sorry. So 5 into 100 means what? 500. Are you able to understand? Yeah, this is fair value. If you want to calculate gain, so this gain is how much? Gain is 200. This gain is how much? 300. Understood what I am saying? So what they want to say, this is what? This amount will be realizable. So you need to apply discounting rate in this. Are you able to understand what I am saying? To what they have done, check karenge. You can see they have also calculated what? You can see they have also calculated what? 0, 0, 200, 500. Then apply discounting rate 971, 9851. Understood now? Now it become what? 0, 197, 500. Are you able to understand? Now they have calculated what? Gain or loss. Gain or loss is the difference between this. So 0 minus 197. 197 is the gain of first quarter, and then 197 become 500. Gain is what? 303. Have you understood this point? Follow. Means what they are saying, on 1st April 2001, 30th June 2001, 30th September 2001. What is the fair value of forward contract? 0, 200, 300. Sorry, 500. Now, if discounting rate is not given, then to apply undiscounted amount. It might happen in your exam question discounting rate is not given. Then do based on what? Undiscounted amount. Because can I say, from my point of view, discounting should not be applied. Because time value of money is not material. From my point of view. From my point of view, in derivative contract discounting, so it is only 6 months now. Time value of money is not matter here, but they have given 6%. Now, if you don't apply, then to use, then to it is not, you are not respecting the information given in the question now. Practically, I will say discounting should not be done. Practically, अरे बोलना, because 6 month time value money is not matter here now. It is 6 years to will do discounting. Correct now. Practically will not do discounting, but because they have given discounting rate, whenever discounting rate is given, we come to exam point of view. Exam point of view discounting. So what is the discounting factor? This is 1. This is 0.9985, and this is 0.971. Now can you give me fair value at present means discounted amount? How much? This is 0. 197,500. So difference between will be fair value gain or loss. So fair value gain is what? 0, 197 and 303. This will be recognized. But what will be first journal entry? On 1/4 what journal entry? No entry. On 30th June what journal entry? Batao. There is a asset derivative financial asset to what? OCI cash flow has reserve. What amount? 197. 197. Then on 30th September, also derivative financial asset to what? OCI cash flow has reserve. How much? 303. 303. Automatically your asset become what? 500. Now on this date you will first sell copper. You will sell copper now. So what is journal entry for sale? What is journal entry for sale? It is either bank or debtor. Correct. You can say bank also. You can say debtor also. So let us now bank or debtor account debit to sale. Correct. You have sold at what price? Means $100. Means sorry. You will sell at what? 100 US dollar. It was commit. It was the transaction. So 100 US dollar at spot rate. What is spot rate? From my point of view, it should be what? 71. But we'll respect the information given the question. It becomes 7,200. 7,200. Correct now. Now you will also realize derivative asset. What journal entry? Bank account debit to what? Bank account debit to derivative financial asset. How much? 500. 500. So ultimately how much you have recovered? You can say 7,700. And you enter into forward contract to sell at 76. It was 7,600. You are recovering 7,700. However, if it was 71, you would have recovered 7,600 only. So I will say there is some mistake in the question. But you need to respect the information given in the question. You can't change question in exam hall. Correct? Now, this you understood. Now we have what? OCI, credit balance, cash flow as reserve. Because there is no non-financial asset, no non-financial liability, it will be reclassified to PL. So what journal entry will do? OCI, cash flow has reserve. To sales only. Sales na means you will increase the amount of sales. You will increase the amount of revenue na by what amount? 500. So you can see ultimately your sales amount will be 7,200 plus 500. That is 7,700. This I call it beauty of accounting. This accounting means after becoming CA, you are supposed to do this type of accounting now. And normally I have seen students leave this topic. Student become selective from examination point of view. Just try to understand, if you do selective studies, you may pass, but what will happen in interview? Because in interview they are going to ask this question. Believe me, if you do selective study now, I can understand first intention is to pass, but after becoming CA, if you are not selected in one interview, if they are rejecting you, I will say better give another attempt. Bolo yes or no? After becoming CA, if you are not getting job, or if you are getting job which is less than average salary, then also not good na re. Bol na re. Am I right or not? So I will say you should pass with knowledge, and therefore you should not leave any topic. Question may or may not come. Correct. But it is simple topic now. It is not complex. It is not at all complicated. Not at all complicated. Understood? I hope this from examination in regular batch. So I will take more questions. We'll do detailed discussion on this. But from exam point of view, because they have given one question, this question high chances, highly probable questions. Let us do hedging on this. Highly probable question. If they will ask this question only. Chalega? And suppose they change the question. Now you have understood thora concept. Try to attempt that. Got it? So can I assume that you have understood hedge accounting? Can I assume that you have understood hedge accounting? Yes, sir. Can we come to the other topic? Yes, sir. We can come to the other topic. Okay, sir. Yes. This you understood? No. Then there are some miscellaneous topic. Topic number. Achha, there is one more topic. There is no question on this. Therefore, I am not doing it. Okay. There is no question on this. So, of course, from hedging, I will say we need to take some examination point of view because they need to first create some question now. Chalega? Yes, sir. Then come to topic number 9, miscellaneous topic. In there is one concept about embedded derivative. Embedded derivative, they have given two questions and both questions are important. What is the meaning of embedded derivative? Embedded derivative means any derivative which is embedded in non-derivative contract. Means suppose there is some non-derivative principal contract. What is non-derivative contract? Non-derivative contract are those contracts which are not derivative. What a derivative contract? Derivative contract, you know, because you have done SFM, which changes as per the changes in the price of underlying. Correct? Are you getting what I am saying? So any contract which is not derivative or non-derivative, simple. So embedded derivative is a component of an hybrid contract that also include a non-derivative host contract with the effect that some of the cash flow of combined instrument vary in a way similar to standalone derivative. Means in simple word, if I say convertible debentures, we have understood convertible debenture. This is non-derivative host contract. But if I insert one call option there and I make it callable convertible debenture, so call is inserted, callable convertible debenture, it become what? Embedded derivative. Understood? Are you able to understand what I am saying? So in the principal contract, some derivative contract is inserted that become embedded derivative. That derivative is known as embedded derivative. So what India says that in the books of holder, there is no need to separate embedded derivative because can I say there is no concept of compound financial instrument in the books of holder. Can I say we have never in the books of issuer we have done the splitting part now. In the books of issuer we are doing splitting part, financial liability, equity instrument. Well, in the books of entity who has issued such contract, we need to split it. We need to split it. Means you need to separate derivative from what? Host. You separate derivative from host. So I need to take one example, you will understand. Now convertible debenture, you know. Already we have done. Now how to separate these we need to explain. Correct? Yes, sir. You can see example callable convertible debenture, callable preference shares, or contract to buy or sell a foreign currency with an entity having same functional currency. This point I will take one separate question for this. What they have said, when an embedded derivative is separated, when to separate? What they are saying? Does the hybrid contract contain a host that are an asset within the scope of India's 109? What they are saying, if the host contract is an asset, if the host contract is a financial asset, so can you see it is the books of holder? If the host contract is a financial asset, it is the books of holder or books of issuer? If the host contract is a asset, if I am saying debenture, so it will become asset in the books of holder, investment in debenture. then there is no need to separate. So yes, it is a financial asset, then there is no need to separate. Means simple. If I am saying callable debentures, so debenture will become financial asset in the books of holder na. There is no need to separate. Apply Ind AS 109 whatever we have done. But if the host contract is a financial liability or equity instrument or compound financial instrument, means in the books of what? Issuer is not a financial asset, means it is a either financial liability or equity or compound financial instrument, then there is need to separate. Correct? There is some need to separate. From examination point of view, whenever such questions come in the books of issuer, always will separate. However, there are three conditions to separate. What are three conditions? What they said? First condition is what? Economic characteristics and the risk of embedded derivative should be closely related with the should not be closely related with the host contract. Means it should not be closely related. Because it said no. Means if closely related, then will not separate it. Are you getting? Economic characteristics of risk of embedded derivative are closely related, then will not separate. Because this is not important. From examination point of view, whenever they have given a contract, host contract started with embedded derivative, we need to separate. But there are three conditions of separation. First condition what? Just listen. First condition is what? The economic characteristics and the risk of embedded derivative are not closely related with the host contract. Second condition is what? Hybrid contract is not measured at FBTPL. Correct? And the first condition already we have said that it should not, the host contract should not be financial asset. There are three conditions. If these three conditions satisfied, we'll separate. Correct now. But not important from examination point of view. Now how to separate? Can I take one question? How to separate? Because that question will be asked. It is very simple. Come to one question. Question 56. D Limited issued callable preference shares to G Limited for a consideration of 10 lakh. The holder has an option to convert his preference shares to a fixed number of equity instruments of the issuer at any time up to a period of 3 years. If the option is not exercised by the holder, the preference shares are redeemable at the end of 3 years. The preference share carry a coupon RBI base rate of 1%. Means what is the contractual rate of interest? It is RBI base rate plus 1%. The prevailing market rate of similar preference shares without the conversion feature is RBI base rate plus 4%. Is market rate of interest given? On the date of contract, RBI base rate is 9%. Is what is the contractual rate of interest? 10%. And what is the market rate of interest? 13%. What is the market rate of interest? Bolo? 13%. It is 13%. Correct. The value of call by using Black and Scholes model for option pricing is 29.165. Now can you say call option and put option will have some value on the date of contract only? Because can I say I hope in SFM you have that a premium is paid by the holder whenever we enter into call option and put option. That premium amount is what? The value of option. Have you understood? So can you say the value of option will be given? Now how to calculate a value option, that is SFM. In exam, in FR exam, they will always give the fair value of call option, fair value of put option. Means they will always give you the premium amount. How to calculate that value? That is a topic of SFM. You can see Black and Scholes model way you have done where? SFM already done now. So how to apply that model? Go and ask your SFM faculty. Don't ask me. Means this value will be always given in the question. Means there cannot be any question when value is not given. Value is not given, then calculate by applying SFM subject. Got it? But they will not ask. Just try to understand how to do it. So can you say we are doing question number 56. First, how much proceed received? How much? 10 lakh. Proceed received means what? Nominal value plus premium minus discount. Then can I say from this we can deduct fair value of liability component. In that too we are expert now. So there is an option given. Option to the holder. You will take interest. How much interest? Contractual rate of interest is how much? 10%. 10%, 10 lakh means how much? 1 lakh. For how many years? 3 years. Can you give me the present value annuity factor? At a rate of what? At a 10%. At 10%, 13%. Market rate of interest na. So at 13%, you will do discounting at what? 13%. How much? Please be careful. Huh? Don't say 10%. Now, if you are saying 10% means in exam also you will say 10%. Huh? How much? 2.36. How much it is coming? 2 lakh 36,000. Okay. And principal, because option, so we'll take it. Option is given. So initially we'll classify it as what? Liability. Redeemable at par or premium? Redeemable at par or premium? Nothing is given than par na. It will take that also you need to think na. Don't say 10 lakh immediately. Think first. So now it will be 0. How much? 69. How much it is coming? 6 lakh 90,000. What is the total of these two? 9 lakh 9,26,000. So what is the proceeds and what is the balance left? 74,000. Now just try to understand what I am saying. What was the equation? If I say proceed is equal to fair value of liability component plus fair value of equity component, this was our initial understanding. This was initial understanding. My question to you all, for liability component we are receiving what? Some consideration, means I am the entity who has issued such instrument. So for liability component we are receiving some amount. For equity component also we are receiving some amount. But if there is a call option and I am holding that call option, so I become holder. Means entity has a call option. Call option means what? Right to buy. So I have a right to repurchase. So I will have call option now. So entity is the holder of call option. If entity is the holder of call option, they will receive some amount or they will pay some amount. They will pay premium. It means, can I say, just try to understand. Here this proceed whatever you have received, that is net amount, means minus what will do? The fair value of call option. Fair value of call options. Understood. Now what is the proceed? Proceed is what? 10 lakh. What is the fair value of liability component? 9,26,000. Correct. Can I say we need to calculate equity component, that is X. Let us assume X. They have given fair value of call option. How much? 29,165. So can I say we can easily calculate fair value of equity component. What is the fair value of equity component? This minus this plus this. How much? 1,03,165. Have we understood this? Have you understood this equation? Means this 74,000 is not fair value of equity component because it is the net amount now. It is the net proceeds. Are you able to understand this point? Have you understood this equation? This equation have you understood? Have you understood this equation? Correct. This is, so we have calculated what is my liability component, this amount. What is my equity component, this amount. Got it? Are you able to follow? Are you able to follow? Simple. Correct. If suppose they ask journal entry, what journal entry will do bank? How much we have received? How much you have received? 10 lakh. Can you say because we have purchase call option, that is our asset, financial asset, so we'll open one derivative financial asset. Derivative financial asset account debit how much? 29,165. To financial liability how much? 9,26,000. And to equity instrument how much? 1,03,165. Can I say this will be subsequently measured at FBTPL? Can I say this will be subsequently measured at amortized cost? An equity instrument, no subsequent measurement? No measurement? Bolo yes or no? No measurement. Have you understood this point? Same to same question is going to be asked. Same to same question is going to be asked. Have you understood? Correct? Correct. So this you have understood accounting treatment. There is one more point for which also two question has been given in ICAI study material. Do you want me to take this topic? Because I have not taken any question in my question booklet. So I'm take, so let us take this also because this is also expected. Foreign currency derivative embedded in a contract for purchase or sale of non-financial item. Just try to understand. Suppose A Limited, B Limited, correct, has done one sale contract, sale of any item, sale of goods. And suppose their functional currency is rupees and their functional currency is rupees. So my question to you all, this transaction will be done at what? Rupees only? So there is no derivative, there is no embedded derivative. So this is normal transaction. But if I say functional currency is rupees and dollar, and this transaction is either either enter into rupees or dollar, then also there is no embedded derivative. Because normal transaction, either this transaction will be at rupees or the transaction will be at dollar. Simple na. So there is no derivative in this. Means there is no intention to earn any short-term profit with this. With this what? With this foreign currency. Suppose this from this entity's point of view, dollar become foreign currency na. But if I say this is rupees and this is rupees, but they have entered into dollar, no one doubt will come. See, both entities functional currency rupees. So why they have entered into dollar? So what India says that it might have some embedded derivative, means they want to earn short-term profit with these currencies also, foreign currency. Or it might be dollar, but they have entered into euro. These also what have some embedded derivative. Understood what I am saying? So if this type of questions are given in the question, if suppose this type of questions are given in exam, it means it is a question of embedded derivative. Understood? Correct? What is the topic? Another common situation in trade or commerce in today's world is a contract for purchase or sale of non-financial item where the price is denominated in a foreign currency. The embedded foreign currency derivative should be separated from the host contract. But how to separate? Can I take one question based on this? Follow. Can I take one question based on this? So let me go to my question bank. I will take question from there. Actually, I should take one question, but I forgot to take one question on this. this question. If they will ask similar question, nothing to worry, okay. They may change the pattern, but the concept remain same. One question will take. Question 59. On 1st Jan 2001, ABG Limited, a company incorporated in India, entered in a contract to buy solar panel from A&A Associate, a firm domiciled in UAE. So what is the currency of UAE? Dubai dirham. Dirham na? Correct? For which delivery is due after 6 months. The purchase price is in US dollar. Oh, understood. Means they have given two company. What is the name of the two company? ABC and ANA. What is the functional currency? Rupees and dirham. Na? What is the what we call it? Dirham. Okay. And the transaction is entered for purchase of what? Solar panel at what? How much US dollar? 50 million na? US dollar. And therefore this contract has some embedded derivative. Means we'll assume always, even though condition, there are three conditions. That three conditions are not satisfied, then we'll not separate. But from examination point of view, always we'll assume that three condition has been satisfied. Understood? So what means we can do from this company point of view or this company point of view? So of course we'll do from this company point of view because this is a reporting entity. In both there is some embedded derivative. Means from ABG it is a purchase of solar panel. From ANA this is sale of what? Solar panel. So in both books there is some what? Embedded derivative. What is the host contract here? First we need to find out host contract. The first what they have given, check karenge. They have given some more information. What is the contract date? It is 1st Jan 2001. Correct. Then they have given, you can see, spot rate on 1st Jan 2001 is INR 60. They have given spot rate 60. Understood? 6 month forward rate is what? 65. So in this case, forward rate is what? 65. And spot rate on 30th June 66. There is no reporting date. There may be some reporting date also in between this. Correct? In this question, there is no reporting date. So can I say on this date, so spot rate is 66 and forward rate will be also 66. I've already said. Correct. Now, so what they say, there are two contracts. One is host contract. Host contract to purchase what? To purchase solar panel at what? Can I say at Indian currency only? This is a host contract. Means US dollar to embedded to earn some speculative profit. Are you getting? So in rupees only. In rupees means at future rate because this transaction will settle in future. So right now we'll take 60 or 65. You only say 65. It means it is $50 million into what? 65. So this is the host contract. 50 into 65 how much? Rupees 3250 million. Have you understood? This is the host contract. And there is one derivative contract also. Just try to understand. When we have entered into purchase solar panel, means we will pay what? Dollar. We'll pay dollar and we receive what? Solar panel. So pay dollar means what? We are selling dollar. It means we have entered into forward contract to sell dollar. Forward contract to sell dollar, na? It means we have entered into a forward contract to sell or buy. To sell how many US dollar? 50 million US dollar at what? 65 at 65. These are the two contracts. So this need to be separated or not? This need to be separated. Correct. Are you getting what I'm saying? Are bola re? Means what will be journal entry? But on 1-1 what journal entry? Can I say no journal entry? Because this is an executory contract and this is a forward contract. For forward contract you have not paid any consideration. Now there is no reporting date. Do you want me to give one reporting date also? Let us assume 31st March. Let us assume 31st March. Let us assume. Because they have not given. So I need to give you one forward date यहाँ पर भी. I am assuming you don't change in exam. Correct. And let us assume it become what? 64. Let us assume. Correct. Let us assume they have given forward rate on 31st March. So you have entered into a forward contract to sell at 65. Now it becomes 64. But it is favorable, unfavorable. Forward contract to sell US dollar at 65. Now it becomes 64. Favorable, unfavorable. Favorable. It is favorable. Means, can I say right now the fair value will be what? 65 minus 64. Correct now. Into what? 50 US dollar. So what journal entry will do? On 31st March 2001, derivative financial asset account debit to fair value gain transfer to PL. It will be 50 US dollar multiplied by 1, that is 50. Have you understood? Correct. Now let us come to settlement date. Are you able to understand what I am saying? Now 65 becomes 66. Favorable, unfavorable? Now it become unfavorable. So what is the fair value? Fair value become what? 50 into 1, but negative. This is negative now. Because it is liability, obligation to pay. It is unfavorable now. So now it become what? Derivative financial liability, and the fair value is 50 into 1. So you can see our asset become liability. So you can see there was a 50 positive. Now it become 50 negative. So ultimately there is a loss of what? 100. So what journal entry you will do? Journal entry on 30th June 2001, fair value loss account debit to derivative financial asset 50 to derivative financial liability 50, 100. Have you understood this? Everyone, live classes, are you able to follow me? Live classes, are you able to follow me? Correct. Now can I say actually we'll purchase solar panel? So we'll purchase solar panel. Let us assume it is inventory. We'll purchase solar panel. Inventory account debit to bank. Correct. Understood. So this will be purchased at 50 million into spot rate. What is spot rate? 66. How much? 3,300. Correct. Understood. And we have a derivative financial liability. This you can say this is what? Payable. Payable. Understood. And we have what? A derivative financial liability. So yes, this derivative financial liability will be transferred to payable only, because that is also payable. So what we'll do? We'll close derivative financial liability and that will be transferred to payable. Payable will increase. It will increase by 100. Understood? Means ultimately what is your payable now? It is 3,400. Bolo yes or no? Liability is what? 50. Oh, sorry. Liability is 50 na. My mistake. Liability is 50. So it become what? 3350. Are you able to understand this entire thing? Something. 1 minute. Sorry, sorry. Can I say this will first do journal entry? This what? This is payable now, right now not paid. So what was our host contract? To purchase a what? 3250 na? 3250. This was our host contract na? To purchase at 3250. You will do 3250. Correct. Now ultimately payable become what? 3250 plus 50 how much? 3250 plus 50 is equal to what? 3300, which is nothing but what? Which is nothing 50 into 60. Understood? Have you understood this point? Correct. Means by taking a forward rate on reporting date, I have just spent the questions. But you don't enter that rate by your own in exam. It was a simple question. I make it thoda interesting. Got it? Have you understood this point? Correct. So this question can be also asked because this question is given in ICAI study material but till now not asked. Means actually they are not asking good question. From financial instrument actually they are asking only amortized cost. Till now whatever question they have asked either compound finance instrument or amortized cost for financial asset, or they have asked what modification question for financial liability. They have not asked any question on impairment. They have not asked any question on derivative instrument. Derivative instrument, I think not asked. Hedging they have not asked. Embedded derivative they have not asked. These are, I will say, more conceptual point na. They are not asking that. If they start asking that, it means they want to kill you. Means till now they are not killing you in exam because they are asking very initial questions. These are the questions which are done at the end of the chapter. Understood? Yes, sir. But what I will say, all these questions are very simple once you read it. So this topic also done. Correct. This executive contract you can read by your own. It is theoretical point. Now let us come to this one more point. Instrument that will or may be settled in entity's own instrument. Default definition. Means I have left one definition point initially. So I am discussing that. Because if I will not discuss this point, so can a definition remain incomplete? Definition remain incomplete. Correct now. So what they want to say? If we have now understood there are two type of contract, non-derivative, derivative. Correct. So whenever a transaction which may be settled in entity's own equity instrument, when the transactions are settled in entity's own equity instrument, we suppose I have issued convertible debentures. It will be settled by allotment of equity shares. It means it is settled in terms of equity shares, entity's own equity shares. Then whether it will be financial asset or financial liability or equity, that we need to understand. Means whenever transactions are settled in cash, then for me it is financial liability, for you it is what? Financial asset. Whenever the transactions are settled in any other financial asset, then also for me it will be what? Financial liability, for you it will be what? Financial asset. But when the transactions are settled in entity's own equity shares, then doubt will come. However, in your book, it will be always financial asset. Doubt will come in my book only. Means doubt will come in the books of issuer. Doubt will come whenever there is a financial liability equity instrument. In the books of holder, it will be always financial asset. So doubt is not in your books, doubt will be in my books now. Correct. So what they want to say, I'll just give you very the brief description. You suppose convertible debentures. So it can be settled in cash, then the financial liability, or it can be settled in the equity shares. So what they said, if the number of equity shares are fixed, or it can be variable also. Number of equity shares may be fixed, or number of equity shares may be variable. Are you able to understand what I am saying? Have you understood? Have you understood? So whenever fixed, it will be equity. Whenever variable, it will be financial liability. Correct? Are you getting what I am saying? Means suppose the debenture is 10 lakh and we said it will be converted into 1 lakh equity shares of rupees 10 each. It is fixed. And can I say whenever fixed number of equity shares, it means can I say holder are exposed to gain or loss? If the market price increase or market price decrease, the holders are exposed to gain or loss. And if holders are exposed to gain or loss, they are participating in residual interest of the entity. It means it become equity holder. But when I am saying variable and I say it will issue equity shares, but based on the market price on the date of settlement, based on the market price on the date of settlement. So right now it is variable. We don't know what will be the market price on the date of settlement. Suppose the market price on settlement become 5. Suppose it become 10. Suppose it become 25. So can I say this is variable? And can I say in any case the holder is not exposed to gain or loss because they are getting equivalent number of equity shares. It become 5. So 10 lakh divided by 5. It become 10. So 10 lakh divided by 10. It become 25. So 10 lakh divided by 25. But the fair value remains same. The fair value of entire equity shares remain 10 lakh only. It means they are not exposed to gain or loss. If they are not exposed to gain or loss, you are not equity. You are what? Liability only. Means it is as simple as we are paying in terms of cash. Means we are paying in terms of equity shares worth rupees 10 lakh. So it will be initially classified as what? Financial liability. Initial classification. Initial classification means when we are saying contractual cash flow, in contractual cash flow will take what? Principal amount as liability when we are splitting it. So if it is fixed number of equity shares, it will be always what? Equity. Means from examination point of view. Now, suppose there is a convertible or compound financial instrument. So there are two components. One is interest component, one is principal component. When I am saying interest or dividend, so can I say if there is an obligation to pay, so it will be liability. If there is no obligation to pay, means it is at the discretion of what? Entity. Then what? Then it is not financial liability. Means don't consider in contractual cash outflow. Are you able to understand? I am saying not a financial liability. There is no obligation to pay na. So it means it will not be included in that contractual cash outflow. When I am saying principal amount, first it is compulsory. Compulsory convertible. Okay. Compulsory convertible. But it is fixed number of equity shares. Then it will be equity. Means it is not a financial liability. But if it is variable number of equity shares, it will be considered as what? Financial liability. This type of question till now not asked. Compulsory convertible, but with variable number of equities here, this type of question has not been asked. Believe me, this question will come, everyone will do mistake. Because now, rectification we have done, a compulsory means what? Principal will be 0. Means till now, whatever question we have done, that was compulsory, but with fixed number of equity shares. And therefore, we have taken principal amount 0 to find out contracts or cash outflow. But suppose in exam now they have become compulsory, but convertible into variable number of equity shares, it is financial liability. Believe me, this question if they will ask, everyone will do wrong. Everyone. Because we do rectification. Compulsory, principal account 0. Optionally, principal account will take. We do like this now. Are you able to understand this point? Now, you will say, this point you will say, if you can say this point now, it means you have understood till now. If you can say this point optionally, an option is with the holder. In exam, if question is silent, always will assume it is optional and option is with the holder. Bata. If fixed, if you can say me this point, means till now whatever we have done, you have understood. Believe me, after this discussion now, it become doubtful. Means when I discuss definition, the doubt will come. Optionally, but with fixed number of equity shares, बताओ, liability or equity? Huh? Means you have understood. Optionally, so always initial classification will what? Always financial liability. Optionally, so always it will be financial liability, and we have done that only. Optionally with fixed number of equity share, we have done what? Financial liability. But sometime what happened if you have done this discussion, fixed number equity share, now it's अच्छा equity है. Are you getting what I am saying? Optionally it will be always financial liability. I think this picture is giving more clarity. This picture is giving more clarity. Understood? Have you understood? Correct. Means what they want to say. Now whatever I will say you will understand. It is a non-derivative contract for which entity is or may. Is means compulsory, may means what? Optionally. Entity is or may be obliged to receive variable number of entities or equity instrument. If they are receiving, it is a financial asset. Anything receivable is what? Financial asset. Means the contract will be settled by receiving their own equity shares. Means they will receive their own equity shares. Suppose we have sold land to you. So I will receive cash, that is my financial asset. Or I will receive any other financial asset from you, that is also my financial asset. But if I will receive my own equity instrument from you, means you are my equity shareholders, means the settlement is done in own equity instrument. This become buyback na. This type of transaction is practically not possible in India due to Companies Act. But I am not teaching you Companies Act, huh? But internationally this transaction is possible. Correct. Suppose this transaction is settled by receipt of what? Either fixed or variable. In my books it is always financial asset. Anything receivable is what? Financial asset. Whether it is receivable in fixed number of equity shares or variable number of equity shares. Are you getting what I am saying? Then which what they said? It is a non-derivative contract for which entity is or may be obliged to deliver. Because now we are delivering. There is an obligation to pay. Deliver a variable number of entities on equity instrument, but now it will be classified as what? To deliver variable number of entities on equity shares. So it is what? Financial liability. That is only given. It is a non-derivative contract for which entity is or may be obliged to receive a fixed number of entities on equity instrument. Receivable is always what? Financial asset. But to deliver a fixed number of entities on equity instrument, classified as equity but compulsory. It should be compulsory, not optional. Understood? Correct. Now it may be a derivative contract also. Derivative contract. Are you getting what I am saying? Derivative contract means suppose we have entered into a derivative contract to buy our own equity instrument. We have entered into forward contract to sell or buy our own entity's own equity instrument. Are you getting what I am saying? Then what will be done? So it is a derivative contract that will or may be settled for a fixed number of entities or equity instrument other than by exchange of fixed amount of cash or other financial asset. Means what they are saying, in this case exercise price is variable in simple word. For example, ESOP we have done. ESOP we have done now. ESOP. ESOP maybe ESOP was also option. Option means derivative only, but that is accounted under Ind AS 102. In ESOP, what we have done? We have done one contract to allot a fixed number of entities or equity instrument at a fixed exercise price. It means fixed and fixed exercise price. Whenever number of equity shares is also fixed and the consideration is also fixed, it is always equity, and therefore we have opened what? SBP reserve account. But what they are saying, if suppose it is derivative contract that will be settled for a fixed number of entities own equity instrument other than by exchange of other than by exchange of fixed amount of cash, means can I say it will be means equity shares will be issued in variable consideration, means exercise price is not fixed. If exercise price is not fixed, if it is variable, it become what? Financial liability. But if it is what? Fixed amount of cash, or it will be always equity instrument. Means what is the conclusion? Conclusion is this for the definition. Conclusion is this: if the consideration is fixed, if the consideration is fixed and number of entities own equity instrument will be also fixed, it is always equity. Otherwise, if any component is what? Variable, yeah, both component are variable, it will be always financial liability. Check kar lo. Means we call it fixed to fixed test. We call it what? Fixed to fixed test. If F to F test is satisfied, equity. Otherwise, it is what? Financial liability. Means what you need to find out? Consideration and number of equity shares. If both are fixed, it is equity. If both are not fixed, then what? Either one is not fixed, then it is what? Financial liability. I hope this you have understood. Correct? Detailed discussion is given. You can read it. Everything is done. You can see these all are point, which is what now the other point. This option to settle, I have already done this point. Optionally convertible. These all points I have already done. Okay. Now come to one point, financial guarantee, because from this also one question has been given. Financial guarantee means initially there was no question, so I used to say it is not expected, but now it becomes super expected. Financial guarantee means what is the topic? Topic is what? Let us understand. Financial guarantee. We suppose A limited, B limited, and bank. Bank has given loan to what? B limited, and A has given guarantee to bank on behalf of B limited. Acha, why A will give guarantee to bank on behalf of B? Because they have some relationship now. I will not give guarantee for any unrelated party. Means there is some relationship. So in exam question, it will be always parent, it will be always subsidiary. In exam question. But it can be also associate, it can be also joint venture, it can be any. But normally we give guarantee for what? Subsidiary. We will not give guarantee for associate or joint venture. It can be given also. Huh? It can be given. Okay? Are you getting what I am saying? Are bolna re? Are you able to understand what I am saying? So in exam question, it will be always what? Parent and subsidiary. So now we need to understand what will be the accounting treatment in the books of parent and what will be the accounting treatment in the books of subsidiary. From my point of view, they will ask only in the books of parent. They will not ask in the books of subsidiary, because they have given that question only in the books of parent. Correct. Now, can I say in the books of A, it is a financial guarantee given. So there may be some obligation to pay. Normally, before Ind AS, we used to disclose it as a contingent liability. But now, they say no. Whenever guarantee is given, so nothing is free in India. Understood? Are you able to understand? It has some fair value. What is that fair value? We need to understand. What they want to say is, suppose if the guarantee was not given. My question to you all, suppose the market rate of interest for the loan is 10%. My question to you all, why the guarantee was required? Because subsidiary company was having some risk. So my question to you all, if guarantee was not given, then what will be the interest rate? Yes, it will be more than 10%. So if guarantee was not given, the rate of interest would have been 13%. But because guarantee was given, the rate of interest become what? 10%. Means what is the benefit here? 3%. So this 3%, whatever is saved by what? Subsidiary company, became what? Fair value of guarantee. This become fair value of guarantee. Understood? Means what India says that this guarantee will be recognized as a financial liability in the books of parent company. Who has given guarantee? You will say to financial liability at fair value of guarantee. Now you have understood how to calculate fair value of guarantee. 3% you can find out contractual cash outflow at a rate of 3% of interest. Present value you are expert. That become what? Fair value. That we can calculate. अरे बोलना रे. You can calculate fair value of guarantee or not. So what account will be debited? Can you say normally there is nothing receivable from subsidiary company? If something is receivable, then write on receivable account debit to financial liability, but nothing is receivable. Okay, it is one type of permanent investment. We will do investment account debit to what? Financial liability. This is the only one journal entry. Or baki. Life is not so simple. Life is not so simple, na? Huh? But can you see this first journal entry? If you are doing, you are getting out of 8 marks, 4 marks you are getting, because you need to calculate this also now. Correct. Now, suppose the guarantee was given for 3 years. So can we need to do subsequent accounting of this financial liability? Subsequent accounting for this financial liability. So what is the subsequent measurement that we need to understand? That is thoda sa interesting. Are you able to understand? Acha, my question to you all, obligation will, let's just try to understand. The fair value of guarantee, this, the fair value of guarantee, this will increase or decrease? When it will increase? My question to you, this obligation, this is fair value. So the liability amount will increase or decrease? When it can increase? You only say. If there is some default, means can I say if the credit risk of this person is high, if they are making default, so obligation should increase. But if they are good, so obligation will what? Decrease. Are you able to understand what I am saying? To what they want to say, let us read. Let us read. Accounting treatment in the books of issuer of guarantee. Initial recognition. Issuer will recognize the financial guarantee contract as financial liability initially at fair value in its separate financial statement. Of course, we are doing in separate financial statement because in consolidated financial statement, kata kata, everything will be cancelled. Everything will be cancelled now. In CFS, the entire transaction will be eliminated. Understood? Yes, sir. So, journal entry, I hope you have understood. Investment to financial guarantee obligation means financial liability. The fair value of guarantee will be the present value of difference between the net contractual cash flow required under the loan and the net contractual cash flow that would have been required without guarantee. This point have you understood? Subsequent recognition, this we need to understand. Subsequently, at the end of reporting period, the financial guarantee is measured at a higher of amount of loss allowance is impairment loss. Amount of loss allowance. Can I say amount of loss allowance will increase if that person is what? Doubtful. And the amount initially recognized less cumulative amortization with appropriate where appropriate. Sorry. The amount initially recognized less cumulative amortization where, means in simple word, I will say amortized cost of that financial liability. In simple word. Can I take one question to explain this? Because without question you will not be able to understand. Can we take one question? The question whatever is given in ICAI study material. One question, if they will ask this question only. Correct now? Let us come to that question. This 68. You can see this question was given in which RTP? RTP of May and MTP of November. So it has been given in RTP as well as MTP. Are you getting what I am saying? So RTP of May 2021, then they have given in MTP of November 2021. So after 21, what came 22? So now they will ask in exam. So I will write on exam November 2022. That is coming now. There is always a trend. आप समझो ना, what ICAI is very good. मतलब ठीक है, I can understand. There are some fault is coming that examination paper are not checked properly. But मेरी बात समझो. What I want to say, examination paper are not checked properly. I can understand. There is one factor. I am with the student only. Why examination paper will not be checked properly? That is one factor. So ठीक है, उसको हटा दो. Let us delete that. But whatever is a trend, if you see the question paper, any new question, first they will give an article. If it is very difficult question, then they will give an MTP. Means they are warning you. This is a warning. First in RTP, that is very good question. Then they will give an MTP, and then if in exam, they will never ask. But if they want to ask, so they have given two warning now. Now if you are not reading that, it is your mistake. Normally this type of question they don't ask. What I have seen. But if they are asking, then also they have already informed you now. Bole yes or no? They have already informed you. Believe me, out of this, I think 6 exam has been conducted in new syllabus. 6 to 7, 6 I think. In that 6 exam, out of only one, leaving one exam of Jain 2021 attempt. Jan 2021, you know, 2 exam was conducted. One was November 20 and then Jan 2021. Apart from Jan 21 exam, whatever exam was conducted, I will say 100% questions were from ICAI study material. Or let us take 90% questions were from ICAI study material. Dot to dot. ICAI means either study material or RTP or MTP. So what is wrong in this? They are with you only ना. उसको छोड़ दो. Checking part छोड़ो. Let us leave checking part. Means if they are giving question from ICAI study material, RTP, MTP, I don't know about other subject. One thing, out of 8 subject now, one paper will be complicated. That paper, I don't know which one will be that paper, but 7 paper now, they will ask direct questions. So what is wrong in this? Anything wrong? अरे बोलना रही. Believe me, at CA final level, from my point of view, every question should be out of book. What do you think? If you are not a CA student, you will say yes, sir. Once you become chartered accountant, now you will say yes, sir, it should be out of book. Because testing will be done then only, na? Who should become, who should not become. But they are not asking. They are asking directly question from what? ICAI study material. They should, of course, think about how to check the paper. Checking is not correct. There are many students who fail because of wrong checking. That is true. The fact is true. But this process is coming from the beginning. When I have given the exam, same system was prevailing. That time the worst situation was there. That time we were not being given a right to ask solution sheet. This paper check, we have failed. We don't know why we have failed. That was better only. Correct now? But now the system has been, many things has been developed, but they are improving. They are improving themselves. इसी सिस्टम को डेवलप करने के लिए थोड़ा टाइम लगता है. अंडरस्टूड? करेक्ट ना? बट इफ यू लीव दैट पार्ट, I will say question paper is not so much complicated if you study. Because if they are asking question from ICAI study material, RTP, MTP, means they want that you should pass. Bolna yes or no? Correct? So only we need to study. And if you are not studying from conceptual point of view and we are doing mistake in exam in the same question, then it is our mistake only. Correct? Okay. Now let us come to this question. On 1st April 2001, Sun Limited guarantee at rupees 10 lakh loan of subsidiary Moon Limited, which bank STDK has provided to Moon Limited for 3 years at 8%. Interest payment are made at the end of each year and principal is repaid at the end of loan term. If the Sun Limited has not issued a guarantee, bank would have charged an interest of 11%. Difference is what? 3% now. Sun Limited does not charge Moon Limited for providing guarantee. Means no consideration was receivable from subsidiary company. On 31st March 2002, there is 1% probability that Moon Limited may default on the loan in the next 12 months. Means 12-month ECL, and a 12-month ECL is given. And what is the probability? Default probability 1%. We need to find out ECL multiplied by 1%. That become what? The amount of loss allowance. If Moon Limited default on the loan, Sun Limited does not expect to recover any amount from Moon Limited. Means that no amount is recoverable from Moon Limited. On 31st March, there is a 3% probability that Moon Limited may default on the loan in the next 12 months. If the Moon Limited default, nothing was recoverable. Provide the accounting treatment. Have you understood? Now, first we'll find out the fair value of guarantee. So fair value guarantee, first we'll find out the contractual cash flow at what rate? 11%. The first year interest will be 1,10,000, 1,10,000, 1,10,000. This is the interest that would have been charged without guarantee. But what is the interest current rate? I mean, 8%. It becomes 80, 80, 80, 80, 80, 80. So we can find a difference 30, 30, 30. So my question to you, what is the market rate of interest? 8% ki 11%? 11%. Very good. But if you have taken 8%, no, that is not correct. So can I say we'll do discounting at what? 11%? 11%. This is what? Interest rate differential. And this become total. This become fair value of guarantee. What first journal entry will do? Investment account debit to? Investment account debit to? First journal entry is what? Investment account debit to? Financial liability. Now, let us calculate the amortized cost. Now I am coming to subsequent accounting that I will do. But our amortized cost, how we will calculate? Year end 1, 2, 3. What is the fair value of guarantee? It is 73,000. Can you give me interest at a rate of 11%? 73,320. Is 8065. And what was the differential? 30,000. So that can I say that become benefit. So that will be reduced. 30,000 will reduce. So this is plus, this is minus. How much it is coming? How much? 51,385. So again, this is the amortized cost of first year. Then become 51,385 plus how much? 5,652 minus 30,000. How much? 27 0 37. Then third year it is 27 0 37. This will be minus 30,000 and this will be nil. Can you give the difference? 2963. Now what they are saying, year 1, what is my subsequent value? So it will be higher of what? Higher of point number A, amortized cost 51,385. B, loss allowance. Loss allowance. Okay. Are you able to understand what I am saying? So we need to find out loss allowance. So it will be, they have given 1% probability of default. So the question I forgot. It is 1%. 1% correct. Are you getting what I'm saying? So 1% of what? Can I say? What is the amount expected to be paid? It is a loan amount, that is 10 lakh. So 1% of 10 lakh will do. That is 10,000. That is 10,000 now. Correct. We'll take higher one. What is the higher? 51,385. Understood. Means can I say subsequent measurement done at 51,385? What was my initial measurement? Initial measurement we have done at what amount? 73,320. Now it become how much? 51,385. So liability decreases. What journal entry will do? Journal entry will financial liability account debit to PL. PL. How much decreases? 21,935. Have you understood this subsequent accounting? This point have you understood? Higher of A and B? Correct. Now coming to the next year, year 2. Once again we'll do subsequent accounting. Higher of what? Point number A. What is my amortized cost now? 27,037. 27,037. And what is my probability of default? 3%. 3% of 10 lakh. 3% of 10 lakh now. This 3 lakh you understood now. If the amount is not paid, is the present value as on that date. Correct? Are you getting what I am saying? So 3% 10 lakh means 30,000. So now we'll take 30,000. So now my liability will increase. Liability will increase. So can I say now how much it will be increased? So what is my carrying amount initially? Carrying amount is 51,385. And now it become 30,000. So sorry, it will decrease only. It will decrease. So what journal entry will do? Financial liability account debit to PL by how much? 21,385. 21,385. And at the end, can I say at the end it will become 0 if the amount is paid. So automatic liability will become 0. Understood? If the amount is paid by the subsidiary company. Let's see what journal entry they have given. You can see same thing they have given. First journal entry means at year end 1 they have given 21935. How much we calculated? We have also calculated same na. 21935. Second year how much we calculate? 21385. 21385. Correct only. Same thing. Have you understood this? Have you understood? Simple accounting. If they will ask same to same question, only change in the numbers and change in the name of the company. I hope now this you have understood this point. Subsequent recognition. So what they said, subsequently at the end of reporting period, financial guarantee is measured at higher of amount of loss allowance understood and the amount initially recognized less cumulative amortization. In simple word, amortized cost, whichever is higher. Compare with the opening balance. With this balance, the difference will be what? Either gain or loss. Now, I don't know whether they will ask journal entry in the books of subsidiary company or not. But can you say what they said? For the accounting treatment in the books for whom guarantee has been issued is in the books of subsidiary company. Okay, I will explain from this point only. What is the name of subsidiary company? Subsidiary company. Can you say first journal entry will what? They have received loan. So journal entry is what? Bank account. They have received a loan of 10 lakh to financial liability 10 lakh. Understood. Financial liability 10 lakh. This journal entry they will do. Now what they are saying, In the books of subsidiary company, there can be two situations. There can be two situations. First situation, whether guarantee is the integral part of loan. A guarantee is not an integral part of loan. If the guarantee is the integral part of loan means what? If suppose bank transfer the loan amount to other party, so guarantee will be also transferred. That means guarantee is an integral part of loan. Are you able to understand what I am saying? Suppose I have given you loan. In my books, it is a financial asset. I may sell my financial asset or not. So if I transfer my financial asset, so whether guarantee will be also transferred. If it is also transferred, means it is an integral part of loan. Are you able to understand? Correct. So the situation may be two situations. V1, guarantee is an integral part of loan. If the guarantee is integral part of loan, then we will not recognize separately guarantee in the books of subsidiary company. Means this 10 lakh will be inclusive of that amount. Means there is no need to recognize guarantee received in the books of what subsidiary company. But the guarantee is not an integral part of loan. Means if I transfer the bank transfer the asset to other party, guarantee will not be transferred. Then in that case, in the books of subsidiary, guarantee received will be recognized as a separate what? Account. Means in this case, what journal entry will do? Bank account. How much? 10 lakh. To financial liability. How much? And two, can I say it will be recognized as a capital contribution from what? Parent company. What was the fair value initially? Fair value of guarantee. Fair value of guarantee re 73,320. Difference is what? 9,26,680. Correct. Now, can I say this will be major amortized cost by applying EIR? This will be also subsequently measured at amortized cost by applying EIR. But have you understood the journal entry? It depends upon whether the guarantee given is an integral part of loan or it is not an integral part of loan. Understood? You can see same thing has been given. You can read. But they have not asked about what? Books of subsidiary company in that question given. They ask you can do it. If nothing has been given, to assume if it is an integral part, this journal entry, if it is not an integral part, this journal entry. But journal entry is very simple, na? Journal entry is very simple. Understood? In both cases, the loan will be subsequently recognized, subsequently measured at amortized cost by applying EIR. We need to recompute the EIR. Recompute the EIR, na? अरे बोलना रे. Understood? Yes, sir. I hope with this all discussion done, all points cover from examination point of view. All points cover. Any question if you have in your mind, I can discuss. Do you have any questions in your mind? With this question, please discuss, sir. Follow. I'll wait for 2-3 minutes. If you have some question, in your mind, you can ask me. To live student today, I have said asked out in YouTube. Why you asking in what? WhatsApp group. I have asked you to ask out in YouTube. Then also you are asking in WhatsApp group. I'm not going through that, na? Have you understood this much? Chalo. So can I conclude that we have understood the chapter? Can we conclude that we have understood the chapter? Okay. We'll take 5-minute break. Then we'll start a new chapter. Hello. Now, can we start once again, everyone? Before break, we completed financial instrument chapter. One doubt came, so let me first complete that doubt. We shall once again repeat the subsequent accounting of this financial guarantee. So let me take that doubt first. So what we have done, that financial guarantee in the books of the entity who has given that guarantee will be at fair value of guarantee. Fair value will be the difference between what? The contractual cash outflow without guarantee and contractual cash outflow with guarantee. That fair value we can calculate. So what is the subsequent recognition will be done at the end of each year, at the end of each reporting period, which will be measured at higher of the amount of loss allowance. Amount of loss allowance, just try to understand what I am saying. Amount of loss allowance, it means what? The expected loss of other party means if he will not pay, then we need to pay now. So amount of loss allowance means simply I am saying apply the impairment loss guidelines. Means amount of loss allowance will be ECL multiplied by probability of default either in 12 month or lifetime. That 12-month and lifetime depends upon stage 1, stage 2, stage 3. However, in information in question they will inform you. I have already said they will give you the probability of default either for 12 month or for lifetime. They will not give both. So can I say ECL multiplied by probability of default become what? Amount of loss allowance. ECL means expected credit loss. So if they will default, we need to pay 10 lakh only to the what? In that question, we need to pay the amount of loan to the bank. ECL means what? 10 lakh in that question multiplied by the 1%, that is probability default given the question 10,000, or the amount initially recognized less cumulative amortization, that is nothing but amortized cost. The amortized cost we calculated as opening balance plus interest at a rate of 11% minus the differential amount of what? That interest, correct now, that is benefit of other party na, that we are providing to the other party. So that become amortized cost, that we can calculate. So amortized cost we can calculate, or loss allowance also we can calculate as per the information given the question, whichever is higher will take. So if initial liability was 70,000, suppose in our question what was the initial liability? We have recognized at what amount? Bolo. So initial liability was 72,320. Then amortized cost was 51,385. And the amount of loss allowance we calculated 10,000. We can see we'll take higher one. It will become 51,385. This subsequent measurement. Initial measurement was done at this. Now subsequent decline. Decline means it become gain. We will pass marginality financial liability account debit to what? Gain, and that gain will be transferred to PL. Same thing we'll do for second year. Understood? Now your doubt over? Have you understood this point? Now coming to the next topic. Now we'll start with what? Ind AS 116. Ind AS 116. Please. So Ind AS 116, so I hope this the chapter which is very easy from calculation point of view. Correct? From calculation point it is very easy. You may be confused with the information given the question, nothing more than that. You need to understand the information clearly, then apply it. There are some area where student do mistake. In the last attempt, one question was asked, and most of the students have done that small mistake. Are we going to, you need to be very careful about a mistake in calculation. However, in AS 116, what is lease? Lease means what? Lease is defined as a contract or a part of contract that conveys right to control. So it is either a contract or it can be a part of contract also. Understood? Means in one contract there can be two combined, means it can be, there can be two contracts. One can be lease contract, one can be non-lease contract. So it can be either contract or a part of contract that convey right to control to use an identified asset for a period of time in exchange of consideration. Means if I want to explain the definition, I need to explain you what is the right to control, what is identified asset. If you understand these two, so can I say we can understand that this contract contain a lease contract. So normally in exam they may also ask this, whether this contract contain a lease contract, but normally they don't ask what, a case study based question. If I don't know whether it is important or not important from examination point of view. But can I say, if suppose they ask this type of question, whether this contract contain a lease or not, so it means we need to understand 2 points: right to control and identified asset. So first let us concentrate on identified asset. What is identified asset? Identified asset means what? Can I say? It will be what? Either is specified in the question. Sorry. Either it will be specified in the contract. Question means contract only. Or it may be specified, means explicitly specified in the contract. Or it may be implicitly specified in the contract. So either it is explicitly specified or it might be implicitly specified at the time of the contract that asset is made available for use by the customer. Understood? Means just try to understand, we said we will provide you car after 1 year. Right now car is in the manufacture process. Right now car is not identified. But can I say once manufactured it will be provided to you. It is implicitly specified at a time that the asset is made available to use by the customer. Understood? So either explicitly specified or implicitly specified. But to become an identified asset, there is one very important point, that what they say, what they want to say, this para, on inception of contract, on inception of contract, supplier has substantive right. If supplier has substantive right to substitute the asset throughout the period of use, a customer does not have right to use an identified asset. Suppose I have taken this camera from supplier, correct, for 5 years, but supplier has a right to substitute this camera with another camera. It means this is not an identified asset, means this is not a lease contract. Understood? So supplier has which right? Substitute right, and that right should be substantive. Means supplier may have a right to substitute, but there must be some practical ability to substitute. If supplier does not have practical ability to substitute that asset, even though they have the right, then it is not known as what? Substantive substitution right. So supplier must have what? Substantive right to substitute. What is the meaning of substantive? Substantive means practical ability to substitute. There must be practical ability to substitute also. Have you understood this point? So what they want to say, if on inception of contract a supplier has substitute right and that right is substantive, correct, then customer does not have a right to use an identified asset, and therefore it is not a lease contract. Now sir, how will understand the right to substitute is substantive? What India says, if these two conditions are satisfied, then right to substitute will be substantive. First condition, the supplier has the practical ability to substitute alternative asset throughout the period of use, and the supplier would benefit economically from that substitution. Can I say the supplier will substitute only when it is economic beneficial for the supplier? Are you getting what I am saying? These two conditions satisfied, then that right to substitute becomes substantive. Means if they have substantive, if suppose they have a right to substitute, but it is not substantive, then it is a lease contract. But if the right to substitute is substantive, then it is not a उल्टा बोल दिया. Means what I want to say, everyone. What I want to say. You first find out whether the supplier has a right to substitute. So that you can find out through contract only. Means from the information given the question. Then find out whether it is substantive. Substantive, yes. Then contract contain a these. If it is not substantive, then what? The contract does not contain a these. Understood? Correct. Now, so how will understand it is substantive? Batao. When two conditions are satisfied. What are the two conditions? The supplier has a practical ability to substitute, and the supplier would economically benefit from the right of substitution. Correct. Now, can you see that identified asset must be physically distinct asset, means it should be independent from other asset. So it should be physically distinct asset, physically independent asset from other asset. Correct. So it must be physically distinct asset. The physically distinct asset may be either entire asset or a portion of asset. We suppose this is one building having two floors. So I may give this portion on lease. So this may be a part of entire asset but physically distinct. It is physically distinct now. So it should be physically distinct from other asset. Then only it will be what? Identified asset. Identified asset you have understood. Now let us understand what is right to control. So right to control, what they said, two conditions need to be satisfied for right to control. First, right to obtain substantially all the economic benefit from the use of identified asset. So right to control means what? The customer has a right to obtain substantially all the economic benefit from the use of that identified asset, and right to direct the use of identified asset. So if I am able to direct the use, then it is under my control. If I am not able to direct the use, we can get the economic benefit from that asset, but I am not able to direct the use, it means it is not under my control. It is not under my control. For example, this mobile I have given to you for 2 days. So you can use it, you can derive economic benefit for 2 days, but I will say use it only as per my requirement, is as per my terms and conditions. It means you cannot direct the use, so it is not a lease contract. So both conditions need to be satisfied for right to control. First is what? Right to obtain substantially all the economic benefit from the use of such identified asset, and second, right to direct the use of identified asset. If first condition is understood, right to obtain substantially all the economic benefit, the second condition we need to understand. So how will understand is the right to direct the use of identified asset. So right to direct means what? What they say, what they want to say. The right to direct means the customer must have a right to direct, must have a right to direct how and for what purpose the asset is used. Means what they want to say, customer has a right to direct the use of identified asset whenever it has a right to direct how and for what purpose the asset will be used. Means customer has a right to direct how and for what purpose the asset will be used. Means I can use it for my purpose, for any purpose. Correct? How? In any form. Correct. Now, for example, I have taken this camera, so I can fix it anywhere, and I can use this camera for my class recording, for recording of my wedding also. It is already done. Correct. Wedding, my wedding, not any other wedding or any other celebration. But suppose there is a restriction that you can use only for class purpose. It means that is not within us. So right to direct means what? Right to direct how and for what purpose the asset will be used. Understood? So if I will say thoda sa understanding, right to direct how and for what purpose the asset will be used. Are you able to understand what I have given? We need to find out this. If this right is with customer, no, first write down. This right is not predetermined, or that this right is predetermined. The right is not predetermined and the right is with customer. It means condition is satisfied. If this right is with whom? Supplier, means condition is not satisfied. Understood what I am saying? Simple. But sometimes what happens under the contract, this right to direct how and for what purpose the asset will be used is predetermined. Means suppose I have taken one camera, under the contract written that it can be used only for class purpose and only in the morning 3 hours. Now the question is that the right is predetermined. So whether it will contain a lease contract or not, that we need to understand. So what India says that in this case, if the right is already predetermined, if the such right is predetermined, and if this any one of these conditions satisfied, it means it contains a lease contract. First condition is what? The right customer has the right to operate the asset or direct other to operate the asset. Means customer has the right to operate the asset or direct other person to operate the asset. That right is with whom? Customer. Or the customer designed the asset. Customer has designed the asset. It means the right to direct is with whom? Customer only. Means what they want to say in this case, we need to find out two conditions. One or two. First condition, customer has right to operate. Second condition, customer has what? Customer has designed the asset. Design the asset. If any one condition is satisfied, it means customer has a right to direct the asset. Understood? Have you understood? Now, to conclude the entire discussion, whenever questions come, always apply this flow chart. First, ask whether there is any identified asset. If yes, then go to second condition. If no, then it does not contain a these. If yes, then ask one more question. Does the customer have a right to obtain substantially all the economic benefit from the use? If no, then it does not contain a these. If yes, then ask one more question. Does the customer has the right to direct how and for the what purpose the asset will be used? The customer has such right, then it contain a lease. If the customer does not contain such right, then it does not contain lease, but it may be predetermined also. If it is predetermined, then whether the customer operate the asset or design the asset, if yes, it contain a lease. If no, then it does not contain a lease. This is the flowchart. From this flowchart, I think more understanding will come. Have you understood? Have you understood this point? Correct. So they may ask this type of question. I don't know whether they will ask or not, but if they ask, you should be able to write down. Correct. Now coming to the second topic. Have you understood when a contract contains a lease contract? Right. Now come to second point. Second point is what? Separation of lease and non-lease component. So already we have said that in one contract there can be lease or non-lease component. For example, you have taken a building on lease, and with building on lease, you are also receiving some maintenance and security services also. So maintenance security services is non-lease contract, and you are using that building, that is lease contract, but you are paying some consideration. So how to allocate that consideration in these two parts? So what they are saying, whenever there are some lease component and non-lease component, correct, we need to separate it, and that will be separated based on the standalone selling price of lease and non-lease component. What is the meaning of standalone selling price? Standalone selling price is that if that component was sold separately, what would have been the price? Correct. Means just try to understand it. Suppose lease, contract, and non-lease component. Correct. Now, standalone selling price will be given the question. So it is given if you take only lease, the payment would be 1 lakh. And for non-lease component, the payment would be 20,000. This becomes standalone selling price. It become 1,20,000. Correct. Now, lease payment as decided is suppose 1 lakh. This 1 lakh will be allocated in this ratio. This 1 lakh will be allocated in this ratio. After allocation, to this part will apply Ind AS 116. To this part will apply respective Ind AS. Respective Ind AS. Understood? Respective Ind AS means in the books of supplier, it can be Ind AS 115. Correct, because that is non-lease. If someone is providing services, so for that services we need to apply Ind AS 115 na. Correct. Same separation means in both books, lesser and lessee. The rules of separation remain same. Have you understood this point? So they may give you some lease component and non-lease component. They will give you the standalone selling prices. Allocate the lease payment is consideration whatever is given the contract in the ratio of standalone selling prices. On lease component apply Ind AS 116. On non-lease component apply respective Ind AS. This much you understood? This much. Now, sometime what happens, just try to understand this standalone selling price can be estimated by supplier or customer. Can you see it can be estimated only by supplier? Means supplier means lesser, supply customer means lessee. Means can I say if I am saying estimate standalone selling price, whether customer can estimate it? No. How customer can understand a standalone selling price? Customer or buyer na. Selling price will be determined by whom? For example, I purchase this camera. Correct now. So I purchase this camera. Who will estimate selling price? Seller now. So if I say estimate standalone selling price, who can estimate it? Supplier. Means there is some practical difficulty in the books of. Not able to understand. 1 second. First please concentrate. You are not concentrating. इधर उधर देखोगे तो कुछ नहीं समझ में आएगा. Concentrate. What topic we are doing? Have you understood? Separation of lease component with non-lease component. So they will give you some lease payment. This lease payment will be allocated to lease component, non-lease component in the ratio of standalone selling prices. Of course, in exam, what they will provide? Standalone selling price will be provided. But practically, we need to estimate it now. Who can estimate it? Supplier or customer? Supplier can estimate. So can I say in the books of supplier, we can easily allocate. But can I say from customer point of view, we can estimate only when the information is provided by supplier. But supplier may not provide it. Why supplier will provide? Means there is some practical difficulty in the books of customer. Therefore, some relaxation has been given that in the books of customer, means in the books of lessee, they may opt not to separate it. They may opt not to separate it, and they can apply Ind AS 116 on entire amount. Understood what I am saying? Due to that practical difficulty. Correct also? Correct. Now, how can we estimate standalone selling price? Understood this point? So what they are saying? The non-lease component are identified and accounted for separately from the lease component in accordance with other standard. Correct. The consideration will be allocated to lease and non-lease component on a relative standalone selling price basis. Understood. Correct. Now, one more point. Can you see it is quite possible if one contract can have multiple asset, asset 1, asset 2, means 2 asset has been taken on lease. Now the question is that should we separate this also? Should we separate means asset 1 will we apply Ind AS 116 separately and asset 2 will apply Ind AS 116 separately, or we should apply Ind AS 116 on combined basis? One doubt will come. Suppose I have taken camera and I have taken building on lease from same supplier. Quite possible. Building and camera from one supplier. So should we apply Ind AS 116 separately or should we apply Ind AS 116 on the combined asset? One doubt will come. So what they said, any contract may have multiple asset. Correct. So what they said, right to use each multiple asset is considered as a separate lease. Means it will be accounted separately if these two conditions are satisfied. Understood? Means apply Ind AS 116 on camera separately and building separately. If these two conditions are satisfied, these two conditions are very easy. What they say, the lessee can benefit from the use of asset either on its own or together with other resources that are readily available to the lessee, and underlying assets are neither highly dependent nor highly interrelated to each other. Now you only say this camera I can use separately without building I can use separately without camera with other readily available resources, and they are not interrelated, they are not interdependent, therefore they should be separately accounted. But if I can't use camera without building, suppose this camera is fixed in the building only, it means can I say this camera I can't use without building? It is quite possible that this camera is fixed in the building only. अरे बोलना रे. So it means I can't use the camera without building and building without camera, and they are interrelated. If these two conditions are satisfied, then combine and apply Ind AS 116 separately. Understood? Correct. And this will be also allocated in their standalone selling prices only if we need to account separately. Now, optional exemption for using practical expedient not to separate non-lease component. So, optional exemption is given. This exemption is available for lessee or lessor. This exemption is available not to separate non-lease component. This is available to whom? Lessee or lessor? Lessee, not to lessor. Means lessor need to always separate because they can estimate what? Standalone selling price. But this exemption is available. This exemption is available only to lessee. They can opt for this exemption or they may not opt for this exemption. This is optional exemption. Not to separate what? Lease component with non-lease component. This exemption is not for multiple assets. Multiple assets need to be separated if that two conditions are satisfied. Are you getting? This option is available only to separate what? Only not to separate what? Lease with non-lease component. Understood? So such practical expedient is not permissible for lessor. The practical expedient does not allow lessee to account for multiple lease component as a single lease component if it meet the condition provided above. Understood this point? Correct? Yes, sir. Now coming to the key concept. You know lessee, you know lessor. You know inception of lease, you know commencement of lease. Do you know inception of lease and commencement of lease? Inception of lease means what? Simple, agreement date. Date of agreement is what? Inception of lease. Commencement of lease means when the asset will be available for use. It's quite possible we have done contract today, but the asset will be available after 1 year. My question to you, accounting should be done on inception of lease or commencement date. Agreement we have done today. Agreement we have done today, but the asset will be available after 1 year to the customer. So accounting we should start from inception date or commencement date. Commencement date means inception date we don't do any accounting. Accounting will start, lease accounting will start from which date? Commencement date. So what is the meaning of commencement date? Commencement date is defined as a date when the lessor makes an underlying asset available for use by the lessee. When it is available for use. When it is available for use. Correct? Understood? Means just try to understand. Suppose everyone. This is the date of agreement. This is the date when the asset is available for use. This is agreement date. But lease payment will start from this date. Suppose this is 2 months. This is 2 months. And this is what? The payment will be done for 10 years. Understood? Means can I say for 2 months there was no payment? This is known as rent-free period. This is known as rent-free period. Are you able to understand? My question to you all, we should recognize account means we should start accounting from which date? From point A, from point B, or from point C? Huh? From commencement date. This is the commencement date, so we should start accounting from this date only. Understood? Have you understood this point? Correct. This is given, you can read. Chalega. Underlying asset, ROU asset. Underlying asset we use from lesser point of view. ROU asset we use from lessee point of view. But ROU asset is nothing but right to use that underlying asset, but for a defined period. For a defined period. Now let us come to lease term. What is the meaning of lease term? For doing accounting, we need to understand what is the lease term. So lease term means what? Non-cancelable period. Non-cancelable period. Non-cancelable period is that period which can be cancelled upon payment of penalty. Means non-cancelable period can be also cancelled, but which can be cancelled only upon payment of penalty. So non-cancelable period plus period covered by an option to extend the lease means plus any renewal period. Plus any renewal period. अरे बोलना रे. Period covered by an option to extend means there is an option given to extend means plus renewal period if lessee is reasonably certain to exercise that option. Means under that contract one option has been given that you can extend for 5 years. So suppose this is what 3 years and we have an option to extend it for 5 years. Now the question arises, lease term is 3 years or 8 years? So it will be 3 years if the lessee is not reasonably certain to exercise that option. It will be 8 years if the lessee is reasonably certain to exercise that option on inception of contract. Understood? Plus period covered by an option to terminate the lease if the lessee is reasonably certain not to terminate that contract. Understood now? So plus period covered by an option to terminate the lease means just try to understand. Suppose the lease period is of what? 10 years. But after 3 years we can terminate. Option has been given. So this 3 year, so non-cancelable period. Now the question is the 7 year we will add or we should not add. So if the lessee is reasonably certain not to terminate, then we'll add. If lessee is reasonably certain that they will terminate, then we'll not add. Then our lease term will be only 3 years. Understood? I hope you have understood this. Correct. So first we need to find out lease term. Can I say entire accounting depends upon lease term? Lease term. Now coming to lease payment. Lease payment. Lease payment. In a simple word, lease payment means what? Payment to lessor by lessee for use of asset. For use of asset. So it will include any fixed payment. Correct. Including in substance fixed payment. Fixed payment, I think no definition required. In substance fixed payment means what? Which have some variable component but are in substance fixed. Means they are not, means we can say that payment is unavoidable. The payment is unavoidable. It has some variable element, but it is unavoidable. So can I say if it is unavoidable, it is in substance fixed only. Correct. For example, if I say in this way, you need to pay 2000 per month. You need to pay 2000 per month if you use the asset. Correct. You need to pay 2000 per month if you use the asset. You will use only na. Why you have taken? For use only. So can I say it is in substance fixed only. Or if I say in this way, you need to pay 2000 if you use, and if you don't use, you need to pay 1000. So 1000 is fixed only. 1000 is fixed only now. So that is in substance fixed payment. Second, it will also include variable lease payment that depend upon index or rate. So variable lease, it also includes some variable lease payment which are dependent on index or rate. Can I say due to inflation, it may increase also. So if that variable payment depends upon some index or some interest rate, then that will be also part of what? Lease payment, because whatever you are paying for the use of the asset. Understood? Right. It will also include any exercise price of a purchase option. Suppose one purchase option has been given at the end of lease term, you can purchase it at this price. So purchase option, so exercise price to purchase the option, exercise price for purchasing, for option to purchase will be also a part of lease payment if lessee is reasonably certain to exercise that option. Correct. So exercise price of a purchase option if the lessee is reasonably certain to exercise that option, that will be also part of lease payment. Correct. From this lease payment we'll also deduct any payment or penalty. So suppose there is any payment or penalty for terminating the contract. Understood? For terminating the contract, if lessee is reasonably certain that they will terminate the contract, so that penalty should be what? That penalty should be also added, should be also included. So any payment or penalty should be also added if lessee is reasonably certain that they may terminate the contract. Understood? Last, it will also include residual value guarantee. Residual value guarantee I will explain, but let me come to first. They have given fixed payment less any lease incentive. This I actually forgot. Fixed payment less any lease incentive. Sometime what happen? Lessor provides some incentive to lessee. Lessor provides some incentive to lessee by way of reimbursement of some cost. Okay, so whatever reimbursement done by what? Lessor to lessee should be deducted from what? Lease payment. For example, I have taken this building on lease and I have done some alteration. But I have taken this building only for 1 year. But alteration can be used by the owner after that 1 year, na? So as per the contract, whatever alteration I have done, that cost will be reimbursed by whom? Lessor. Quite possible as per the agreement, I will do alteration, but that will be reimbursed by lessor. So that reimbursement become lease incentive, and that lease incentive will be deducted from lease payment. Understood? Then coming to residual value guarantee. Residual value guarantee means what? If suppose there is no purchase option given, if there is no purchase option given, correct? Then also we may want to purchase it. If purchase option given, then we can purchase it by payment of exercise price. But suppose in that contract no purchase option is given, but I may want to purchase this, I would like to purchase it. So for that purpose, I may give a guarantee to lessor that I will purchase the asset at the end of lease term. That is known as residual value guarantee. So residual value guarantee by lessee Means from lessee and from lessor point of view may be different. Means from lessee point of view, whatever amount payable by lessee to lessor under that guarantee will be residual value guarantee. Correct? What is it? These payments include amount expected to be payable by lessee under residual value guarantee from lessee point of view. But from lessor point of view, just try to understand. From lessor point of view, okay, that guarantee can be received from lessee, or it can be received from any third party. So residual value guarantee from lessor point of view will be any amount of guarantee whichever is higher. Now means suppose guarantee given by lessee is 10,000 and guarantee given by third party is 12,000. But what is residual value guarantee from lesser point of view? Whatever higher amount, what is higher amount now? So we'll take 12,000 from lesser point of view. But from lessee point of view it will be what? 10,000. Understood? Have you understood this point? Any doubt? So can I say, can I conclude what I included? Can you repeat with me what I included? First, it will include fixed payment. Second, it will include in substance fixed payment as reduced by lease incentive. Then it will include variable lease payment that vary according to index or rate. Then it will also include purchase option price. Then it will also include payment of penalty if the lessee is reasonably certain to terminate the contract. Then it will also include residual value guarantee, but residual value guarantee by lessee and lessor may be different. Correct? Yes, sir. Then what are not included in lease payment? There are 2 points which are not included in lease payment. First, payment allocated for non-lease component. Right now we have done payment lease component, non-lease component allocation based on standalone selling prices. So any payment allocated to non-lease component will not be a part of lease payment. Second, any variable consideration that do not vary according to index or rate. Any variable payment that do not vary according to index or rate. That is not a part of what? Lease payment. That is not a part of lease payment. Understood this point? For example, just try to understand. If I say the lease payment is equal to 10,000, correct? And it will increase based on consumer purchase price index. You know, consumer purchase price index. Suppose this is 100 at Y0. So at Y0 it is 10,000. At Y1 it can be 120. Consumer price purchasing power index. Correct. Means can I say at Y1 this 10,000 will become what? 12,000. So this become variable payment which vary according to index or rate. So this will be part of what? Lease payment. But if I say in this way, if suppose you pay 10,000, correct? Understood? But if your sales increase by 20%, then you need to pay extra 2,000. Correct? So this is not increasing. This variable payment does not vary according to index or rate. This is based on what? Some performance or usage. So this is not a part of lease payment. This is not a part of lease payment because they do not vary according to index or rate. Can I say this is what higher rent charges by lesser? Because they become greedy. Because they are becoming greedy now. They are charging more than market rent. Because your sales increasing, your performance increasing, so why you are charging extra? That is my performance now. You need to charge only as per market rent. But if you are charging above that, so it is not for the use of the asset. It means the lessor is becoming greedy. So this is not a part of lease payment. So any variable payment which do not vary according to index rate will not be a part of lease payment. This type of payment will be charged to PL as an expense or credited to PL as an income in respective book as and when they are incurred or earned. Understood? So this will not be part of lease payment. Understood this point? Have you understood this point? Correct. If you have understood this, now we can come to lessee accounting and lesser accounting. Correct. Now coming to first lessee accounting. Lessee accounting. Now as per Ind AS 116, there is no need to classify the lease as operating lease and finance lease for lessee. Means for lessee there is no classification required less as operating or finance lease. Now in this there are two situations. Correct. Correct. So recognition exemption, some recognition exemption is provided to what? Lessee. Recognition exemption, or write down in this way. ऐसे मत लिखो. In the books of lessee accounting, what Ind AS 116 says that if lease is a short-term lease or lease of what? Low value asset. Understood? If the lease is a short-term lease or low value asset, then option has been given to lessee. Correct? Either they can avail recognition exemption or they may not avail recognition exemption. Option has been given. This is what other lease. Other lease means what? Which are not short-term lease or lease of low value asset. For this also recognition exemption is not available. Understood? Whenever recognition exemption is not available, it means they need to recognize ROU asset and what? Lease liability. So this journal entry we do. ROU asset account debit to lease liability. On which date? On commencement date. On commencement date. Understood? But if recognition exemption is available, then lessee will not recognize any ROU asset. They will not recognize any lease liability. Then they will recognize total lease payment. Total lease payment. Now you know what is the total lease payment? The total lease payment may consist of what? Fixed lease payment, in substance fixed lease payment, variable lease payment that vary according to index or rate. It will also include any purchase option price. It will also include any penalty. It will also include any residual value guarantee from the point of view of lessee. This total lease payment will be recognized as an expense either on SLM basis or any other appropriate method. Any other appropriate method means whatever information given in the question. However, any other appropriate method can be production unit method, means based on the expected number of unit to be produced. That can be one more method for allocation. Understood? But this PUM is not given in AS 116. I am just giving as per my experience. The other method can be production unit method. Understood? Have you understood this point? This entire discussion you understood? Have you understood? Means an option has been given when the lease is what? Short-term lease or lease of low value asset. Now what is short-term lease? What is lease of low value asset? That we need to understand. This low value is not defined under Ind AS 116. Means what is required? Judgment is required. Judgment is required whether the asset is of low value. The asset is not of a low value. Means in question they will inform you whether it is low value asset. It is not a low value asset. Short term lease has been defined. What is short term lease? You can see a short term lease is a lease that on commencement date has a lease term of 12 months or less than 12 months and does not include an option to purchase the underlying asset. Does not include an option to purchase the asset. Means if there is an option to purchase the asset, it cannot be what? It cannot be short term lease. Understood? I hope this much you have understood. Correct? Now coming to the measurement of lease liability. Look at this measurement lease liability is now we are discussing other case. Other case means what? When we are not availing recognition exemption, means we need to pass one guarantee ROU asset to lease liability. So what will be the how to measure lease liability? A lease liability will be what? Very simple. It will be what? Present value of lease payment. Present value of lease payment. Correct now. Present value of lease payment. Now you know what is lease payment. अरे बोलना रे. You know what is lease payment? Correct. Discounted by using what? Discounted by using either. They have given two discount rate. Point number A, point number B. Understood? So it is nothing but present value of lease payment discounted by using present value you are calculating on which date? On commencement date. Present value lease payment discounted by using either interest rate implicit on lease or incremental borrowing rate. Incremental borrowing rate. So two options has been given for discounting. Either interest rate implicit on lease or incremental borrowing rate. Why they have given two options? Why they have given two options? It is quite possible that interest rate implicit on lease may not be means it cannot be determined by lessee because it is calculated from lesser point of view. Means whatever is calculated from lesser point of view may not be determined by lessee. So there is one practical difficulty. So what they are saying, if you know interest rate implicit on lease, then okay. If you don't know, then use what? Lessee incremental borrowing rate, means their own incremental borrowing rate. So it can be discounted by using what? Either interest rate implicit on lease. If it cannot be determined, then what? So which one will be the first preference? Both are given. Point number A or point number B? Point number A. Understood? Yes, sir. So you have understood lease liability. Then coming to ROU asset. What will be ROU asset? ROU asset. How to measure ROU asset? तो what this is just check करेंगे. You can see the same thing written. And lessee initially measure a lease liability at present value of remaining lease payment to be made over the lease term discounted by using these two rate. The measuring of ROU asset. ROU asset will be measured what? It will be initial measurement of lease liability. Initial measurement of lease liability. Correct. Correct. Plus any payment made to the lessor before commencement date. Quite possible that some payment is already made before commencement date. It is already paid now. So if already paid, it is not a part of liability, but it will be added to ROU asset. So any payment already paid in advance before commencement date will be added to ROU asset. Less any lease incentive received from lessor. Any lease incentive will be also reduced if that is received before what? Commencement date. Correct? Understood? Then initial direct cost, any initial direct cost incurred by lessee will be added, it will be capitalized, plus present value of estimated cost for that we know na. The present value of any estimated cost of restoration, dismantling, or removing the asset where it has been located, correct? But when obligation is what? Already incurred at the time of using that asset. That already we have done under India 16. This will be also added, this become cost. Very simple. So can you say what journal entry will do on commencement at ROU asset account debit lease liability? Okay, lease liability will be subsequently recognized at amortized cost. There we know. And ROU asset will be depreciated. ROU asset will be depreciated. But how to depreciate? Correct. And whether we can apply revaluation model? Well, yes. This ROU asset subsequent recognition will be done at cost model or revaluation model. If revaluation model go to India 16, well, if you are applying revaluation model, whatever we have done under India 16, that you apply. Correct. Understood? Are you able to understand what I am saying? But if cost model, then they have given some suggestion. They have given some suggestion. Why suggestion? Because there are something different here. They said cost model, it become cost less accumulated depreciation, less accumulated impairment loss, less or plus means add or plus any adjustment required due to remeasurement or modification. Now what is remeasurement? What is modification? That we need to understand. Because of this point, Ind AS 116 has given cost model. Means this point was not under Ind AS 16 na? अरे बोलना रे. Means if suppose they would have said cost model as by Ind AS 16, then तो गलत हो जाता ना. Therefore, if you want revaluation model, go to what? Ind AS 16. But cost model you need to apply the requirement of Ind AS 116. Now, can you say impairment loss to as per Ind AS 36? But depreciation, they have given some guidance. Depreciation, they have given some guidance subject to Ind AS 16. Is apply Ind AS 16 but subject to some guidance. What is the guidance given? For depreciation, what they have said? If, what they are saying, if the ownership will be transferred at the end of lease term. If ownership will be transferred at the end of lease term. Correct. Then will depreciate based on the useful life of the asset. But if ownership is not transferred at the end of lease term, then depreciation based on lease term or useful life, whichever is lower. Whichever is lower. Simple. Suppose I have taken one asset for 5 years. Lease term is 5 years, but at the end ownership will be transferred. Means I will use the asset for 5 years or more than 5 years. More than 5 years, useful life may be 10 years, then depreciate based on 10 years. But suppose if ownership is not transferred at the end of this term, then can I say, of course the maximum term we can use what? Lease term, but useful life can be less than what? Lease term, quite possible. Then depreciate based on lease term or useful life, whichever is lower. Understood? Other guidance means other depreciation point will be same to same as what we have done under Ind AS 16. Have you understood? Means can I say in this cost model only I need to explain what? Adjustment. Only this point. अरे बोलना रे. Only this point. Correct. Depreciation you understood? Acha, one more point. My question to you, this ROU asset will be, can be PP, can be PP, can be PP, or can be what? Investment property. If you remember, under investment property I have done, investment property are those assets which are held by owner or held by lessee as ROU asset, if you remember. So this ROU asset can be also classified as investment property if that ROU asset is subleased on operating lease. Correct now? That discussion we have already done under Ind AS 40. Means it can be PP or investment property. Now PP means Ind AS 16 and investment property means what? 40. Now they have given revaluation model as per Ind AS 16. Why? Yeah, because investment property only cost model. There is no revaluation model. Means if it is classified as an investment property, that revaluation model is not available only. Only for PP revaluation model is available. So ROE asset which are classified as PP, for them only revaluation model can be applied. If it is classified as investment property, no revaluation model. Understood? Got understanding? Got correct? Yes, sir. Depreciation, you understood? Understood depreciation? These liability you have understood on amortized cost basis. The expense, what are the expense to be recorded? Can I say expense in the books of legacy will be depreciation, will be interest cost, finance cost, correct? And can I say any variable payment which is not vary according to index or rate will be also recognized as an expense when it is incurred? When it is incurred, correct? That is only given depreciation, interest expense, variable lease payment, impairment of ROU asset. Journal entry you can do by your own. Journal entry is very simple. But on initial recognition, on commencement date, what journal entry? ROU asset to lease liability. When initial direct costs are incurred, then what journal entry? ROU asset account debit to bank. For subsequent recognition, what journal entry? Lease liability account debit, finance charges account debit to bank. For payment of lease payment, correct now? Then if there is any variable lease payment that are not included in lease liability, that will be recognized as an expense when they are incurred. Then for charging depreciation, depreciation account debit to accumulated depreciation. Simple. Can we take one question? Have you understood? Bolo. Correct. So can we take one question? Today what happened? You are not able to concentrate. Hmm? Today you are not able to concentrate. What happened? I should leave or what? But I am finding you are not able to concentrate. I will skip this chapter. You know. Hmm? It happened. If you know this chapter, you will not concentrate. Because I am assuming that I need to revise everything. If you don't want to revise, you can say me. Huh? But you are not concentrating today. Today your body is moving like this, like this. It happens means you are not concentrating. Cool. Can I continue? Hmm? 1 minute. Ah, chalo. Let us take one question. 31. Company EFG enter into a property lease with entity H. The initial term of lease is 10 years with a 5-year renewal option. So 10-year is the lease term with 5-year renewal option. Now whether the lease term will be 10 year or 15 year, that we need to understand. It can be 10 year or 15 year, correct? The economic life of the property is 40 year and the fair value of lease property is 50 lakh. Here the fair value is not at all relevant. Fair value is not at all relevant for lessee accounting. It might be relevant for lesser accounting, but not for lessee accounting. Company EFG has an option to purchase the property at the end of lease term for 30 lakh. The purchase option is given. The first annual payment is 5 lakh with an increase of 3% every year thereafter. The increase of 3% every year thereafter. So whatever increase in 3%, that is fixed payment only. It is not variable payment. Correct? The implicit rate of interest is this much. Thank you very much. They have given implicit rate of interest. Entity S gives a company an incentive of 2 lakh payable at the beginning of 2 year, which is to be used for a normal tenant improvement. Company EFG is reasonably certain to exercise that purchase option. Oh, ho, ho, ho. Now you say, just try to understand. Doubt is what here. Lot of students will do mistake. First, lease term will be 10 year or 15 year. That is the doubt. There are two doubt in this question. Let me ask you, because if you are doing mistake, so this doubt is doubt na. But we need to understand lease term is 10 year or 15 year. Don't look into the solution. Once you look into the solution, you will think, acha, we know everything. But actually, you may do mistake where in exam. What is the meaning of lease term? Lease term means what? Non-cancelable period plus period covered by an option to extend if the lessee is reasonably certain to exercise that option. So you can see nothing is given in the question about whether they will exercise or they will not exercise the renewal option. So you will take 10 year or 15 year. Why 10 year? You are saying 10 year. Means you are assuming they will not exercise. I am asking why 10 year. Means you are assuming na. But means you can also assume 15 year by giving a note. अरे बोलना रही, if you are assuming means other assumption may also prevail na. But no, it will be always 10 year. It cannot be 15 year, because if you are saying 10 year on the assumption, so other student may take 15 year on the other assumption. But 15 year is not correct, 10 year is only correct. But they have given purchase option. They will exercise purchase option at 10 year or 15 year. You only see. They are reasonably certain to exercise the purchase option. So they will exercise purchase option at the end of 10 year or 15 year. 10 year only. So if they will exercise purchase option, will they extend? They will not extend now. It means from the question it is clearly understood that lessee will not exercise renewal option. Why? Because they will exercise purchase option. In this point, student will do mistake. First mistake you understood. First mistake. Second mistake. Second mistake. But this lease payment is payable at the beginning or at the end. This lease payment are payable at the beginning of first year or at the end of first year. At the beginning or at the end. Read the question. Don't see me. The information will be given the question na. This lease payment is may be payable at the beginning. It may be payable at the end. Follow. Payable at the end of each year, yeah, at the beginning of each year. I'm asking at the beginning or at the end, because your calculation will different na. Huh? He is saying beginning. Why? Now someone is saying at the end also. Doubt is there. What I am saying, there are two doubtful points, and because of that two doubtful point, you may react in a negative way in exam hall. Means just try to understand. You have done, believe me, you may have done this question previously also. Because if you have done classes, this question I have taken from ICAI book. You have done this question before also. Bolna. Yes, yes. If you have done Ind AS 1163, you have done na. You have not done Ind AS 116 only. अच्छा तब तो ठीक है. You have done Ind AS 116. You have also not done. Ind AS 116 not done only. You have done. You have done this question. Same question I have taken from ICAI study matter, but can I say same question will come in exam? Then also doubt is there na. That I want to point out. Even though you have done question, even though question is coming from ICAI study material, even though you are confident when you have done this question by your own, even though you feel that question was easy, same question will come in exam, you will take a wrong point, 10 marks question will become 0 marks. Question they will ask this only. But if you are not able to just try, when you look into solution, you think, acha ye, acha nahi ye. But you are not able to understand why this. Why 10-year understood? Why 10-year? That we need to understand why 10-year has been taken. Why 10-year? Because the purchase option is reasonably set. They are reasonably certain to exercise purchase option. Second point, the question is silent in this about payable at the end or payable at the beginning. Correct? But ICAI has taken payable at the beginning. Means whenever a question is silent, always assume payable at the beginning. However, from one point, it can be also understood, but that is not clear. They have given lease incentive is payable at the beginning, but this is lease incentive. They have not said anything about lease payment. Question is silent about lease payment. But just try to understand, if you see any lease agreement, practically, any lease agreement, देख लेना, any lease agreement, always it is payable at the beginning. Means practically I will say it will be always payable at the beginning. Therefore, I want to say whenever question is silent, always assume what? Payable at the beginning. Because other assumption can be wrong assumption. Sometimes just try to understand. Now you will fight. मेरी बात समझना. You will say, sir, my assumption is what? Correct. Question is silent, but we can assume at the end also. Now you will fight. You will fight. What you will fight? If the question is silent, I have taken different assumption. Give me marks. No, no, no. Believe me, this no teacher will say. Only I want to say this point. Whatever assumption you are taking, first assumption means best assumption should be the practical implied point. That assumption is more appropriate, and ICAI will give marks for that. Means normally all these agreement, these payments are made at the beginning. And if you are articleship student, you should know this point. They want to inform you that. Are you able to understand what I am saying? In this question, if you assume at the end they are going to give 0 marks, they are going to give 0 marks, and that is, I will say, wrong assumption only. So assumption should be rational and best assumption. Assumption means what? Rational and best assumption, not all assumptions. So only those assumptions which are rational and best, that will be preferred in exam. So in this question, I will say always assume. Whenever question is silent, I will say always assume what? At the beginning. Normally student do mistake only, and we are, so normally what happens? We are habituated of taking what at the end? We are habituated of taking all the information at the end. But in this chapter, if question is silent, always take what? At the beginning. However, can I say with this point, some indication will come. Some indication is coming from this point also. Okay, it will be at the beginning only. अरे बोलना रे. Yes, sir. Now, I hope if you have understood this, now this question is not complicated. Because I have taken this point only to explain these 2 points. Correct. 10-year understood. Now you need to find out lease payment. Lease payment what? First year what? 5 lakh. First year what? 5 lakh. But at the beginning ke at the end? At the beginning na? So 5 lakh. Increase by 3%. 5 lakh into what? 3%. 5 lakh 15,000 reduced by 2 lakh. Lease incentive at the beginning of second year. So 3 lakh 15,000. Understood? Why it is 3 lakh 15,000? 5 lakh 15 minus 2 lakh lease incentive. अरे बोलना रे. And then increase by 3%, 3%, 3%, 3%, 3%, 3%, 3%, 3%, and year 10 there is a purchase option price 30 lakh. So can I say it will include what? Fixed lease payment plus purchase option price reduced by lease incentive. Now you are expert in discounting. Discounting at what rate? 9.04. You can find out this. But you can find out what they have given. Acha, this is to where they have calculated present value. They have not calculated present value. Acha, this is, sorry. This is working now. Of present value. So this you have understood. Present value. Be careful. Be careful. present value factor, because first is y0. First is y0 na, but we are habituated of taking what? मजा आता है. Starting from what? y1. अरे बोलना. Super danger, super danger. This is the danger. Even I am a student now, I may also do mistake. Because we always start from 0 point what? Whatever at 904%. Can I say if you have done this, this can be easily calculated. In this, no doubt. The 2 point least term and payable at the beginning. You will do mistake there only. Third mistake. Third mistake, what we do? Third mistake. Normally, when I am calculating amortized cost, we write down year end, then we write down interest expense, and then we write down contractual cash means lease payment, then closing balance. We do this. Batao. What is my opening? Year end 1. What is my opening liability? Batao. How much? What is my opening liability? What you are saying? This is a present value 37,39,648 now. What is my opening liability that I am asking? That lease incentive already we have deducted. Ray. 1 second you will deduct. 2 lakh already we have deducted na. And that present value already considered. Now my lease liability, opening lease liability is what? 37 lakh. I am here to identify where you do mistake. If I will say na, you will say अच्छा sir, we don't know. You will not focus on that point. अरे बोलना रे. I am asking you, please respond. You do mistake, because if you are doing mistake chalega. Don't do mistake where? In exam hall. What is more dangerous? Doing mistake here, doing mistake in exam hall. Do mistake here, but don't do where? So please say what will be the opening balance of this liability? 37 lakh, 39,648. Everyone is saying this. Everyone is wrong. Minus 5 lakh. तो बोला क्यों नहीं? This is already paid at the first day. This is the third mistake which student do. Means whenever, to avoid this mistake, this format you use whenever it is payable at the end. Whenever the lease payment are payable at the beginning, now do in this way: year end, then first lease payment, and then interest, and then closing balance. Do in this way. You will never do mistake. Now you will say first is 37 lakh. What was that? 39,000. Then from this minus what? Then with this amount, after minus whatever amount is coming, calculate interest, then closing balance. So whenever payable at the beginning, I use this format. Whenever payable at the end, use this format to avoid mistake or be conceptually clear. Normally what happens, we use the format whatever we have done in class, and normally 90% will do this format. In entire India's 109 chapter we have done this. अचानक से the format change यहाँ पर. Life become complicated if something change in our life. Understood? Are you getting what I am saying? After marriage our life become what? Complicated. Why? Because some changes happen in the life now. So after marriage we struggle a lot. Because a lot of changes na. Are bolna. I'm just giving you some point. Correct? Why? Because life changed drastically. We are not habituated of that. Life changes drastically. Lot of responsibility will come. Believe me, before marriage when I was teaching now, correct now, that time I was of 20, my age was 26. I got married at the age of 26. So 2 years I have taught without means that time I was alone. Believe me, no responsibility, nothing. Student not coming also मजा आ रहा है. Because if there is no student also no responsibility ना. If suppose in my batch no one is coming, whether ठीक है यार आ जाता बाद में. No worry. Only I was improving myself. Even though one student is there, na, I'm मजा आ रहा है यार. I got 10,000 rupees na, okay. But once marriage happened, they were अच्छा, now I need to earn also. Because after becoming CA, you can't demand money from what your parents. Even though your parents are millionaire, you can't demand. If demand, पता चलता. And even though you can demand, you will not demand. Lot of responsibility. And after that, if some student is not coming, depression में चला जाता आदमी. Understood ना? It means what happened कि once the life changes, you can't react. Question changes, you can't react. And they are not changing the question. That is a good point. Correct na? Understood? So what I am saying, if the format change, you need to react. So simple. Now what is the point? If the lease payment are payable at the end of the year, use this format, you will never do mistake. If the lease payment are payable at the beginning, use this format, you will never do mistake. So let us make a rule today. We will make a rule now. If lease payment payable at the end of the year, so this is opening liability plus interest minus lease payment closing liability. If it is payable at the end, then this is opening liability. Whatever. Opening liability minus lease payment plus interest expense. So interest you are calculating on this amount now. Understood? Done. My job done. With this question number 1, I have identified 3 mistakes. And normally students that do that 3 mistakes. Understood? Means once again I am saying I am here to give you concept as well as where student do mistake. That is the objective. Normally we are not able to identify where we are doing mistakes. Question number 1 done. Now balance you can do. Balance is very easy. Depreciation is very easy. Depreciation for how many years? But in this case, no, 10 year not. 10 year. Fourth mistake. Depreciation is fourth mistake. Because mistake done na. But the depreciation for 10 year or 40 year. Why? Because useful life will be transferred. Honors will be transferred at the end of this term. So 40 year. This is fourth mistake. One simple question, but I have given you 4 areas where student do mistake. Got it? Understood? Chalo. Can I take one more question? But I have taken a lot of time in this, na? Whether you are happy with this lot of time? Because I should take this much time, na? If I will do now, then this is very simple. We will not do mistake. So I need to identify that yes, you are doing mistake. Okay? Now question 32. One more question. But with this question, we'll also understand remeasurement. Remeasurement means what? Remeasurement means what? Remeasurement means what? Whatever estimation we are doing, that has been changed. Without changing the terms and condition of agreement. Means when agreement terms and condition change, it is modification. Modification, remeasurement are different. When I am saying remeasurement, the changes in lease payment, suppose variable lease payment changes, because variable lease payment vary according to index rate. If index rate will change, the variable payment will change. Suppose initially we have taken lease term 10 years, but now after 2 years, we are now reasonably certain to exercise the renewal option, then the lease term will change. So the changes in the estimation, whatever we have done, without changes in the estimation, whatever we have made, without changing in lease agreement terms and conditions, is known as remeasurement. If lease agreement changes, there is a modification in terms and conditions, that is modification. So remeasurement is different, modification is different, but more or less both are same. Accounting treatment is more or less same, correct, with some difference. That we need to understand. First, let me take one question. NTW entered into contract for a lease for retail store with entity J on Jan 1, 2017. The initial term of lease is 5 years with a renewal option of further 3 years. 5 years plus 3 years? The, Abhi we don't know. It can be 8, it can be 5 na. The annual payment for initial term and renewal term is 1 lakh. Means for 5 years it is what? And for balance 3 years it is what? 1,10,000. The annual lease payment will be increased based on annual increase in CPI. CPI means what? Consumer Price Index. CPI. At the end of preceding year. The annual lease payment will increase based on annual increase in CPI. At the end of preceding year, for example, they have given example also. The payment due on 1/1/2018 will based on CPI available on 31st/12/2017. Same question was asked in exam. Many students do mistake. Let's see whether you are doing mistake or not. My student have done mistake. Means in class I have said chilla chilla ke. Then also they are doing mistake. Means just classroom is different, exam hall is different. Exam hall में you'll get marks if you are reacting on a positive note. If you are reacting in a negative note, now simple question become complicated. Is the first thing remember, whatever may be the question paper, you need to smile. If you are positive, you can attempt all questions even though you don't know. If you are negative, you can't attempt the question which you have done 1 hour before. So be positive, happy, keep smiling. Your nervous system will be what? Controlled, under control. If that is under control, you can react positive. Correct now? I always think the pass and fail does not decide based on preparation. Because from my point of view, I have not seen CA final student who is not studying in the last 2 months. If any student is studying last 2 months and writing group 1 or one group, he is studying. Means for one group, 2 months is more than sufficient to pass the exam. Not for they should take coaching also, provided they have taken coaching. Means I am saying revision time. Last 2 months is more than sufficient. If they are doing last 2 month revision, correct? Means only revision, no job, nothing, correct? But normally pass and fail does not depend upon revision because everyone is doing revision. Have you seen any CA final student who is not doing revision last 2 months? Have you seen? Have you seen? Have you seen? If you are not writing, that is okay. Means if your mindset is चल ठीक है देख that is okay. But if you want to pass, you will study ना. अरे बोलना रे. So I have never seen. But then also everyone is not passing. Why? Because pass fail does not depend on that. Pass fail depend upon when you are entering in the exam hall, whether you are smiling. When you are reading question number 1, whether you are smiling. That is the point. Smiling in any situation. In every situation you need to smile. Then only you will be positive. And if you take tension, in 3 hours you will not be able to perform. That 3 hours is more crucial, more important than that 2 months. That 3 hours can change the entire game. Can change the entire game. Understand what I am saying? Can change the entire game. You know, in one of the World Cup, Bangladesh beat India. Bangladesh. That time Bangladesh was a weaker team. 2007. Bangladesh beat India. No one expected. And Bangladesh, small country like this, इतना सा है, and that beat India. game was important. The profile of Indian team was not important. How you are performing on that day, that is important. On that day, Bangladesh team performed better than what India. That you need to understand. The performance day is more important. On that performance day, how you are reacting, that is important. If you are reacting in a positive note, complicated question will become easy. And if you are reacting in negative way, so easy question will become complicated. That I am just want to say, because normally students don't understand this. Normally students don't understand. Once again I am saying, pass fail does not depends upon your revision. That is one factor, but not the entire factor. I always say, even though you are 100% prepared, you may fail. If you are 80% prepared, you may pass. It does not mean that you should prepare 80%. Huh? But I want to say this thing. Are you getting what I am saying? Correct. Now in this question, once again react. NTW incremental borrowing rate at the lease option date is itna 5% they have given. Acha, acha, acha. Sorry. NTW incremental borrowing rate at lease inception date and as on 1/1/2020. So something happened on 1/1/2020 is 5% and 6%. Means on commencement date and on 1st Jan 2020 it was 5% 6%, and CPI at least commencement date and 1/1/2020 is 120 and 125. So 120 become 125 on 1/1/2020. At the lease commencement date, NTW did not have significant economic incentive to exercise the renewal option, which initially it was 5 years. Correct. In the first quarter of 2020, NTW installed unique lease improvement into retail store with an estimated 5-year economic life. NTW determined that only sorry it would only recover the cost of improvement if it exercised the renewal option, creating a significant economic incentive to extend. Means can I say in 2020 now it is reasonably certain that they will exercise the option. Means there is a remeasurement, because now estimation change. So there are two estimation change. One lease payment will change, one lease term will change. Two estimation is going to change. Is NTW required to remeasure? Of course they are required to remeasure, but what they want to say? How many year? First year, second year, third year, fourth year, fifth year, sixth year, 7 year, 8 year, 8 year. First year is what? Which year? 1/1/2017. This is 1/1/2017. This is 1/1/2018. This is 19, 20, 21, 22, 23, 24, 25. This is at the end of fifth year. This is at the end of 8 years. Correct. Initial lease payment they have given 5 lakh. Sorry, how much they have given? 1 lakh now. Initially they have given 1 lakh, 1 lakh. So they have given 1 lakh, 1 lakh every year. 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. This is 1,10,000, 1,10,000, 1,10,000. Correct. First doubt. Payable at the end, payable at the beginning. बताओ. First doubt. Payable at the end, payable at the beginning. Fast. Now you have read the question. Huh? Payable at the beginning, payable at the end. अरे बोलो, you need to react. Either say correct or say wrong. Otherwise I will say. But if I will say, you will not be able to understand what mistake you are doing. Payable at the end, payable at the beginning, payable at the end. So both answer came. Let us see. In exam question, same question came. Many students have done mistake. My student also. For example, if the payment is due on 1/1/2018, they have given. The question is not silent. If the payment is due on 1/1/2018, will be based on CPI available on 31st/12/2017. This is given for CPI. This is given for payment. This question is not silent. It is payable at the beginning. Read question carefully. You will get the information now. Means payable at the beginning. Means all are payable at the beginning. All are payable at the beginning. Are you able to understand? Correct. Now, second, initially what is the lease term? Initially lease term is what? 5 years. Initially, what is the CPI? 120. Correct. Can you say what they are saying? At this point of time, it become 125. Means initially we'll estimate lease payment based on this only 120. So based on 120, they have given 1. This is based on 120 only. Means reassessment will be done at this point of time, and at this point of time we need to remeasure at what? 125. Correct. Understood. So what was the remeasurement date? I forgot. 11 11 2020. So this is the date. This is the date. 125. Understood this point? Now on this date they are saying that now they are reasonably certain to exercise the renewal option. So on this date, now remaining life will be what? 1, 2, 3, 4, 5. 5 years. Understood. Correct. Simple. Now we can do it. The question. So whenever remeasurement, what they said, we need to find out lease. We need to restate lease liability at present value of remaining lease payment discounted by using either original discount rate or revised discount rate. Now one doubt will come whether we'll calculate present value by using original discount rate or revised discount rate. So initially we have taken how much percentage? We have taken 5% now. But now they are saying revised discount rate is what? 6%. So we'll take 5% or 6%. This is one more doubt. For this we need to refer Ind AS 116. What they want to say. For this we need to refer Ind AS 116. I hope entire question you have understood. Only I need to explain whether revised discount rate or original discount rate. Whether 5% or 6%. Bolo yes or no? Balance तो we can do by our own. Correct ना? बताओ. But check करेंगे. What Ind AS 116 says. Remeasurement. These liability will be reassessed due to changes in lease payment on reassessment of lease term. Understood? Reassessment of lease term. In this question there was reassessment of lease term. अरे बोलना रे. Or reassessment of purchase option. Reassessment of purchase option. Or reassessment of in substance fixed lease payment. Or reassessment of variable lease payment. Or reassessment of residual value guarantee. In this question they have given these and these. Correct. Now what they are saying, if there is a reassessment of lease term and reassessment of purchase option price, always use revised discount rate. Otherwise use what? Original discount rate. Understood? Means whenever there is a reassessment of what? Lease term and reassessment of purchase option price, use what? Revised discount rate. Otherwise use what? Original discount rate. Can you see in this question they have given reassessment of lease term. Therefore we'll use what? Revised discount rate. Suppose there was no reassessment of lease term, then we would have used what? Because there is a reassessment of variable payment also, then we would have used what? Original discount rate. Understood? So in this question we'll take 6% or 5%? 6% for remeasurement. Understood? Have you understood? Now let us understand the solution. Can we come to the solution? Can we come to solution? This question number. Question number what? 32 na? This is the question. Correct? So let us come. Here's first calculation of lease liability on 1/1/2007. Will take how many year? 5 year. Lease payment 1 lakh, 1 lakh, 1 lakh. Discounting rate 5%. We can calculate present value. Correct. Yes, because there is no other information given about initial direct cost, etc. So lease liability and ROU asset will be same only, and therefore ROU asset also become same. Calculation of initial cost of ROU asset will be 4,54,600 only. This point have you understood? Now can you say first we need to find out carrying amount of lease liability and ROU asset as on this date. As on this date means after 3 years. Let us first find out carrying amount of lease liability. बताओ, this is at the end की at the beginning, at the end की at the beginning, at the beginning. Which format will you use? Opening balance minus lease payment plus interest closing balance. You can see the same thing I have used. You can see opening lease liability, lease payment, interest expense, closing liability. We can apply this. We can find out amortized cost at the end of third year. At the end of third year means beginning of fourth year. Then we can calculate depreciation. So the depreciation will be done based on useful life or lease term. In this question, there is no purchase option. There is no purchase option. So can I say it will be based on lease term only? So lease term is what? 5 year. Out of 5 year, how many year expired? 3 year. So we have done 3 by 5. 3 by 5. They become carrying amount of ROU asset. Correct. Now we'll do remeasurement. Remeasurement means we need to find out revised lease liability because of what? Changes in lease payment and changes in lease term. So on 1/1/2020, my remaining lease term is what? 5 years. So year beginning is what? 1/1/20, 21, 22, 23, 24. Lease payment will change. Now we need to convert the lease payment which was based on 120 to 125. So you will do what? Divide by 120 into 125. We can see 1 lakh into 125 divide by 120. Similarly, 1 lakh into 125 divided by 120. But for the next year, it was 1 lakh 10,000. 1 lakh 10,000 into 125 divided by 120. This you can calculate based on revised consumer price index. Correct. Then we can find out present value at the rate of 6%. Be careful. This is at the beginning. This will be always 1. This will be always 1. Huh? Correct. We can calculate this amount. We can calculate this amount. So this become my revised lease liability. Will compare with the carrying amount of lease liability. So what was the carrying amount of lease liability? This was the carrying amount. My liability increases. My liability increases. The liability increases by what amount? This amount. So what India says that any increase or decrease in lease liability due to remeasurement will be adjusted to what? ROU asset. Means you need to increase your ROU asset also. What journal entry will do? ROU asset account debit to lease liability on remeasurement date by this amount. Have you understood this journal entry? Solution is very easy once you have understood. Solution is easy now. So carrying amount of ROU asset will be what? Carrying amount already calculated plus this become the revised carrying amount of ROU asset. Now this will be depreciated in remaining useful life. Yeah, remaining lease term. Understood? Have you understood this? Have you understood this point? Correct? Acha, one point I forgot. We'll take original discount rate or revised discount rate. Revised. Because why revised discount rate? because there is a reassessment of lease term. We will take revised discount rate. Initially we have taken 5%, now it become 6%. Got it? Remeasurement, they have given only one question. Can I say any other question given you can do it by your own? Any other changes you can apply now? You can apply or not? You can apply. But they have given only this question. This question also asked in exam. Most of the students have done only one mistake. They have taken payable at the end. But in this question, though, the assumption is not payable because question is not silent. Why you are taking payable at the end? Why? Because we are not reading the question carefully. We have negative set of mind in exam hall. We are not giving importance to the information given the question. Now, whether they will give marks, don't expect also marks. They are not giving marks in correct answer. So whether they will give marks in wrong answer. अरे बोलना रही. Correct answer only they are not giving marks. Correct now. Okay. Chalo. This you have understood. Now, coming to the modification. Coming to the modification. Now, lease modification, I hope you understood. Modification means what? Changes in the terms and conditions. Means old agreement will change and new agreement will draft it. Remeasurement means no changes in terms and conditions. Means suppose lease term, original lease term now change. It is modification. Original lease payment now change. Modification. Correct now? Are you getting what I am saying? Original lease payment change means we have changed the terms and condition only. Initially we decided 1 lakh. Now we are saying 5 lakh. So change in the terms and condition now. The lease modification is change either in the scope of lease or in the consideration for a lease that was not a part of original terms and condition of the lease. Now what they are saying, modification are of two types. Either modification will be accounted as separate lease. When I am saying modification will be accounted as separate lease, means original lease will not be altered. Original accounting will remain same. Modification will be separate accounting. A second, modification is not a separate contract. Then can I say it need to be adjusted in original accounting only? Normally in exam they will ask it is not a separate. Because तभी मजा आएगा. You need to alter what? Original accounting. If modification is separate accounting, then you need to apply separately only now. Considering it is a new lease. So when it will be separate, when it will not be separate, that we need to understand. However, from question only you will be able to understand whether it is separate, whether it is not a separate. So when it will be separate, what they are saying, if these two conditions are satisfied, what is two conditions? These two conditions satisfied, it is a separate lease. First condition is what? Modification increases the scope of lease. Means suppose we have taken 1 floor of building. Now we want second floor. So it is increase in the scope. So modification increase, not decrease, increases the scope of lease. Modification increases the scope of lease by adding the right to use of one or more underlying asset. Means some more asset is coming in, not going out. Understood? Means one or more underlying asset is added in the contract and the consideration for the lease increases by an amount which is commensurate with the standalone selling price of increase in the scope. Means the lease payment whatever has been increased, that is approximately equal to what? Standalone selling price of that additional underlying asset. So can you say it is a separate lease only? Why to adjust original lease? Correct now. So it will be accounted as separate lease as if modification is a new contract for new lease. Understood? Have you understood? So this type of question they will not ask from my point of view. If they will ask, don't alter original contract. Modification apply separate accounting. Are we able to understand? Yes, sir. Now, can I say modification is not a separate lease? Can I say if any one of the above condition is not satisfied, then it is what? Not a separate lease. Means adjust the original accounting Adjust the original accounting means what? Calculate, revise this liability, and adjustment will be done with ROUS. Simple. Now, when I am saying modification, so this can be the modification. Just try to understand. Increase in the scope. Understood? Increase in the scope. Understood? Or increase in the consideration. Either increase in scope or increase in consideration or increase in lease term or decrease in consideration or decrease in scope or decrease in lease term. Follow, yes or no? This can be 6 possibility. First, increase in scope. Listen, don't write. Don't write. Increase is, listen careful. Everything is written where? In Saran's book. This is given in what? Some simplified way. Nothing more than that. Increase in scope or decrease in scope. Increase in lease term or decrease in lease term. Increase in consideration or decrease in consideration. These are the 6 possibility or not. There is no other possibility. It can be in combination of 2. Increase in consideration, increase in lease term, both together. But again, these are the 6 possibility. When I am saying increase in scope and the second condition also satisfied, then it is a separate lease. But increase in scope and second condition not satisfied, then it is not a separate lease. So I have written, but second condition not satisfied. Understood? Have you understood? Correct. Then it will be not a separate lease. So can I say increase in scope? There can be 2 points. Increase in scope, second condition satisfied, separate lease. But increase in scope, second condition not satisfied, then what? It is not a separate lease. Now what India says, whenever there is a modification, calculate revised liability by using revised discount rate. Means whenever modification, always use what? Revised discount rate. So calculate revise this liability by using revised discount rate, and whatever increase or decrease in this liability will be adjusted to what? ROUS. Since accounting is simple. Same thing whatever we have done for remeasurement. Means can I say you can easily find out the revised risk liability. Revised discount rate will be given the question. You are expert in discounting. You can calculate revised risk liability. Then compare with what? Carrying amount of lease liability. Either it will be increased or decreased. That increase or decrease will be adjusted to what? ROUS. But life is not simple. थोड़ा सा इसमें twist है. There is some twist. What they are saying, if it is decrease in lease term or decrease in scope, so it will also result in either partial, it will result in termination of contract, either partially or fully. So whenever there is a termination of contract, so there will be some gain or loss on termination. So that gain or loss need to be also calculated, and that gain or loss will be transferred to PL. Understood? Means can I say in these 2 cases, decrease in scope and decrease in lease term, it will result in what? Termination. Because can I say increase in scope, there is no termination. Increase in consideration, there is no termination. Increase in lease term, there is no termination. Increase in lease term, there is no termination. We are extending it. But and decrease in consideration also no termination. But there is a increase, there is a decrease in scope. Suppose we have taken what? 2000 square feet. Now due to COVID-19, we don't require 2000 square feet. We require only 500 square feet. Decrease in scope. It is partial termination of lease. So it will result in some gain or loss on partial termination or full termination. We want to vacate entire building. Are you able to understand what I am saying? Or decrease in lease term, initially 10 years, but now I want only for 2 years. Quite possible. This will also result in what? Partial or full termination. Whenever partial or full termination, first calculate gain or loss on termination and then do remeasurement. Can you say whenever they ask A, B, C, D, it is very simple question. It become complicated only when they ask what? E and F. E and F is more interesting. Can you say A, B, C, D? So very easy. Can you say A, B, C, D is as simple as what we have done for remeasurement? Only we need to take care of what? Revise discount rate. Are you able to follow me? So I am not taking any question of A, B, C, D. Questions are given where? In ICAI study method, can you do it by you? I will take two good questions for E and F. One is what? Decrease. Let me see the question what I have taken. But I have taken good question. I am not taking simple question. चलेगा ना? I have taken चलो question number 34. What question I have taken? Check करेंगे. Lessee enter into 10-year lease for 5,000 square meter of office space. The annual lease payment is 1 lakh payable at the end of each year. The interest rate implicit in the lease cannot be determined. Lessee incremental borrowing rate is what? 6%. At the beginning of year 7. At the beginning of year 7. Acha, this lease payment are payable at the beginning or at the end? It is given at the end. Then don't assume. Correct? At the beginning of year 7, lessee and lessee agree to amend original lease modification. Correct? By extending the contractual lease term by 4 years. Acha. This is to increase in lease term. So there is no termination. So I have taken one question of what? That also. The annual lease payment are unchanged. Lessee incremental borrowing rate at the beginning is what? 7%. Correct? It is extended by 4 years. Initially it was what? 10 years. Now it become 14 years. Correct? Now it become 14 years. Again, very simple. This so you can do it by your own, but because I have taken the question, so I need to discuss also. Can I discuss? Let us discuss. This is question number 34. First, we'll calculate lease liability at the beginning of on commencement date. So, what is the lease payment? 1 lakh payable at the end of each year. So, for 10 year, we'll do discounting by using what rate? 6%. You can see we have done this. This is coming. Because I have written in the class danger if it is payable at the beginning. Then don't take this. If it is payable at the beginning, then what? Y0 is 1. Normally student do mistake when they do in this way. So this is so very dangerous. I will say that table is what more easy. But this way now we in exam nahi chalta. In exam hall na I say this dimag nahi chalta. Are you getting what I am saying? Now calculation of ROU asset can is same. It will be equal to this only because they have not given any initial direct cost. They have not given any estimation of dismantling etc. Then we'll find out calculation of carrying amount of this liability when they have done modification at the beginning of 7th year. Means at the end of 6th year we'll do. So at the end of 6th year. So we can do this. You can see what format I have used. Opening balance, interest, minus lease payment, closing balance. Understood why we have done this? Have you understood Bol? Have you understood this point? Can I say you can apply this by your own? We can calculate this. This is the carrying amount of lease liability at the end of 6th year. Now we'll find out carrying amount of ROU asset at the end of 6th year. Depreciation by what? How many year? 10 years, because ownership is not transferred at the end of lease term. So you can see we have done that only. We can calculate this. Divide by 10 into 6. Now we'll find out what? Calculation of revised lease liability at the beginning of 7th year. So at the beginning of 7th year, my entire lease term become 14 years. Out of 14 years, how much expired? 6 years. How much is remain? 8 years. Means can I say better? I will say start right on in this way. 7, 8, 9, 10, 11, 12, 13, 14. But this 7 is what? Y1, huh? Don't do Y7. Sometimes what we write, we don't understand. This I am writing for simplicity. This is year end 7, year end 8, year end 9. But if you are calculating present value, this is Y1 now. Y1, why? Because it is at the end of the year. Can I say lease payment remains same? Correct. But what has been changed? Discount rate. And now this will be this amount. Now this will be compared with the carrying amount. So what is the revised lease liability? Is what? This amount. What is the carrying amount of lease liability? This amount. So there is an increase in lease liability. That will be adjusted to ROE asset. What journal entry will do? ROE asset account debit to lease liability at the beginning of 7th year. Then we can do subsequent accounting. Follow. Have you understood this? This was very easy. Yeah. Whenever with termination, then it will become interest. Termination point wala will become interest. Understood? So can we take one question of termination? Normally to India is 116. I am doing full because they have given very few questions and they will ask from that only, and therefore I am just giving time. And one question they are asking from this topic. Can we take one more question? Come to question number 37. Lessee enter into a 10-year lease for 2000 square meter of office space. The annual lease payment are 1 lakh payable at the end of each year. The interest rate implicit in the lease cannot be readily determined. Lessee's incremental borrowing rate is 6%. At the beginning of year 6, lessee and lessor agreed to amend the original lease. The remeasurement modification. Means in example you need to understand remeasurement ki modification. It is remeasurement or modification. There are two topics, remeasurement and modification. It is modification, of course we are doing modification, but in exam you need to understand amend means modification. Amendment in the original term is what? Modification. Why I am saying? Because in case of remeasurement we use sometime original discount rate also, but in modification always will use revised discount rate. This is the main difference between remeasurement and modification. In exam you need to understand remeasurement hai ya modification hai. Correct? Yes sir. Then at the beginning of year 6 they decided to include an additional 1500 square meter, means increase in scope, and reduce the lease term from 10 year to 8 year. Decrease in lease term. Then decrease in lease term is result in termination. Now you only say first will do termination, if first will do remeasurement. Means first termination or first will calculate, means first will apply point number B or point number A. Always first termination, then revision. Means termination means what? Termination of some portion, then some portion will be left, for that will do revision. Are you getting what I am saying? So always first calculate gain or loss on termination and then revise the liability. Then revise the liability. There are two cases, decrease in lease term and increase in scope. Increase in scope. The consideration for the increase in the scope is not commensurate with the standalone selling price. The second condition not satisfied, and therefore it is not a separate lease. Therefore adjusted with what? Original lease. Correct. Consequently, lease does not account for the increase in scope that add the right to use an additional 1500 square meter as a separate lease. Thank you very much. They have given the question only. How should the said modification can be accounted for? Simple. Chalo. Can we do it? Let's see how to do it. Question number 36 na? 37. Can you say first we'll calculate lease liability on commencement date as per original contract. So original contract it was 1 lakh. Payable at the end ki payable at the beginning? Payable at the end given for how many year? 10 year. At what rate? 6%. So we can calculate this 7,36,000. Correct. Then because there is no other information, lease liability and ROE asset will be equal to same. You can see same amount I have taken. Now we'll calculate the carrying amount of lease liability on modification date. What is the modification date? At the beginning of 6th year. So we'll calculate at the end of 5th year. We'll calculate carrying amount of lease liability on modification date, means at the end of 5th year. We will say 1 year, 2 year, 4, 3 year, 4 year, 5 year. We can apply this table. We can calculate this amount. Simple. Then we'll find out what carrying amount of ROU asset. That also we can find out. Divide by 10 into 5. This we can find out what carrying amount of ROU asset. This must do in every question you do. This much you do in every question. Now, first we'll apply decrease in lease term or increase in scope. First apply decrease in scope. Increase in scope or decrease in lease term? Decrease in lease term. So apply decrease in lease term. You can see adjustment for decrease in lease term. Okay. Adjustment for decrease in lease term. Just try to understand. This is right. This carrying amount represent right to use asset for remaining 5 year. But now it has been reduced by 2 year. So now this is right to use for how many year? 3 year, na? This is now right to use for how many year? 3 year. It means can I say we need to decrease ROE asset for proportionately for how many year? 2 year. Simply can I say we'll do 3,68,000 into 2 by 5. That much ROE asset will decrease. That much ROE assets will decrease. This point have you understood? This point have you understood? That only we have done. Adjustment to ROE asset. Carrying amount of ROE asset is 3,68,000. Carrying amount of ROE asset for original lease due to reduction in lease term. So now after reduction it will be for 3 year only. So this much we require. So this much is reduction. Or we can do in this way 3,68,000 into 2 by 5 also. Same answer will come. We can do into 2 by 5 now. I have first calculated 3 by 5, then minus, then 2 by 5. It can be 2 by 5 also. Correct. So this is decrease in ROE asset, means we can do in this way 3,68,000 into what? 2 by 5. Better do in this way only. Correct. Can I see you have understood how much we should decrease what? ROE asset. Now how much we should decrease what? Lease liability. Can I say this is nothing but present value? This is nothing but present value of remaining lease payment for remaining lease term is for how many year? 5 year. But we want how much? For 3 year. Batao. When we will calculate present value of remaining lease payment for 3 year, think and say, we'll use original discount rate or revised discount rate. One second. This 4,21,225 is the present value of remaining lease payment for how many year? 5 year. But we want only for 3 year. So it means you need to find out new carrying amount. So new carrying amount will be present value of remaining lease payment for remaining 3 year, discounted by using original discount rate or revised discount rate. This is termination, not modification. Just try to understand. If this is what 5, how much? 6% now. So if you want to reduce it, you should reduce it for proportionately now. This is termination. We are doing terminating. We are not creating new liability. We are terminating the original contract. If original contract you have done at 6%, so termination you will do at 6% only now. This is the area where you do mistake, huh? original discount rate, revised discount rate. This is the point where you need to understand. Focus there. Focus there. Are you able to understand once again what I am saying? Because it is termination. Termination means you are terminating the some portion of original contract. If you are terminating, you should take the same principle now. Then only it will be reduced proportionately. Understood? Means if I calculate present value of remaining lease payment for the next 3 years discounted by using 6%, then automatically we can get how much we should reduce. Correct? That only we have done. Check करेंगे. What we have done? Adjustment lease liability. Carrying amount of lease liability is this much less present value of remaining lease payment for reduced lease term, that is 3 years, discounted by using 6%. So if you calculate that for 3 years, it will be this amount and this will be reduction required. Understood? Means can I say now you got how much ROUS need to be declined? How much lease liability will decrease? So what journal entry you will do? Journal entry batao. Journal entry what? Lease liability will decrease. Lease liability will decrease to what? ROUS. Can I say the difference will be gain or loss, which will be transferred to what? PL. The difference will be gain or loss, which will be transferred to PL. Have you understood this point? That only we have done. So of course gain we have calculated, but journal entry you can do by your own. Understood? You can see reduction in liability is 1,53,925 and reduction in asset is what? Reduction in asset is how much? 1,47,000. Means liability decreases more by asset, it will be gain only. If you are decreasing more liability as compared to asset, so decrease in liability will be gain, decrease in asset will be loss. If gain is more than loss, so that amount is what? Gain only. Therefore we have calculated gain. Understood? Understood? Now everyone just try to understand. Forget about increase in scope. Suppose this question they have given only decrease in lease term. We don't think about increase in scope. Concentrate on lease reduction in lease term. Now termination done. Now whatever left is for remaining portion, means for 3 years. It is a modification also. If there is a modification, we need to revise our liability by using discount or revise discount rate or not. So just forget about what? Increase in scope. Suppose there is only decrease in lease term only. Then also now we need to find out liability based on revised discount rate for remaining portion. So now we'll do modification due to reduction in lease term. First was termination. Now we are doing modification for the remaining portion. Are you getting? So whenever there is a modification, we'll use which rate? Revised discount rate. Revised discount rate is 6% or 7%? 7%. You can see for 6 year, 7 year, 8 year. Why 8 year only? Reduced to 3 year. At what rate? 7%. We can find out this. Once again we'll compare with the original carrying amount after reduction. The difference will be adjusted to ROU asset. Means you can see, then we compare revise this liability, carrying amount of this liability after partial termination is this will be adjustment to ROU asset. Understood? Have you understood? And now we'll do what? Increase in scope. Now it is very easy. Now let us come to increase in scope. Have you understood this much? Increase in scope. Increase in scope means now. Increase in scope means what? Now the lease payment will change. So we need to now find out carrying amount of revised liability once again. We need to find out revised liability once again due to increase in scope for remaining year. So remaining year is what? 6, 7, 8. But now lease payment become 1,50,000, 1,50,000, 1,50,000. This will be your revised liability. This revised liability will be once again compared with what? Carrying amount liability after the calculation whatever we have done previously. that will be compared. Once again, the difference will be adjusted to what? ROE asset. So the same thing. Same thing we have done now. Understood? But have you understood the process? Process you need to understand. First think about termination, then modification. Understood? First termination, then modification. If you do first modification, then termination, then wrong. Always first termination, then modification. If they are on the same day, different day, then though okay. Understood? I think understood. Journal entry is given. This is the journal entry for what? Decrease in lease term. This is journal entry for what? Increase in scope. No, I have given 3 journal entries. These 2 journal entries for what? Decrease in lease term. This journal entry is for what? Increase in scope. This is partial termination journal entry, then modification, then modification. Understood? Any doubt? Have you understood the order, how you are doing? That is more important. Okay? If you have understood, we'll take break. We'll take break. चलेगा? Okay. Now, can we start once again? So before break, we have completed the modification. I hope you have understood. Any doubt in that? Correct? I was little tired. Before, in the last question, I was little tired. Once again, I'll explain or you have understood? Huh? Bolo. Once again, I'll explain or you have understood? Akka. So now, if you have understood, what? Lessee accounting completed. Now we'll to come to what? Lesser accounting. Lesser accounting, let us come. to lesser accounting. Okay. Lesser accounting, they have given only one question, and that question is also asked. But in the recent RTP, they have given again one question of lesser accounting. Correct? In the recent RTP. Now, can you say when we are into lesser books, when we are into lesser books, so we need to do what? First, classification of lease into operating or finance lease. This classification is same to same what was in AS 19. This classification criteria remains same. Now, you all know what a finance lease. Finance lease are those leases where lessor transfer the risk and reward of what? Risk and reward of underlying asset to lessee. If the risk and reward is also transferred, it is finance lease. And the risk and reward is not transferred, it is what? Operating lease. But sir, how will understand the risk and reward has been transferred or not transferred? Because of that reason, Ind AS 116 has given some example that individually or in combination of other example would normally lead to a lease being classified as finance lease. So they have given how many examples? 5 examples. 5 indicator we can see. First indicator is based on ownership. But they say the if the lease transfer ownership of the asset at the end of lease term, it will be a finance lease. The ownership is transferred at the end of lease term, it will be always a finance lease. Second, the lessee has the option to purchase the asset at the end of lease term at a price which is substantially lower than the fair value of the asset at the end of lease term. Then also it will what? Finance lease. I hope this point you are able to understand. Lease term, the third point is what? If the lease term cover major part of economic life of the asset, major part of the economic life of the asset, then also it will be finance lease. This major part is not defined under Ind AS 116, but from examination point of view, we can say 75%. If it is covering 75% of economic life of the asset, then we'll consider it as what? Finance lease. Then there is one more point ki on inception of lease, the present value of lease payment substantially cover the initial fair value of leased asset, then it will be what? A finance lease. Present value of lease payment initially is substantially equal to what? Fair value of asset, then it will be a finance lease. Here substantially once again not defined. From examination point will take 90%. From examination point of what will take 90%. Chalega? Then last point, कि asset is of specialized nature, correct? Asset is of specialized nature that only the lessee can use it without being major modification. Means the asset was created for lessee only. The asset was created for lessee, then it will be a finance lease. Understood? Yes, sir. Then other factor you can read it, correct? Let us come to accounting of what? Lesser. The accounting of lesser for finance lease depend upon two situations. Whether lessor is a manufacturer or dealer, or lessor is a non-manufacturer dealer. Means can I say it might happen the supplier, a lessor, is the manufacturer or dealer. Then that can I say that asset is an inventory, or it is quite possible the lessor is a financer, financing the transaction financer. Then the asset is not a inventory. So depending on that, accounting treatment different now. So for you need to understand what they want to say for manufacturer, what they want to say for non-manufacturer. Are you able to understand what I am saying? So first we need to identify whether manufacturer or non-manufacturer. Correct. Accounting will be different. Manufacturer or dealer, or non-manufacturer or dealer. When I am saying non-manufacturer means financer. Correct. So in this case the journal entry is very easy. On commencement we'll pass one journal entry. These receivable account debit to asset. Asset. And this asset will be de-recognized at carrying amount, and this lease receivable will be recognized at net investment. What investment? Net investment. Means now we need to understand what is the meaning of net investment. Again, difference will be gain or loss, which will be transferred to what? PL. Only I need to explain what net investment. So net investment means what? Is equal to present value of lease payment plus present value of UGRV. What is UGRV? Unguaranteed residual value. Unguaranteed residual value. Now when I am saying lease payment, now you know what is lease payment. But what is the meaning of lease payment? Lease payment means what? It means fixed lease payment, variable lease payment, purchase option price, penalty and GRV. बोलो या सुनो. GRV. GRV means what? Guaranteed residual value. Means this lease payment is inclusive of what? Guaranteed residual value. Correct. Can I say GRV in this case will be from the point of lesser or lessee? From the point of lesser. Means GRV means the residual value guaranteed by lessee or by third party, whichever is higher. Whichever is higher. This already I have discussed. I said residual value guarantee will be different for lessee and lesser. When you are in lessee books, it will be the amount guaranteed by lessee only. But when you are in lesser books, it will be amount guaranteed by lessee or on behalf of lessee or on behalf of third party, whichever is higher. So can I say in this way? Either lessee or on behalf of lessee or by third party, whichever is higher. Are you able to understand this point? Means can I say in this way? This is nothing but present value of lease payment plus present value of GRB. Bolo. Means when I am saying present value lease payment is inclusive of GRB na? Are you getting what I am saying? Now, what is UGRB? UGRB means what? UGRB means what? Expected residual value of lesser minus GRB is what? UGRB. Now suppose as per lesser expectation, the residual value at the end of useful life is 10,000. But if they have received guarantee of only what? 8,000. Then what is UGRB? 2,000. So it will be plus present value of UGRB. Understood? This is what net investment. So can you see if this is given, this is given, this is given, you can calculate. Discounted by using what? Discounted by using what? Interest rate implicit on lease. Interest rate implicit on lease. Or what? Or what? Don't write, everything is written. You are wasting your time. Concentrate. See, everything written. But why I am taking this? Because I can explain better when I write. When I read Natut, I miss some point. Therefore I am writing. But I am not writing good handwriting. Na? I just want to focus. When I write, then I can concentrate more. When I read, I forget some point. You don't write because everything is written. Check karo. Focus on what I am saying. This India's Saran's book, super book I have created. Super. If you read now, everything is written. Check karo. You are wasting your time. Net investment, unguaranteed residual value, guaranteed residual value. Okay. So if you want to write, but look into me. Don't look there. Huh? Correct now? Don't look in the whiteboard. Look into me. Okay. So that I can concentrate. 1 second. What I am saying? Net investment means what? Present value of lease payment plus present value UCRB. Lease payment you understood, it means fixed, variable, purchase option price, penalty, GRB. Means can this lease payment is inclusive of GRB? Means I can say present value of lease payment plus present value of GRB plus present value of UCRB. UCRB means what? Expected residual value minus GRB. Can I say expected residual value will be given in the question? GRB will be given the question. You can calculate UGRB. Yes, if GRB is not given, means GRB is nil. If suppose GRB is not given the question, it means GRB is nil. Means entire expectation is what? UGRB. Are we able to understand? Yes, sir. Now this will be discounted by using what? Interest rate implicit on lease or what? Or what? Well, let's see what we have done. Let's see, two options has been given: interest rate implicit on lease or let's see incremental borrowing rate. Correct. If this is not determinable, then we'll use what? Let's see incremental borrowing rate. तो यहाँ पर और what? No, nothing. Only this. Discounted by using this. Means here only this, because this will be calculated from lesser point of view only. Means in the books of lessee, it is quite possible they are not able to determine this rate. Therefore, one option has been given. If you can't determine this, then use what? Incremental borrowing rate. But such option is not available for lesser. Correct. Now, what is this that we need to understand? What is this? This is the rate of discount rate at which present value of lease payment and present value of UGRB. Huh? This lease payment is inclusive of what? This lease payment is inclusive of what? GRB. Huh? So discount rate at which present value of lease payment and present value of is equal to fair value plus initial direct cost initial direct cost incurred by lesser. Understood? Means can I say we need to find out, can I say if this is given, we can find out, or normally 99% they will give this rate. 99% they will give interest rate implicit on lease. But if not given, you can calculate. My question to you all, everyone, without calculating, my question to you all, present value of lease payment plus present value of UGRB discounted at interest rate implicit on lease will be always equal to what? Once again, present value of lease payment plus present value of UGRB discounted at interest rate implicit on lease will be always equal to what? Fair value plus initial direct cost. Huh? Will be equal to fair value plus initial direct cost. Bole yes or no? Means can I say this lease receivable will be always equal to fair value plus initial direct cost? Means can I say this lease receivable is inclusive of what? Initial direct cost? Understood? So if you have already paid initial direct cost, you write on to bank also. To bank with the amount of IDC. This is the journal entry. Journal entry, have you understood? But why I am not saying fair value plus initial direct cost? It might happen fair value is not given the question. Don't write that. Means it might have fair value is not given the question. Nah. Then I can't say fair value plus initial direct cost. I can't say fair value plus initial direct cost. Are you getting? Or I will say don't use this. Don't think about this. You can now calculate net investment. Net investment is equal to what? Present value of lease payment inclusive of GRB plus present value of UGRB discounted by using interest rate implicit on lease. If interest rate implicit on lease is not given, we need to calculate it. So that will be discount rate at which present value of lease payment and present value of UGRB will be equal to fair value plus initial direct cost. Can I say by using IRR concept we can calculate that? But once again, 99% they will give. Don't worry. Okay, subsequent accounting you can do by room. Now subsequent accounting of lease receivable will be at amortized cost. That you can do easy. Can I come to manufacturer? Because in exam, higher chances of this. Have you understood non-manufacturer? Non-manufacturer. Manufacturer means revenue. We need to recognize revenue. Revenue. So what is the revenue will be recognized at lower of point number A, point number B. Understood? At present value of lease payment discounted at what? Market rate of interest. Acha, market rate of interest. Understood? Correct. Present value lease payment, not UGRB. Yeah. Lease payment means inclusive of what? GRB. Correct. Or fair value of asset, whichever is lower. Understood? Then can I say whenever there is a revenue, we need to also recognize cost of sales. Cost of sales. We need to also recognize expense na, cost of sales. So cost of sales will be equal to what they said. It will be equal to carrying amount of inventory sold. Carrying amount of inventory sold na. बोलना रे. Minus present value of what? UGRB. Present value of UGRB. Means can I say present value of UGRB that is recoverable at the end. And right now, can I say that will decrease our cost only? They will reduce from cost. Reduce from cost. This will be my cost of sales. Means what will be Jana entry? Jana entry. First Jana entry is receivable account debit to revenue. Understood? With the amount of revenue already I have said. Second journal entry, cost of sales account debit to inventory. Correct? But okay, cost of sales means what? Cost of sales already I have given. It means carrying amount of inventory minus what? Present value of UGRB. So again, this amount will be more than this amount. So some difference will be there. The difference will be debited to lease receivable. Means this lease receivable will be present value of UGRB. Present value of UGRB. This will be carrying amount of what? Inventory. And this will be balancing figure. Understood? Are we able to understand? Now, just try to understand. This lease receivable discounted at market rate of interest. Correct? And this will be also discounted at market rate of interest. Means can I say this is this plus this, everyone. This plus this will be equal to fair value. Means this is always exclusive of what? IDC. Exclusive of IDC. Means in case of manufacturer or dealer, what Ind AS 116 is that initial direct cost is never recoverable from customer. You only say whether manufacturer or dealer will recover initial direct cost of lease. Initial direct cost means drafting expenses, legal expenses, etc. Whether they will recover from customer, then customer will say bye bye. But in case of finance, they will recover from customer. I have taken right now loan. I have said now they have recovered everything from me. The entire expense they have recovered from me. Legal cost, drafting cost, insurance cost, everything they have recovered from me. Means they will recover from customer. Therefore, in case of non-manufacture, lease receivable is inclusive of what? But in case of manufacture, it will be exclusive of what? IDC. Means IDC will be accounted separately. So IDC account debit to bank, and this IDC will be charged to PL as an expense on commencement date only. Have you understood this journal entry? If you have understood, now we can discuss. Journal entry we have understood. If you have understood this much, then subsequent accounting is very easy. Correct. Now, suppose the question has been given and question is silent by the manufacturer or non-manufacturer, what will you do? Huh? If question they have given but question is silent manufacturer or non-manufacturer, then what you will do? I will say do manufacturer as per ICAI solution. Means they are giving more preference to what? Manufacturer. Correct now. So suggestion. My suggestion from ICAI point of view. Assume what manufacturer and do it because they have given two questions based on that only. Solution is based on manufacturer. Why to take risk? If question is silent, always apply manufacturer. Don't apply non-manufacturer, or we can write a note. If non-manufacturer, then this is the journal entry. You can write down one note. Are you able to understand what I am saying? Have you understood? Correct. I think you have understood. Let us now discuss. You can see initial recognition of lease, initial measurement on commencement date for non-manufacturer dealer. A lessor shall recognize asset held under finance lease in his balance sheet and present them as a receivable at an amount equal to net investment in the lease. Right. Lease receivable account debit to asset. Journal entry understood? We recognize the carrying amount of underlying asset. Recognize the net investment in the lease. Recognize any difference in the profit or loss as selling profit or selling loss. Net investment means what? Present value of lease payment plus present value of unguaranteed residual value. Present unguaranteed residual value is expected residual value less guaranteed residual value. Guaranteed residual value means residual value guaranteed by lessee or on behalf of lessee or any third party, whichever is higher. The present value of minimum lease payment should be calculated using the interest rate implicit in the lease. Interest rate implicit in the lease is defined as the rate of interest that causes the following. The present value of lease payment made by the lessee for the right to use the underlying asset plus the unguaranteed residual value is equal to fair value plus any initial direct cost. Correct. Come to what? Manufacturer. Initial recognition lease, initial measurement on commencement date, a manufacturer dealer lessor recognize selling profit in accordance with Ind AS 115. In accordance with Ind AS 115 means the revenue will be recognized when control has been transferred, but amount will be as per Ind AS 116. These journal entry they have given. Lease receivable to revenue, this only I have given. Cost of sales, lease receivable to inventory, this only I have given. Then recognize, delete, recognize revenue, write down, recognize revenue. Recognize revenue as the lower of the fair value of underlying asset as revenue or the present value of lease payment discounted by using market rate of interest, whichever is lower. Correct. Recognize cost of sales as the carrying amount of the asset less present value of unguaranteed residual value. Understood? Subsequent accounting. For initial direct cost, can I say initial direct cost in case of finance lease, in case of non-manufacturer dealer, it will be included in what? Lease receivable. So subsequently automatically recognized as a reduction in interest income. It will be automatically recognized now. Means when you will do amortized cost, you will recognize interest income. The interest income will be automatically reduced with that amount. Means no separate adjustment required. Means I will say initial direct cost ignore because already it is included where? in lease receivable. Now lease receivable subsequent accounting you will do at amortized cost. So automatically it will be adjusted in finance income. Understood? Correct. However, for initial direct cost of finance lease in case of manufacturer, initial direct cost related to finance lease incurred by manufacturer dealer are expense on lease commencement date. So that will be charged to PL as an expense on commencement date for manufacturer. That only I have said. चलेगा? अरे बोलना रही. Subsequent recognition, can I say then subsequent recognition will be at amortized cost? We will do lease receivable to finance income, lease receivable to finance income by applying applicable discount rate. Correct? Then for recognition of other payment, any other payment received is variable. These payment which do not vary according to discount rate will be recognized as an income when it is earned. So any other payment received which is not a part of lease payment will be recognized as what? Income when it is earned. Then for lease payment received, bank account debit lease receivable. Then if any impairment required, do impairment as per Ind AS 109. If you remember, under Ind AS 109 we have done impairment of financial asset. I said lease receivable impairment is done as per Ind AS 109. But they will not ask this, don't worry, in exam. Impairment they will not ask in Ind AS 116. Understood? So subsequent accounting is same for both. Only in the initial direct cost you need to be careful. Understood? Correct. I'll take one question, but before let us take operating lease. So operating lease is very simple. Operating lease means what? Total lease payment will be recognized as an income over the lease term either on SLM basis or any other appropriate method. Simple. Total lease payment will be recognized as a income over lease term either on SLM basis or any other appropriate method. Done. I think done. No discussion required. Chalega. Now, finance lease modification. For this modification, they have not given any question. So I will also not consider this. However, it is same to same as what we have done. However, there is some difference, not same to same. You want me to read? Because I don't think they will ask question of modification in the books of lesser because they have not given any question. Do you want me to do? Or I can leave it. Follow yes or no? No question given. Correct? No question given in ICAI study material. Leave it. I know it will not come, don't worry. Okay. But if it will come, don't blame me. Huh? So in regular batch, I teach each and every point. Huh? This crash batch. Difference hai. Correct? There is a difference. So I will read. Don't be what said. Don't be. I will read. But can I take one question for lesser accounting first? Can I take one question for lesser accounting? We'll take one question, then I'll give break. Then balance part we'll do after break. Okay? So let us take one. One question. Yes, come to this question. Question 38. A lessee enter into a 10-year lease equipment with lessee. The equipment is not specialized in nature and is expected to have an alternative use to the lessor at the end of 10 years. It is not a specialized nature. Under the lease, lessor receive annual lease payment of 15,000 payable at the end. Lessor expect the residual value of the equipment is 50,000. This is the expectation of lessor. Lessee provide a residual value guarantee that protect lessor from the first 30,000. This is GRB. So what is UGRB? 50,000 was ERB. GRB is 30,000. What is UGRB? 20,000. Okay, both will be taken at the end of 10 years. Correct. The equipment has an estimated remaining useful economic life of 15 years. And it is given for how many years? 10 years. So 10 by 15 how many years? How many percentage? Okay, is it less than 75%? So it may be what? Finance lease, it may be operating lease. You need to first find out now whether it is finance lease or not. Correct? The lease does not transfer ownership of underlying asset at the end of lease term or contain an option to purchase the underlying asset. Means nothing is given. It is the first criteria not satisfied, second criteria not satisfied, third not satisfied, fifth not satisfied. Only what is left? Fourth. Correct? The interest rate implicit in the lease is 10.078%. Thank you very much. They have given. They have given now. How should lessor account for the same in the books? Now the first question arises whether it is a operating lease or yes, whenever they have given GRB, UGRB, it will be always what? Finance lease. Otherwise they will not do this much mehnat na. If they have given this is finance lease, so only one point is left. You need to apply that point whether the present value of lease payment covers substantially the initial value of leased asset. If yes, it is a finance lease. If no, it is not a finance lease. Understood. But first you need to prove that now whether it is a finance lease or it is not a finance lease. Always it will finance lease, but you need to find out that. So first we need to determine the nature of lease. Are you able to follow what I am saying? Let us determine. Correct? 1 minute. You can see first I find out nature of lease. What I have done? As per India's 116, if on insertion of lease the present value of lease payment substantially cover the initial fair value of underlying asset, then lease will be classified as finance lease. Present value of lease payment. When I say present value of lease payment, it will be present value of lease payment inclusive of what? GRB. So lease payment how much they have given? 15,000 payable at the end of each year. 10 year. What is the discount rate? 10.078%. We can find out, and 30,000 is payable at the end of 30,000 is payable at the end of 10th year. We can find out what? Present value. This is the present value calculated. Understood? So this is present value only lease payment, not UGRB. Correct? Now we'll find out fair value. Fair value is given the question how much? 1,11,000. If you compare these two, it is coming 93.09%. It means it is what? Finance lease. First you need to prove it. Even though you know it is finance lease, you need to write down now. Even though you know it is finance lease, then also you need to prove it. Because question has not said whether it is finance or it is not finance. Understood? Now, accounting treatment in the books, assuming lessor is manufacturer dealer, because question was silent. If you want to do only manufacturer or non-manufacturer, I will say do manufacturer. If you have time permit, I will say give both. But of course in exam time will not permit. So first do what? Manufacturer dealer. So now we need to recognize revenue at lower of what? Fair value of underlying asset given what? 1,11,000. And we need to calculate present value of lease payment discounted by using market rate of interest. If market rate of interest is not given, we'll assume it is equal to what? Interest rate implicit on lease. We should not fight with the question. We should not fight now why you have not given, will not do. So if not given, take assumption. Assumption will be what? Whatever rate is given, that is market rate of interest. This contract is done at market terms. Simple. Correct now? Understood. So present value of lease payment discounted at market rate of interest. Can I say that will be equal to, already we calculated it. That we calculated 1,03,344. Correct. Then revenue will recognize that lower of these two, the lower. Then find out cost of sales. Cost of sales will be equal to carrying amount minus present value of UGRB. So carrying amount they have given 1 lakh in the question minus present value of UGRB. UGRB was 20,000 payable at the end of 10th year. We can find out this minus this. will be equal to what? This become cost of sales. Now selling profit we can find out. Selling profit means what? Revenue minus cost of sales. What is the profit? Profit will be this amount. Understood? Now we can pass journal entry, accounting treatment on commencement date. First journal entry is what? Lease receivable to revenue with the amount of revenue. With the amount of revenue, correct? Then second journal entry for recognition of cost of sales. The cost of sales account debit, lease receivable account debit to inventory. However, can I say this plus this will be always equal to what? Fair value. In this question, initial direct cost is not given, but if given, we should have passed one more journal entry. Initial direct cost account debit to cash or bank. It will be recognized as an expense on commencement date only. On commencement date only. Are you getting what I am saying? Are you able to understand what I am saying? Then at the end of the year, can I say we recognize first finance income? Finance income will be what? Lease receivable to finance income at this rate 1,11,000 is the total lease receivable into this rate. This is the finance income. Then we'll pass one more journal entry for receipt of lease payment. So it is received 15,000. We'll do bank account debit to lease receivable. However, you can compound these two journal entry also. You can pass one journal entry lease receivable account debit, bank account debit to finance income to lease receivable or lease debit or credit as the case may be. You can compound these two journal entry now. Correct? Understood. Done. If you want to calculate finance income at every year, so you can do this. If suppose they ask calculate finance income, you can prepare an amortization cost table. It is as simple as whatever we have done from financial instrument chapter. It will be opening receivable plus interest income minus lease payment. Correct? Understood. Can I say at the end the closing balance will be equal to 50,000? Why 50,000? Because GRB and UGRB is 50,000. Closing balance will be equal to 50,000. Bolo yes or no? Correct? Now just try to understand. Suppose at the end lessee purchase the asset at rupees 30,000 because they have given a guarantee of 30,000. So what journal entry will do? What journal bank account debit? Bank account debit how much? 30,000. To lease receiver 50,000 and the difference will be loss. Suppose lessee have not purchased it. So it will be taken back. So what journal entry will do? Inventory account debit to lease receivable 50,000 and inventory will come at what? 50,000. So at the end, suppose lessee has not purchased the asset or lessor do not want to sell. So lessor will pass one journal entry. Inventory will once again come. Inventory to lease receivable. Lease receivable closing balance 50,000. That will de-recognize and inventory will come at 50,000. Then on that inventory at the end of the year we'll apply Ind AS 2. Cost price or NRB whichever is lower. Understood? Have you understood this point? Have you understood? Correct. Now if it is what non-manufacturer or dealer, then what? That I have done. I have not done. I have done. Next class. But I hope you have understood now. In RTP, one question has been given with initial direct cost. In RTP, whatever question has been given now, that is given with initial direct cost. Now, accounting treatment, suppose it is non-manufacturer dealer. This in exam do only when time permit. Otherwise don't do. Correct na? Simple. Correct. On commencement date now my journal will lease receivable to equipment and the difference will be gain or loss. Lease receivable will be present value of GRB plus present value of UGRB. It will be equal to fair value only 1,11,000. Already I have proved it. If you want to calculate, you can calculate. It will be 1,11,000 only. And equipment carrying amount is the difference will be gain. Yes, subsequent accounting will remain same only. But only one difference, in case of non-manufacturer now, this will be always inclusive of what? IDC. In case of manufacturer, this receivable is exclusive of what? IDC. This is the only difference. Understood? Can I say you can do the subsequent accounting by your own? Correct? Understood? Have you understood? Can we take break? We'll take lunch break. Hmm? Once again, what? What? Manufacturer. Manufacturer you have not understood. Non-manufacturer na. Manufacturer you understood na. So it means better I will do and I will write and do. Chalo. So what I said. Let us take same example. So one doubt came for manufacturer. So but the first journal you will say first journal entry will what? These receivable to revenue. This journal entry you understood. This is on commencement date. This will be equal to what? Present value of lease payment or fair value, whichever is lower. So present value of lease payment. What was the lease payment? 15,000 multiplied by annuity factor plus 30,000 a GRB into present value factor. This you can calculate. This amount was how much? You need to give me amount now. I will give. Now you need to give me this amount. Sorry, so much time you will take. One, 133, 1 lakh, 1,03,340. Now okay. Second journal entry what? You only say cost of sales account debit, lease receivable account debit to what? Inventory. What is the carrying amount of inventory? 1 lakh na? And this will be present value of what? UGRB. What is the present value of UGRB? 7 7660. Present value of UGRB will be 7660 na? What is the cost of sales? 92. This journal entry understood? Suppose in the question IDC given, suppose. Correct. So we'll say IDC account debit to bank, whatever amount given. This all journal entry we are doing on commencement date. So what is my lease receivable now? Lease receivable is this plus this plus this is coming 1,11,000. Now at the end of the year, is year end 1. We'll pass one journal entry bank account. How much we have received? 15,000. To finance income. Finance income will 1,10,000 multiplied by what? What is the interest rate? 10.078%. It will coming how much? 1,10,000 into 10.078%. How much? It is coming 11,085. The difference will be adjusted in lease receivable. So minus what? 15,000 coming what? 3,915. Then this journal entry can be repeated for every year. Correct. This point have understood. Then last point what I have said, this point I hope you have doubt in this. Whether you have doubt in this, what I want to say, when you are calculating this amortization cost table, so can I say last payment is 15,000. The balance will be GRV plus UGRV. That depend upon whether the asset is sold to lessee or asset is not sold to lessee, because this was guarantee given now. It depends upon lessee whether they want to sell or not, because this was not purchase option. One guarantee is given by lessee that if you want to sell, I can purchase at rupees 30,000. But what was the expectation of lesser? 50,000. So automatically the closing balance will be 50,000. Correct. Now, if suppose this asset was sold to lessee at rupees 30,000, because guarantee was given 30,000, we will pass one journal entry. Lease receive bank account debit 30,000 to lease receivable 50,000. The difference will be lost. 20,000 will be lost because that is not recoverable now. But suppose this is not sold to lessee, so they will take back the asset. So asset will come back inventory to lease receivable at rupees 50,000. His inventory will be recognized at rupees 50,000. Understood now? This I was saying. Have you understood now? Correct. Non-manufacturer understood? Non-manufacturer understood. So now can we take break? So we'll take break for 45 minutes. Okay. Can we start once again, everyone? Now before break we have completed up to the accounting treatment in the books of lesser. Lessee we completed, lesser we have completed. In lessee we have done modification also. Now let us come to modification in the books of lesser. However, no question has been given in ICAI study matter regarding modification in the books of lesser. So modification in this also, it can be separate or it can be not a separate lease. Means if modification separate lease, so once again that two conditions, same condition is given. Same condition. What was the condition? Modification increases the scope of the lease and the consideration for the lease increases by an amount which commensurate with the standalone selling price of the increase in the scope. If these two conditions are satisfied, then modification will be accounted as a separate lease. Otherwise, it will be accounted as as an adjustment to original lease. So of course, can I say when we discuss when modification not a separate lease, then what need to be done? So what they are saying, this we are saying modification of finance lease. This first topic is what? Modification of finance lease. So can you say any modification in finance lease may become what? Means due to modification it may become operating lease or it may remain finance lease. If due to modification finance lease remain finance lease, then no issue. Can you say lease liability will be revised? Lease receivable will be revised. We need to revise what? Lease receivable, and that will be present value of remaining lease payment discounted by using revised discount rate. And any increase or decrease in receivable will be transferred to PL. So that is given. If modification, due to modification, it remain what? Finance lease only. Then apply the requirement of Ind AS 109. What they are saying, apply the requirement of Ind AS 109. It means what? Remeasure the lease receivable as present value of lease payment by using revised discount rate. Any difference will be transferred to what? PL. Any difference will be transferred to PL. Understood? But if due to modification the lease become operating lease, the finance lease become operating lease, you can see if the lease has been now classified as operating with the modification on inception date, is what they are saying, it become modification on inception date. Means due to change, due to modification, if you are applying modification on inception date, so on inception date it become operating lease. On inception date it become operating lease. Are you getting what I am saying? So what they want to say in this case, what we'll do? So can you say now we don't require lease receivable, and in our books underlying asset will come. Means can I say asset will, means if it is an operating lease, we are not supposed to de-recognize underlying asset now. We will recognize underlying asset. So what they want to say, account for the lease modification as a new lease from the effective date of modification. So it will be new lease from the effective date of modification and measure the carrying amount of underlying asset at an amount equal to the carrying amount of lease receivable. Means whatever lease receivable is appearing in the balance sheet, instead of that underlying asset will come. So we'll pass one journal entry underlying asset account debit lease receivable at the carrying amount of lease receivable. And now it will be accounted as a what? New lease. Whatever total lease payment remaining, that will be accounted as lease income over the lease term either on SLM basis or any other appropriate method. Correct. I hope you understood. Account for the lease modification as a new lease from the effective date of modification and measure the carrying amount of underlying asset as an amount equal to the net investment. Net investment with carrying amount of lease receivable on the date of modification. So what journal entry will do? Can I say underlying asset account debit? Underlying asset account debit to lease receivable on the date of modification? Simple. I think very simple. No question has been given. But can I say even though asked you can do it? Even though they ask you can do it. Correct. Now let us come to modification of operating lease. So if suppose initially it was operating lease, now it become what? Either finance lease or operating lease. In both cases what they said, account for the modification to an operating lease as a new lease from the effective date of modification. From the effective date of modification. Means suppose operating lease now become finance lease. So can I say we need to find out what? Lease liability, and lease liability will be equal to present value of remaining lease payment discounted by using revised discount rate, and we'll pass one journal entry ROE. Means we need to pass one journal entry what? Lease receivable account debit to underlying asset. Means as if it is a new lease from the effective date of modification. Means apply the requirement of Ind AS 116 from that date only. From that date. Can you see it is also very easy? It is also very easy. If questions asked, you can do it by your own. But no question has been given in ICAI study material. Understood? Any doubt? Now coming to sublease. Sublease means what? What is sublease? Sublease means what? We suppose A has given asset on lease to B. So this is known as head lease. We call it what? Head lease. Means principal lease. In this, he is what? Lesser, and he is what? Lessee. Can you see we have already applied 116 and 116 in the books of lessee. Already we have recognized ROU asset to lease liability. Correct. Now the asset is given sublease on sublease to what? C. So can I say this is known as sublease? We call it what? Sublease. Understood? And this party will now become lesser, and this party will be now what? Lessee. Correct. Can I say in the books of lessee, no doubt, once again apply Ind AS 116. Apply 116 as we have done for B, same will be done for C. But doubt will come, what will do in the books of B on sublease? Understood? So this B is known as intermediate lesser. We call it what? Intermediate lesser. Intermediate lesser. So can I say in case of sublease in the books of B, it can be either operating lease or finance lease. It can be either operating lease or finance lease. Now the question is that we need to classify the sublease as operating lease and finance lease. So we need to classify it as operating lease or finance lease based on underlying asset or ROU asset. Just try to understand. When I say underlying asset is from the point of view of A, and ROU asset from the point of view of B. It means can I say we need to classify it as operating lease and finance lease based on ROU asset, not underlying asset. For example, if suppose the economic life of the asset is 50 years, but a lease term is what? 10 years. Understood? Lease term is 10 years. Now the asset is subleased for 9 years. So 9 years should be compared with 40 year or 10 year. Means you need to find out the major part of the life of the lease term should cover major part of the life of the asset. Then it can be finance lease. So what I am saying, just try to understand. Economic life of the underlying asset was 50 years, but lease term was how much? 10 years. Now it was subleased for 9 years. So to find out whether it is an operating lease or finance lease for intermediate lesser, we should compare 9 by 50 to 9 by 10. 9 by 10, because with respect to ROU asset, so if any asset which was taken for 10 years given for 9 years, it will be finance lease only. So can I say we need to classify it as operating lease or finance lease based on what? ROU asset, not based on underlying asset. This point have you understood? Yeah. Have you understood? Now can I say if it is classified as operating lease, so can I say ROU asset will not be de-recognized? ROU asset will not be de-recognized, correct? And simply, can I say total lease payment will be accounted as lease income over the lease term of that sublease, either on SLM basis or on any other appropriate method. But can I say lease liability and ROU asset will not be de-recognized and will continue to recognize interest expense and depreciation on this if it is an operating lease. Not understood. Once again, everyone. Can I say when it was head lease? So in the for head lease already we have accounted what? ROU asset and lease liability in the books of B. Correct? Already ROU asset and lease liability is coming in the books of B. Now that ROU asset has been given on operating lease. The question arises, will you de-recognize ROU asset? No, because it is an operating lease. So can you see, we'll continue to recognize ROU asset and lease liability in the books of B, and we'll continue to recognize depreciation on ROU asset and interest expense on lease liability, and whatever total lease payment for sublease will be accounted as lease income over the lease term, either on SLM basis or any other appropriate method. Simple. But if it is classified as finance lease, so can you say will de-recognize ROU asset? Means will pass one journal entry lease receivable account debit to ROU asset, and lease receivable will be accounted at net investment. Net investment will be present value of lease payment for sublease discounted by using what? Interest rate implicit on lease or interest rate implicit on lease, correct? To ROE asset at carrying amount, any difference will be what? Gain or loss. Are you able to understand what I am saying? And can I say now in the books of B, lease liability will also come and lease receivable will come. On lease receivable, interest income will be recognized, and on lease liability, interest expense will be recognized. Are you able to understand? Have you understood this point? Have you understood? Huh? One second. Now, one second. One second. First thing, we are doing journal entry in the books of B. So initially he was lessee. Already we accounted ROU asset, account debit to lease liability. This too we have already understood. Now It can be either operating lease or finance lease if the asset is subleased. If it is operating lease, you will not derecognize ROU asset, will not derecognize lease liability. So can I say on ROU asset will continue to charge depreciation, on lease liability will continue to charge interest expense, correct? And total lease payment which is receivable for sublease will be accounted as lease income over lease term either on SLM basis or any other appropriate method. This you have understood. Now if it is given on finance lease, so of course if finance lease we need to de-recognize ROU asset and we to recognize lease receivable. So what journal entry will do on commencement date of sublease? Lease receivable to what? ROU asset. ROU asset will de-recognize that carrying amount and lease receivable will be net investment. Correct. It means now in the books of B, in the balance sheet, there will be one lease receivable, there will be one lease liability also, because we will not de-recognize lease liability. On this lease receivable, we will recognize interest income, and on this lease receivable, lease liability will recognize interest expense by using appropriate rate. Understood that I am saying? Correct. Understood. Once again, there is no proper question on sublease, but even though they ask, we can do it by our own. Even though they ask, there is no proper question given. Understood? I hope you have understood what they have given. A sublease is defined as a transaction for which an underlying asset is released by the lessee. Lessee is known as now intermediate lessor to a third party, and the head lease between the head lessor and the lessee remain in effect. If the head lease remain as it is, there is no changes in head lease. Understood? Can you see now we need to do accounting treatment in the books of intermediate lessor? For that we need to do classification of sublease. What they said is the head lease was a short term lease. So can you see if the head lease was accounted as a short term lease in the books of lessee, correct? Now become intermediate lessor. Lessee become intermediate lessor now. Suppose originally the head lease was short term lease, so we have taken a recognition exemption. So what they are saying, if it is a short term lease, it will be always classified as what? Operating lease. So if the head lease was short term lease in the books of B only, then it will be always classified as operating lease. But if the head lease was not a short term lease, then apply the classification criteria. Apply the classification criteria. It can be operating lease, it can be finance lease, but classification criteria should be applied by reference to what? ROU asset, not with the reference of underlying asset. This point have you understood? Have you understood? Now coming to the accounting treatment. If the sublease is classified as finance lease, what will do? We recognize ROU asset, correct? On commencement date of sublease, recognize lease receivable at net investment in sublease. Now we know what is net investment in sublease. Present value of lease payment discounted by using interest rate implicit on the lease. What journal entry will do? Lease receivable to ROU asset. Correct? बोलना रे. Respond. Otherwise you will sleep. Respond. Otherwise you will sleep. Huh? Respond. What journal entry will do? Lease receivable to ROU asset. First thing, it is not easy to teach 8 hours. And it is not easy to listen also 8 hours. So both are at this comfort stage. You don't think that I am at comfort stage. Huh? So it is matching concept. If you will sleep, I will also sleep. अरे बोलना रे. If you will sleep, I will also sleep na. So it is matching concept. The accountant always apply matching concept. If you will sleep, I will also sleep. And if I will sleep, you will sleep. अरे बोलना रे. If I am discussing, you also discuss. Don't sleep. Start talking. Means respond to me. Don't think, respond. The journal entry is what? Lease receivable to ROU asset. Respond with me. Lease receivable account debit to ROU asset. This journal entry you understood? Then subsequently recognize finance income on sublease and finance expense on head lease. This understood? That only I have said. Now if sublease was classified as what? Operating lease. Correct? But will you de-recognize ROU asset? Will you de-recognize the lease liability? Can I say ROU asset and lease liability will remain in balance sheet. On ROU asset, we'll calculate what? Recognize depreciation and finance expense on head lease and recognize lease income on sublease by applying the method either SLM or any other appropriate method. Understood? Correct. Now, can I say accounting treatment in the books of this party C will remain same as we have done for what lessee? Means this accounting treatment will be same whatever we have done previously for lessee. Now, next point is sale and leaseback transaction. This is also very important. Already important. And already one question have been asked from this topic. Means from my point of view, all good questions have been asked in exam. So now in the next exam, what question they are going to ask, that we don't know. So from this chapter, all expected questions have been already asked. So either they will give super easy question or they will create a new question. If they will create a new question, so you need to apply your common sense and do it. Correct. Sale and leaseback transaction. I hope you all know about sale and leaseback transaction. What is sale and leaseback transaction? An asset has been sold by one party. Means there are two parties. One is seller, one is buyer. Seller and buyer. So seller will sell the asset and immediately the asset will be leased back. Lease back. Means seller will become what? Lessee. Buyer will become lesser. Understood? Correct. So in this case, what need to be done, that we need to understand. So what Ind AS 116 says that this sale will be accounted either as revenue or not as revenue. Means what they want to say. First see whether control of asset has been transferred. Control of the asset has been transferred. If the control has been transferred, so can I say it is a sale and apply Ind AS 115. But if the control has not been transferred, so can I say we should not de-recognize asset from the books of seller, and this buyer will also not recognize any asset. So it will be considered as financing transaction. Financing transaction. Correct? We just try to understand everyone. I'm in immediate need of money. Immediate need of money. And I have one asset. So I will transfer the asset to you. Actually, I will not transfer. I will transfer only the ownership of the asset to you. But asset will be remaining with us now. I will transfer the ownership and I will just ask the consideration for that. But the control is not transferred now. If the control is not transferred, the asset is given only as a security. So will you de-recognize the asset? No. In that case, whatever consideration received by the seller or consideration paid by the buyer will be accounted as financial liability and financial asset as per Ind AS 109. Simple. Understood? Only this much. This topic is over. Means what they want to say, first find out whether the control of goods has been transferred. If not transferred, the entire transaction will be accounted as financial asset and financial liability in respective book as per Ind AS 109 and no adjustment required. Understood? But if the control is transferred, then we to recognize revenue and the asset is now again leased back. In this case, some adjustment is required that we need to understand. In exam, of course, they will ask this, they will not ask this. Because if they will ask the second point, it is nothing but Ind AS 109. And that is very easy. Are we able to understand what they want to say? A sale and leaseback transaction involves the transfer of an asset by an entity to another entity and leaseback of the same asset by the seller or lessee. Now, first, whether the transfer of an asset is a sale as per Ind AS 115. First, we need to find out what they said. Whether the control has been transferred to buyer or lessor. If the answer is no, then both account for transaction as a financing transaction and apply Ind AS 109. Over. Means asset will not be de-recognized in the books of seller or lessee. Whatever consideration received will be financial liability. Asset will not be recognized in the books of buyer or lessor, and they will recognize financial asset whatever consideration has been paid. Apply Ind AS 109 for subsequent accounting. Means financial asset, financial liability. Now you know subsequent accounting. You can do it. But if control has been transferred, then transaction is accounted as sale and purchase of the asset in the respective books. Correct. This much you understood? Now it means now we need to understand if the control is transferred, then in the books of what? Seller, what will do? In the books of buyer, what will do? Correct. Now what they say, in this transaction, you need to first see whether it is at market terms or is it not at market terms. Are you getting what I am saying? Means if the sale price is equal to or more than or less than fair value. If sale price is equal to fair value, then it is at market term, then no adjustment required. But if sale price is equal to or more than fair value, then it is off market terms. Some adjustment is required or not? Some adjustment is required. Are we able to understand what I am saying? Correct. It means we need to first find out whether it is at market terms or it is not at market terms. If market terms, no adjustment. But if it not at market terms, there can be two situations. Sale price is more than fair value or sale price is less than fair value. Are you able to understand what I am saying? Are you able to understand? Now, if suppose fair value is equal to 10 lakh and sale price is 12 lakh, means we are receiving more than fair value. So what Ind AS says that you should recognize revenue at 10 lakh only. Means what will be your journal entry? How much you have received? 12 lakh. But what will be your revenue? Revenue will be at what? 10 lakh. But you receive more. So this whatever extra amount you receive, that will be what? So this will be additional loan. Means this will be what? Additional financing, additional loan. So this will 2 lakh will be additional loan received. And in this additional loan, this will be financial liability. Financial liability. Are we able to understand? Correct. Additional amount received, na? Whatever additional amount received, that will be additional loan received from whom? From buyer, na? Agree? Same thing. Same thing. What journal entry in the books of? In the books of purchaser. Batao. They will pass journal entry. Asset will be recognized. Asset will be recognized at fair value 10 lakh. but they have paid how much? 12 lakh. Whatever extra amount paid will be additional loan given. Additional loan given. This point have you understood? Correct. Now, in this case, if the sale price is what? Less than fair value. So if the fair value is suppose 10 lakh and sale price is suppose 8 lakh. But we recognize sale at what? We recognize sale at what? Fair value only. Means how much you have received? 8 lakh. But your revenue should be how much? 10 lakh. Means the difference is what? 2 lakh. So this 2 lakh will be what? This 2 lakh will be considered as prepayment for lease. And any prepayment will be adjusted to ROU asset or not. So this will be debited to ROU asset. This will be debited to ROU asset. This is prepayment now. So any prepayment will be adjusted to what? ROU asset. Means you can add on prepayment, then automatically that will be adjusted to ROU asset when you will do the journal entry of what? Better you add on prepayment. But this will be adjusted to ROU asset or not? Prepayment. Are you able to understand what I am saying? 2 lakh. What journal entry in the books of buyer? Batao. So asset will come at what price? Bolo? 10 lakh. How much you have paid? 8 lakh. Correct. The difference will be, can I say, it will be pre-received amount and that will be automatically adjusted with lease receivable. So this will be what? Pre-received and this will be automatically adjusted with what? Lease receivable. Are you able to understand this point? Have you understood? So first thing you need to do off market adjustment. Off market adjustment you understood? So let us first read what they have said about off market adjustment. So transaction in which transfer of an asset is a sale. So I have just first informed you about off market adjustment. Off market adjustment. So off market adjustment means what? Off market adjustment is what? Sale proceed. The entity shall make the following adjustment to measure sale proceed at fair value. If sale price is not equal to fair value or the payment of lease are not at market terms. Normally they will inform you about this in exam, but payment may not be at market terms. We suppose lease payment should be 10,000 at market term, but they are charging 12,000 or they are charging 8,000. So this means these are not at market terms. Correct. Is what they want to say. In the books of seller lessee, when sale price is greater than fair value or present value of lease payment is greater than present value of lease payment at market terms. In this case, seller lessee recognize the difference as a reduction in the sale price and an additional financing received from the buyer lessor. That only I have said. This only I have said now. Means this first case now. The how much you have received 12 lakh, but the difference will be reduction of revenue now. Means the 2 lakh will be considered as reduction in revenue and will be considered as additional financing received. Only I have said. Second, when the sale price is less than fair value or present value of lease payment is less than present value of market lease payment at market terms, then seller lessee recognize the difference as the increase in the sale price and the initial measurement of ROE asset as a lease prepayment. That only I have said now. So how much? The second case. So it will be considered as increase in sale and the difference will be considered as initial means initial measurement of ROE asset as lease prepayment. That only I have said. Same thing is given for what? Buyer or lessor. This will be recognized as a lease prepayment made by seller or lessee or additional financing provided to the seller or lessee. If this is this point, this is this point. Understood? Have you understood? Have you understood? Now we need to understand after doing off market adjustment, what need to be done. For that I will take one question. This balance part you will understand only I will when I take question. Otherwise you will not be able to understand. Correct? So can I take one question? This is the last question for the Ind AS 116. 42. An entity sells a building to another entity for cash 30 lakh. Immediately before the transaction, the building is carried at 15 lakh. 15 lakh is what? Carrying amount. At the same time, seller lessee intend to contract with buyer lessor for the right to use the building for 20 years with annual payment of 2 lakh payable at the end of each year. It was leased back for 20 years, 2 lakh payable at the end of each year. Correct. The terms and conditions of transaction are such that the transfer of building by seller lessee satisfy the requirement of Ind AS 115. Means the control has been transferred. If control not transferred, then it become very simple question. Huh? Because then whatever consideration received will be loan. Understood? Then apply Ind AS 109. Then become very easy. Then fair value of building is 27 lakh, but the sale price is what? Sale price is what? Sale price I'm asking you are giving fair value. Agreed sale price 30 lakh, which is more than what? Fair value. Off market terms, the sale price is more than fair value. The difference is what? Difference amount is what? 3 lakh. That will be considered as additional loan received from buyer or lessee. Buyer or lessor, sorry. Initial direct cost, ignore, thank you very much, ignore. The interest rate is what? 12%. Buyer or lessor classify the lease of building as an operating lease. Means in the book of lessor, so we need to find out whether it is an operating lease or finance lease. Thank you very much, they have given operating lease. Correct. How should a said transaction will be accounted? Have you understood the question? Question is very simple, na? Question is simple. Got it? So let me come to the solution. Now, first we'll do off market adjustment. Always do off market adjustment. So in this question, sale price is more than fair value. So this 3 lakh will be additional financing. Now we'll calculate lease liability. Lease liability will be present value of lease payment, which is payable at the end of each year for 20 years, discounted by using interest rate implicit on lease. That is given in the question. But can you discount 2 lakh at 12% for 20 years? So this will come this 14 lakh 94,000. But now listen. Okay, this is a total. This is listen. Calculation you can do. Now listen. This is the total amount payable. But now just try to understand. This 14 lakh 94,000 consists of two components. One is lease component. One is non-lease component. Then is out of 14 lakh 94,000, 3 lakh is payable for additional financing received. So out of this 3 lakh is loan component and balance 11 lakh 94,000 is lease component. Means your lease liability is what? And your financial liability is what? 3 lakh. Financial liability means Ind AS 109. Lease liability means what? Ind AS 116. However, accounting remains same. But you need to understand now, out of 14 lakh 94,000, 3 lakh is for additional loan and 11 lakh 94 is for lease. Correct. It means this 2 lakh some amount is payable for lease, some amount is payable for loan. You need to bifurcate that amount based on this fair value, based on this ratio. So you can see I have done correct. Segregation of annual lease payment of rupees 2 lakh into lease and financing component. You can see lease component and loan component. Fair value is 11 lakh 94,000 and 3 lakh. Total annual lease payment is 2 lakh. This 2 lakh will be allocated in this ratio. It means out of 2 lakh, how much received for lease? Sorry, how much paid for lease and how much paid for loan? Understood? This point have you understood? Now, now we need to calculate ROU asset. ROU asset. Now, this is only the interesting point. If you can understand this, solution is over. Now, ROU asset, just try to understand. This is my asset. I am the seller. This asset is with me. Correct? So, what was the economic life of the asset? It is given the question. Economic life is not given. Let us assume economic life is 30 years. Okay. Means right now this asset is with me and I can use the asset for 30 years. Now I have sold the asset and once again this asset came back to me and now I can use only for 20 years. Means can I say I have only transferred the right for 10 years. Means I retained the right for 20 years. 1 second. The economic life of this asset is what? 30 years. I have sold it and again this came back for 20 years. Means I have retained the right of my own asset for 20 years. Means I have transferred the right only for 10 years. My question to you all, gain or loss will be calculated for 10 years or 20 years? Not able to understand. Okay, if I will say, you will say correct. I'm just asking questions so that you can apply your own brain. 1 second. What I am saying, this is one asset. Asset means right to use now. My own asset. I can use this right asset for how many years? 30 years. I have sold it and again taken back this asset for 20 years. Means I have retained for how many years? And I have transferred for how many years? 10 years. So gain or loss will be calculated for retained portion or transferred portion. Transferred portion means can I say we should calculate gain or loss only for transferred portion, not for retained portion. So what Ind AS 116 says that this carrying amount should not be changed. Whatever carrying amount means carrying amount is 15 lakh, I think so. So this 15 lakhs should be allocated to retained and transferred portion. Are you able to understand? Retained and transferred portion. My question to you, what is the fair value of this asset? Fair value 27 lakh. So this fair value is 27 lakh for how many years? Fair value asset is for 30 years now. 1 second. They have given fair value how much? 27 lakh. This fair value is for 20 years ki 30 years? 30 years. And what is the present value of lease payment? 11 lakh 94,000 lease component. Means whatever we are paying, that is for how many years? 20 years. Means that become fair value for 20 years. If we know fair value for 30 years, and if you know fair value for 20 years, can you allocate carrying amount in that ratio? Means what they want to say, underlying asset, what is the fair value? ROU asset, what is the fair value? 11 lakh 94,000. The carrying amount is given 15 lakh for 30 years now. 15 lakh is for entire asset, means underlying asset. So what is the carrying amount for ROU asset? We can calculate by cross multiplication. Means what will do? This into this, divide by 27 lakh. Are bolna rahe? So this become carrying amount of ROU asset which is retained. So can I say carrying amount of ROU asset should be measured at 6,63,333? Bolo yes or no? Means 15 lakh multiplied by 11 lakh 94,000 divided by 27 lakh. Or I can give you one formula. Oh, this is not formula, this is concept. I can give formula, calculate the carrying amount of ROU asset equal to this formula. Formula is what? Carrying amount multiplied by present value of lease payment divided by fair value. But this is not formula, this is concept na. Understood? So can you see this is the carrying amount of retained portion. What is the carrying amount of transferred portion? Carrying amount of transferred portion will 15 lakh minus this. Have you understood? So what Ind AS 116 says that we should calculate gain or loss only for transferred portion, and we should measure the ROU asset at carrying amount of asset retained. Means ROU asset will come in the balance sheet at what? 6 lakh 63,333, because in this we should not calculate any gain or loss now. Whatever you have retained, should we calculate any gain or loss on that? So can you increase this? Can you decrease this? Are bola re? No. And whatever transferred, on that only gain or loss should come. Now what will be journal entry? This much you understood? Journal entry. Journal entry will what? Batao. Can you say bank account debit 30 lakh? Correct. Building will be de-recognized at 15 lakh. But out of 30 lakh, what is my financial liability? 30 out of 30 lakh, what is my financial liability? Means you receive 30 lakh na, but out of that 3 lakh is what my financial liability. So my financial liability is 3 lakh. Not understood. Journal entry. Journal entry is what? How much you have received? How much you have received? 30 lakh. Out of this 30 lakh, what is my loan? That will be financial liability na? Now understood. Balance whatever we have received, that is for sale. So you have transferred the asset. Means you will de-recognize your underlying asset. What is the carrying amount? So what is the difference? Difference what? 12 lakh. This 12 lakh will be considered as gain. Gain. Understood. Now you will recognize ROU asset. But the ROU asset at carrying amount already we calculated. How much? You have written 6 lakh 63,333. This is correct. Huh? And our lease liability will be what? 11 lakh 94,000. You can say total liability is what? Understood? Are you happy? And this difference will be loss. Loss how much? 5,30,667. So what India says that your net gain will be this. Means you should transfer this much gain to PL account. So your gain will be 12 lakh minus what? 5,30,667. Have you understood this point? And this gain is for the portion which you have transferred. 12 lakh is not your gain. Your gain is only to the extent of what? This minus this. Have you understood? Have you understood? Now, can you say we need to do subsequent accounting? Batao. Subsequent accounting means at year end. So can you see you have one lease liability and you have one financial liability. This is 11 lakh 94,000. This is 3 lakh. Can you say on this you will calculate interest? On this also you will calculate interest. What is your discount rate? 12%. How much interest on this? How much interest on this? One lakh 43 280. And on this how much? 36,000. And for this lease payment, we have already calculated. For this also lease payment already we calculated. We are already bifurcated. We have done bifurcation now. How much bifurcation we have done? Already we have done bifurcation. This amount. See how much we are receiving for lease component, 1,59,840. How much we are receiving or paying? 40,160. What journal entry? Now you can understand the journal entry. This journal entry you understood? This journal entry you understood? Not year end. At year end. Interest expense 1,79,280. To lease liability this much, to financial liability this much. Then lease liability will be reduced by, and financial liability will be reduced by, to what? Bank 2 lakh. Why we want separate accounting? Because this is disclosed on the face of balance sheet, and this is disclosed under financial liability in balance sheet. So because presentation is different, therefore you want lease liability separate and financial liability separate. I mean lease liability is also financial liability, but this is disclosed as a separate item on the face of balance sheet, and financial liability can be disclosed under the head borrowing. After borrowing we write down lease liability, and because of that separation is required. But have you understood this journal entry? Now in the books of what? Depreciation we can calculate on ROU asset for 20 years, correct? Now in the books of buyer, here is the buyer easy entry because operating lease. Now in the books of buyer, building will come 27 lakh, to bank 3 lakh, and this will be financial asset 3 lakh. Understood? Have you understood? Now because it is an operating lease, initially no journal entry, but subsequently at year end, the total lease payment. But total lease payment how much? How much? What was the 1 lakh? How much 1 lakh? What was the 2 lakh was allocated to lease payment? How much 1 lakh? 1,59,840 into 20 will do. This is the total lease payment. Divide by 20 because SLM basis. So can you say this will be recognized as an income over lease term? So what journal entry we have done? Bank account debit lease income. Because both are same, therefore there is no difference. Your payment is also 1,59,840 and your lease income is also 1,59,840. And whatever extra you have received, that is for which component? Loan component. So bank account debit to interest income to financial asset will do. Have you understood this journal entry? Not understood. One second. Have you understood this journal entry? Let me explain by writing. So can I say? First journal entry is what? Building account debit how much? 27 lakh. To what? Bank how much? 30 lakh. And to financial asset how much? Correct. This is the first journal entry, year 1, then year end 1. Now on financial asset we recognize interest income. So how much you have received for financial asset? It is 40,000, 160, 160. To finance income will come, that is 3 lakh into what? 12%, that is how much? 36,000. To financial asset how much? 4,160. Now have you understood? When I write you will understand now. When I don't write you will not understand. Same with me. When I write I focus more. Therefore writing and understanding is more good. But what we do CA final, once we come to CA final we become auditor. We don't write and practice. We read and practice. And therefore multiple attempts. When I was in CA final, I have never done this type. But once we become CA, फाइनल में आते, we become auditor ना. Auditor में what we do? Tick, 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 tick. Don't write and practice. It is correct. 70% of CA final students don't write and practice. अच्छा, how many of you write and practice? Write and practice. Do write and practice? You? Write and practice you? Huh? SFM? SFM read and practice. And FR? Let's just try to understand. That means overall what happened, what I have seen, CA final student, they don't write and practice. If they will not write and practice, multiple attempt आएगा. You should write and practice only. From बचपन से याद करो, from nursery to CA inter, you have done write and you have written and practice each and every question. But I don't understand what happened to CA final. Once we intend to CA final, we forget about writing and practice. We think solution is given. We did acha this. We are to Paramatma. We can understand anything. We are not Paramatma. We are Atma. Are you getting this point? We are Paramatma or Atma? बोलना. We are Paramatma or we are Atma? We are only Atma. We require a lot of practice. And practice means, acha, if you know any cricketer, they will go to nets and practice na, or they will sleep and practice like this. They will go to nets in the morning and practice na. So we as a CA student, we should do, or we should write and do, because our exam is not oral, it is a written exam. That I am saying. So always be a student if you want to pass. But have you understood? Same thing I also follow. Means I also whenever practice new question na, suppose new question came. Even now also I will never read. I'll first read question, do by my own, then identify what mistake I have done. Abhi recently one RTP November 2002 came na, so I have done one YouTube video. Before that I practiced all the questions. Then I came to video. If I do some mistake in the video, what will happen? What impression will be created? So I will first practice and then will come. These all questions we have done a lot of practice. Now, new question I am saying. Are you getting what I am saying? Now, year end 1. Can you say now what is the total lease payment receivable for lease component? It is how much? 1 lakh into 20 divided by 20. And this is what we have done. Means it can be different amount also now. Then also you will do divide by 20. Means suppose if you are receiving 1000, 2000, 3000. So we will do divide by 3 na. So it may change. Whatever you have received, that may not be the income. The total lease payment divided by 20. So in this question it remains same. So whatever you receive, that become lease income transfer to you. Understood? Correct. Now I hope you have understood all the points. So you can see this also over. Now if you read, you will understand. You can say major ROU asset arising from leaseback at a proportion of the previous carrying amount of the asset that relate to ROU retained by the seller lessee. If you read now, you will understand. Whatever I have said, that is only written. Okay. Have you understood? Have you understood? So one question have been given. Same to same question will be asked if they ask in exam. Correct? Understood. Then point number 13, for this there is no question in the ICAI book, so they will not ask, but what they want to say. Lease classification test for land and building. But this is only applicable for lesser. Why? Because classification we do in the books of lesser. Now if land and building is given a lease, so how to apply classification criteria? So what they want to say, first, can you determine the fair value of land element or building element in lease? Means can you separate it? If yes, then classify each element as finance lease or operating lease separately. Means land will be separately classified building will be separately classified. Normally, can I say land will be always operating lease because economic life is indefinite. Suppose suppose any land has been given for 99 years, but land life is unlimited now. It is operating lease only. Normally, land will be an operating lease. Normally. If suppose with that 99 year there is some purchase option also, then it become what? Finance lease. That become finance lease. But normally if there is no purchase option wala point or ownership is not transferred at the end of lease term, then will be normally what? Operating lease. But suppose if you cannot calculate fair value of land element and building element in that lease, then what they said, if both, sorry, what they want to say, both elements are operating lease, and suppose if both elements are operating lease, then entire lease will be classified as operating lease. But both elements are not operating lease, means one of them is finance lease, not both. One of them is finance lease, then entire will be what? Finance lease. Understood? No question has been given. Can be asked, can you do it by your own? But this is only applicable in the books of lessor. In the books of lessee, it will be ROU asset. ROU asset now. Correct? Got it? And ROU asset is always depreciated. Even though land is an ROU asset, it will be depreciated now because it is for limited period. Understood? Yes, sir. Then COVID-19 related rent concession. There was one amendment, but now I don't think so. Question will be asked from this point because now there is no COVID-19. Now there is no rent concession. So from my point of view, no question will be asked. However, already a question have been asked. So now I don't think so. They will ask any question from this. This is not at all important. You want me to do this? I don't think so. Because now there is no COVID-19 now. There is no lockdown. A concession means what was there when there was lockdown now. So some concession was given to the lessee. You are not supposed to pay rent for 3 months or 4 months. Correct now. The question arises whether that will be modification or that will not be a modification. So some relaxation was given. If this condition satisfied, it is not a modification. Don't apply modification accounting in the books of lessee. Relaxation was given only for lessee, not to lessor. This was amendment. One para was added in under Ind AS 1. But now I hope you are understanding. Now they will not ask the COVID-19. Khatam ho gaya baba. Yes or no? Correct. But already one question have been asked, but I don't think they will ask the question. Presentation and disclosure you can do by your this chapter completed from my point of view. I have covered each and every point. I have taken questions also so that now you can have a grip on this. Only practice required. Practice you are supposed to do it na by your own. So can I conclude Ind AS 1 is completed? Can we come to another Ind AS? We'll start Ind AS 12. Important chapter Ind AS 12. Ind AS 12 means what? Income tax. Can we start? Now, when I am coming to Ind AS 12 now, it requires more practice than discussion. Means practice is more important than discussion. Are you getting what I am saying? So if I will take more questions, it will be more clear. And therefore I will take some questions, but I need to give the just basic of this chapter. One thing you know that now tax expense means current tax and deferred tax. Current tax means any tax calculated as per income tax requirement. Means whatever tax is payable as per income tax act, that is known as current tax. Okay. Deferred tax means what? Any tax on temporary difference. Temporary difference. Acha, have you done AS 22? AS 22? AS 22 accounting standard. You have done? Not done? Okay, then I will not discuss. So what Ind AS 12 says that any tax on temporary difference is what? Deferred tax. So what is temporary difference? Temporary difference means difference between what? You know what they want to say? You first calculate carrying amount of asset or liability. This carrying amount of asset liability will be as per respective Ind AS. Then find out tax base of asset or liability. The difference of these two will be what? Temporary difference. Correct? Understood? Now, if this temporary difference are taxable in future, if this difference are taxable in future year, taxable in future year means this will be added to the taxable profit in future. So it means it is known as taxable temporary difference. And on taxable temporary difference, we create DTL, deferred tax liability. Are you able to understand this point? But if this temporary difference are deductible in computing the taxable profit of future, it will be deductible while computing the taxable profit in future. So guys, if it is deductible, so it will reduce our future tax. If it will reduce our future tax, it is a tax benefit. Any tax benefit is an asset. So what they are saying, it may be deductible temporary difference. Then we'll create DTA on this. Understood? Now when it will become taxable, when it will become deductible, that we need to understand. I'll give one rule. Please, थोड़ा सा this chapter I'll teach you from examination point of view. Because if I'll do detailed discussion right now, that is not required. Because थोड़ा understanding you have because you have done it. So I will say in exam now, normally we do mistake in identification of taxable and deductible. So I will always say make one table. Make one table. Understood? And write on here taxable temporary difference and deductible temporary difference. Are you getting what I am saying? Correct? Understood? And write on here asset and liability. Now we need to understand when the difference of an asset will be what? Taxable or deductible. And when the temporary difference of a liability will be taxable or deductible. That we need to understand. Correct. Only if you remember, if you just write down this and write down, if carrying amount is more than tax base for asset, it will always result in taxable temporary difference. This carrying amount is more than tax base, then it will be taxable temporary difference. If you know this, you can identify the other. Just reverse it. So this will be carrying amount is less than tax base, and this will come यहाँ पर, this will come यहाँ पर. Are you able to understand? So this will be carrying amount is less than tax base and carrying amount is more than tax base. Yes, this rule is very simple. Rule is simple. But normally I have seen students do mistake in identifying this only. So only you need to memorize what? I am thoda sa ratta fixation for this. Because marks is also important to become CA na. If you know the concept, but if you are not able to apply that, then become dangerous. Correct? So only just remember this format and this. Can you see if you can write on these, other you can write on by your own. So whenever questions come now in Ind AS 12, First you write down this and then solve the question. So whenever questions come for Ind AS 12, I will say first write down this table somewhere. Then you can apply this. Because sometimes when we think ना एग्जाम में क्या नहीं चलता, एग्जाम में your mind does not work properly. होता है, if I am also a student and I am also in exam hall, my mind will also not work. We also went to the same phase as you are going on. Same thing. Just try to understand, no chartered accountant is perfect. Even a rank holder is not perfect. Correct na? If you know, if I will disclose my marks, I got very good marks in accounts, FR. I got very good marks in tax. But if you ask me other subject, I will not disclose. I will not disclose. You ask me FR, I will say 93. You ask me tax, I got 67. Correct na? Other subject you ask, I will not disclose. What can I say? Because I performed very well in FR and this, my aggregate was good. But I was not perfect in other subject na. You ask me costing, nightmare. Nightmare. But I got 40. 40 or 44, I forgot, but less than 50. So what I want to say, you are not supposed to become perfect, but you should be able to score what, 40 or more than 50. Are you getting what I am saying? This is CA exam. You are not supposed to become perfect in all subjects, but we should attempt in such a way that our aggregate is coming 50%. Therefore, I always say two subjects should be your benchmark. Two subject. My benchmark subject I have already decided: FR, SFM, and tax. And IDT was also there. In all these four subjects, I score good. Balance subject average marks. Are you getting? So you need to perform in your benchmark subject, but other subject also you need to carry on. Carry on that na. Have you understood this? Now, if you ask me reasons of why it is taxable, so I'll just give you one point. Suppose let us assume there is one machinery whose carrying amount is what? 1 lakh. And whose tax base is what? 1,20,000. So what is tax base? That too we have not understood only. So you are saying tax base, tax base, tax base. Tax base means what? If you prepare your books of account based on Income Tax Act, what is the value of that assets and liability? Means suppose you purchase one asset of rupees what, 2 lakh. As per books, your depreciation till now is 1 lakh. And as per income tax, your depreciation till now is 80,000. Understood? But what is carrying amount? What is carrying amount? 1 lakh. What is tax base? Means if you prepare your books of account as per Income Tax Act, then your depreciation is how much? 80,000. So your tax base become 1,20,000. Simple. Means if you prepare your books of account as per Income Tax Act, what is the value of that asset and liability? That become tax base. Understood? Are you able to follow me? I will take some example for tax base, but first I need to inform you what is tax base. Now, so why? Now the question arises, whether it will be taxable or deductible. So if you apply this rule, you need to apply this rule. This is the rule. So this is taxable or deductible. So this difference become deductible. Temporary difference. How much? 20,000. So why it is deductible? Just try to understand. As per income tax, you will get a deduction of 1,20,000 in future. But as per accounting, you will get a deduction of 1 lakh. Means how much extra deduction you has been allowed? 20,000. So extra deduction will be deductible in future. This 20,000 is deductible in future. Deductible means less tax. Less tax means asset. Therefore, it becomes deductible, on which we need to create what? DTA. Understood? Correct. So I think one example I have just taken to explain you why it will be taxable, why it will be deductible. Understood? We can reverse it also. Suppose this is what now carrying amount is 10 lakh and tax base is suppose 8 lakh. So of course now as per table you understood this is taxable temporary difference 2 lakh. So you can see now as per income tax only 8 lakh will be allowed in future, but as per account 10 lakh means 2 lakh will be disallowed. Disallowed means it will be added while calculating taxable profit in future. It is taxable now, it become taxable. Untaxable create what? DTL. Understood? I hope the concept you understood. Concept you understood? Correct? This much any doubt? No doubt. Means this to all definition is there. Then current tax, I think current tax you can do it by your own. Deferred tax. You can deferred tax they have given how many steps? 9 steps. 9 steps they have given. So deferred tax means what? First calculate carrying amount. First calculate carrying amount. Carrying amount will be given the question only or you can calculate by your own. Then tax base. This is only the point where we need to work hard. Then compute temporary difference. That the difference you can calculate. Then identify whether it is taxable, deductible. I have given the rule. It can be either taxable or deductible. Rule you have understood. Okay. Then from examination point of view, these all steps are not important. If it is taxable, to apply rate of tax, this will be what? TTL. If it deductible, apply rate of tax, it become DTA. DTA. But there is one very important point about the recognition of DTA and DTL. Normally they don't ask question on this, but then also very important. What they want to say? Everyone, if I come to step number 4, principle for recognition of DTA and DTL. What they want to say? DTL will be recognized for all taxable temporary difference without any condition. Without any condition. DTA will be recognized for all taxable temporary difference without any condition. But for DTA, they are thoda sa conservative. In a DTA will result in income. Means when you are passing journal entry for DTL, what is journal entry for DTL? Yes, it will be DT expense account debit DTL. For DTA, what journal entry? DTA account debit to DT income. Income means this DT expense will be added to current tax and this DT income will be deducted from current tax. So whenever DT income means we need to become conservative now. So what they want to say, for DTA you should recognize, for deductible temporary difference you should recognize DTA, but only by applying the prudence concept. Are you getting? Just try to understand. Deductible temporary difference can be deducted from future taxable profit. Any deductible temporary difference can be deducted from future taxable profit, but it will be deducted only when such taxable profit is available. If that is not available, so it can be deducted. Can we deduct it? Can we deduct it? Means suppose this is the first year, this is second year. You have a deductible temporary difference of rupees 1 lakh. Correct? Means why you are creating DT on this? Because it will be reversed in future and it will be available as a deduction from future year. So how much taxable profit is required in future year? 1 lakh. Suppose in the second year it is going to be reversed. Suppose let us assume it can be reversed in any year. But suppose let us assume it will be reversed in second year. And we have a taxable profit of 1 lakh. If we have a taxable profit of 1 lakh, we can deduct it and then 0 and means we are getting some tax benefit. Correct. But suppose we have a taxable profit of only 20,000. whether you will get a benefit of this. Means you can only deduct 20,000 now. You can't deduct more than that. It means you are getting only advantage to the extent of 20,000. So what they want to say, okay, DTA will be recognized only to the extent of future taxable profit available. If future taxable profit is not available, do not recognize what DTA. Do not recognize DTA. Means in this case, you recognize DTA, but only for 20,000 into tax rate. Means for 80,000, it will be unrecognized DTA. Unrecognized DTA will not recognize it. But suppose if you have zero taxable profit, you will not recognize DTA right now. You will not recognize DTA right now. I hope Tora you have understood what they said. DTA should be recognized for all TTD to the extent that it is probable, that future taxable profit will be available against which such TTD can be utilized. This is very important para. Understood? This much you understood? Have you understood this point? Have you understood this point? Correct. Now, just try to understand. Suppose in the first year, we have some tax losses. Tax losses of rupees 1 lakh. So now we know that as per Income Tax Act, it can be carried forward for 8 consecutive years. So we'll get some tax benefit in future year. So can you see this tax losses is also like deductible temporary difference. So on tax losses also we should create DTA. On tax losses also we should create DTA. So can I say if we have unused tax losses which can be carried forward to next year, so we may get some tax benefit in next year. So right now we should create DTA, but DTA will be recognized only when sufficient future taxable profit will be available against which such tax losses can be utilized. Understood this point? Have you understood this point? Are you able to understand? Correct. But can I say when we have tax losses, so can I say it might happen in future also we have tax losses. Therefore, if you are saying you have tax losses and in future you will have taxable profit, can I say it should be supported by some convincing evidence? Correct now. For example, there is one company Wipro. Wipro is a profit making company. So will you ask in future whether you will have profit? Can I say that company will have profit only? But suppose there is a loss making company, so there is a chance that that company may not generate income in future. So for that, if you are recognizing DTA, you can recognize only when the future taxable profit is available. But if management is saying future taxable profit is available, it's to be supported by convincing evidence or not. So what they want to say, in this case we recognize DTA. But what they want to say, DTA shall be recognized for carry forward unused tax losses and tax credit to the extent if it is probable that future taxable profit supported by what? Convincing evidence will be available against which such tax losses and tax credit can be utilized. Understood? When I am saying tax credit, to one of the example of tax credit is MAT. MAT, you know, MAT credit. Do you know about MAT credit? MAT credit. So one of the example of tax credit is what? MAT credit. So if suppose we have MAT credit, for that MAT credit also we will create what? DTA. To the extent that it can be set off in future year. Understood? Yes, sir. Have you understood this much? Have you understood this much? Then just try to understand. There is some exception to this rule. What is the exception? DTA will not be recognized if it arises from initial recognition of an asset and liability in a transaction and which do not affect either accounting profit or taxable profit. This is what they want to say. Due to any transaction, initial recognition of any transaction which is not a business combination transaction. Means leave business combination, will do a separate discussion. Okay. Means if there is a transaction which is not a business combination transaction, and that transaction will affect either accounting income or taxable income. Accounting income is books of account or taxable income. Then can I say it is considered as permanent difference as per AS22. You know AS22 permanent difference? Do you know? AS22 is India's 12 corresponding AS was AS22. Do you know about permanent difference and timing difference? You don't know, na? For that. What they want to say, everyone. What they want to say? If due to any transaction, means for example, let me take what you purchase one asset 1 lakh, correct? So can I say it will affect both accounting profit and taxable profit? Why? Because this will be depreciated in books of account as well as income tax. Understood this point? Have you understood? But let me take one example, penalty paid. Penalty paid. So a penalty paid will be accounted in books of account. But can I say it will not affect taxable profit? It will never be accounted in what? Because it is permanently disallowed. Penalties are permanently disallowed now. Whether you will get any benefit of penalty paid. I am assuming that you should know DT. Huh? Penalty is permanently disallowed or not? Correct? So can I say it will never come in income tax book, but it will appear where? Accounting book. So this type of information, this type of situation is known as permanent difference. But permanent difference, they India as 12 has not used the word permanent difference, but they want to say TTA will not be recognized if it arises from initial recognition of any asset and liability in a transaction and which do not affect either accounting profit or taxable profit. So in this case, there will be no deferred tax. There will be no deferred tax. And for such transaction, what we'll do? Can I say we'll have carrying amount? We'll have carrying amount now because it is recorded in books of account. In this case, tax base will take equal to what? Carrying amount. Means if this is 100, we'll take it 100 only. So the difference become what? 0. And if the difference is 0, there is no deferred tax. So can I conclude in this way? If any transaction does not affect either accounting books or taxable book, their tax base will be always equal to carrying amount. Tax base will be always equal to carrying amount. Are you able to understand what I am saying? Are you able to understand? Huh? Same thing is given for DTL also. This point have you understood? Means one more example. Do you know about weighted deduction? Weighted deduction. Suppose you purchase a machinery for scientific research. So in books of account, how much depreciation allowed? To the extent of 10 lakh. But in under income tax, how much depreciation allowed in the year of purchase only? Weighted deduction. How much deduction is allowed? Right now, scientific research, 100%, 125%. Only 100%. One. अच्छा चलो, earlier it was. Now there is some amendment. चलो. Let us assume. Suppose they allowed 150% of 10 lakh. So guys, 10 lakh to we have allowed in books. And 10 lakh we have also allowed in income tax. So this is not permanent difference. But can I say 5 lakh additional we have allowed where? In income tax. But it will not be allowed in books. So can I say this will appear either in what? Accounting book or taxable book. Therefore no deferred tax on this. There is no deferred tax on this. Understood? Correct. This much. Any doubt? No doubt. I think I'm just giving the concept right now. Understood. Now what we'll do? We'll do fast some questions. Let us come to this. What we'll do? Whatever we have understood, we'll apply that and we'll solve these questions. Means our objective is to find out carrying amount, tax base, taxable deductible, DT and DTL. I will do with you. Chalega. Example. This is page number 332. Page number 332. Have you understood this? Can we start? Batao. Machinery cost price 1 lakh. Depreciation as per book 20,000. Impairment loss as per book is 10,000. What is the carrying amount? 70,000. What is the books? Okay, 70,000. As per income tax, whether impairment loss is allowed? Not allowed. But depreciation as per income tax, 50,000 given. Means tax base is what? 50,000. Difference is what? 20,000. But the taxable deductible carrying amount is more than tax base. Means taxable temporary difference. You need to see that table, huh? See that table. Taxable means DTL. Have you understood this? Correct. Second. Interest receivable. Interest receivable is how much? How much? It is 1 lakh. 1 lakh is the carrying amount. And it will be taxed on cash basis. Means right now not received. So it will not be taxable. So it means tax base is 0. Because it will become income in the year of receipt. It will pass journal entry and the income tax when it is received. Right now no journal entry. No, it will not be recognized in income tax books. Have you understood? So the difference is what? 1 lakh taxable deductible. Taxable temporary difference DTL. Are you able to understand what I am doing? बोलना रे. Inventory cost price 1 lakh and RB 80,000. But the carrying amount is what? 80,000. But as per income tax valued at cost price, it become 1 lakh. Difference is what? 20,000. Taxable deductible. Deductible temporary difference. Apply that table. Correct. But the DTL, DTA. Correct. Data 1 lakh is already included in taxable profit. But they are saying data is already included in taxable profit. Means it is already recognized. Okay, data will be same now. 1 lakh here also and 1 lakh here also. Because already included in taxable profit. So in taxable books also it has been recognized. So data will come in tax books also. Now difference is 0, 0. Are you able to follow? We are doing page number 332. Open page number 332. Okay. Now data 1 lakh, expected credit loss 10,000. So we know that as per Income Tax Act, the credit loss are not allowed. So as per books it become 90,000. As per income tax 1 lakh, difference is what? 10,000. Taxable deductible, deductible temporary difference. How much? It will be DTA. Are you able to understand what I am doing? Then data is 1 lakh, bad debt 10,000, not yet recorded. So can I say in books it will be 90,000 because we record it. And as per income tax, bad debt is allowed. Bad debt is allowed now. So as per income tax also 90,000. No difference, no difference. No difference now. Correct. Then data 1 lakh which will be taxable on cash basis, means as per income tax it will be recorded only on cash basis, means right now it will not be an income. It is not an income, so they will not pass any journal entry. So means carrying amount is how much? Tax base will what? 0. Correct. It will be 1 lakh taxable or deductible. Taxable temporary difference DTL. Correct. Then preliminary expenses 1 lakh, written off in 5 years. Can I say as per Ind AS 38, it will be charged to PL as a expense immediately? Means as per books to 0, but as per income tax, it will be amortized in 5 years. Means 20,000 will be amortized in first year. Balance is what, 80,000. The balance will be 80,000. Difference is 80,000. Taxable deductible. Taxable deductible. Deductible na? DTA. Are you able to understand all these? Correct. Then research expenditure 1 lakh, fully allowed. So can I say as per books also fully allowed? As per India's 38, as per income tax also fully allowed. Achha, zero. It will be zero. Fully allowed means carrying amount is 0 na? Carrying amount 0. Here also 0. No difference. No difference. Then development expenditure 1 lakh, amortization during the first year 10,000 means 90,000. As per India's 38, it will be recognized when 6 conditions satisfied. Correct. But fully allowed as per income taxes means 0. 0 means what? 90,000 difference. Without taxable, deductible, taxable, and it will result in DTL. Then scientific expenditure on purchase of machinery 1 lakh, depreciation as per book 10,000 means 90,000. 90,000. Correct. And 125% deduction. There is a 125% deduction. So 100% allowed, 25% extra allowed, 25% permanent difference, ignore it. And 100% also allowed in the year of purchase. So it means it becomes 0 only. 0 only na. So it become what? What become taxable, and it will result in what? DTL. Difference is 90,000. Correct. Then dividend received from a subsidiary company not taxable as per Income Tax Act. But now there is some changes, huh? Now it will become taxable. Now it will be taxable, na? Dividend received are now taxable. The hands of shareholders. Yes or no? Dividend received is now taxable. Previously it was exempt in the books of shareholders. But let us follow the question. Let us follow the question. Respect the information given the question. So can I say just write one, not taxable. It is permanently exempt. Means it is an item of permanent difference. Means it will come only in accounting book, will never come in taxable book. So what is the carrying amount? And tax base will be equal to what? Carrying amount. Whenever it is an item of permanent difference, so I say tax base will be equal to what? Carrying amount, and no difference, so no deferred tax. So any item of permanent difference, what is an item of permanent difference which will either come in accounting book or will come in taxable book, tax book. Are you able to understand this point? Yes, sir. Then loan receivable. Again, loan receivable to 1 lakh. So here also 1 lakh. Here also 1 lakh now. Can I say no difference? Correct. Then outstanding expense 1 lakh. Now it is a liability, yeah. And related expense allowed on cash basis. Means can I say it will become expense when it is or actually paid. So no journal entry, it will not be recognized under income tax books. Nil. Now difference is 1 lakh. Now carrying amount is more than tax base. Now it become deductible now. Deductible temporary difference. Why deductible? Because it is a liability now. Liability. Liability reverse rules. Liability reverse rules. Huh? Then outstanding expense 1 lakh and allowed as per income tax act. So allowed as per income tax act means what? 1 lakh only. Which will pass journal entry as per income tax act. So this is a liability in income tax book also. No difference, no difference. Correct. Understood. Then outstanding expense 1 lakh. I have given two situations. Allowed if paid before due date. So I think there are some expense which will be allowed only when paid before due date. So if suppose paid before due date, so it means allowed under income tax act. Allowed under income tax act means what? it will be recorded. It will be recorded. It is outstanding only now on 31st March. Means no difference. But not paid before due date. It will be allowed in the year when it is paid. It will be allowed in the year when it is paid. So it will be 1 lakh and what? 0. And the difference will be 1 lakh for the taxable deductible. Deductible temporary difference. Correct. अच्छा 70 you do by your own. King can say, huh? $70 done. So the interest received in advance is pre-received income 1 lakh will be taxed on cash basis. So already received, so it will be recorded. So what will be tax base? Huh? No, 0. Because if it is recorded, it is an income now, it is not a liability. What journal entry you are doing under income tax? Cash account debit to income. Liability is 0. Recorded, but liability is 0 now. Because under income tax act it is tax on cash basis, so it means cash already received. What journal entry you are doing under income tax? Cash account debit to income, no liability. Liability is under, therefore tax basis under. Understood? Bolna re. So this will be also 1 lakh taxable deductible temporary difference. Then outstanding fines and penalty 1 lakh. Yes, it is permanently disallowed. Fines and penalties are permanently disallowed. Therefore, tax base will be also equal to what? Always equal to carrying amount. Therefore, no difference. So, whenever permanent difference, always tax base will be equal to carrying amount. Investment cost price 1 lakh, measured FVTPL, fair value is 1 lakh 20,000. So, can I say carrying amount will be 1 lakh 20,000? But as per income tax, we don't apply fair value. It will be 1 lakh. The difference is 20,000. 20,000 will be deductible taxable because it is an asset. Taxable temporary difference. Correct. Then loan received at market rate of interest. Can I say it will be 1 lakh? 1 lakh only. No difference now. No difference. But loan received 1 lakh, transaction cost 1 lakh, measured at cost by applying EIR. So can I say initially it will be 99,000 here. But as per income tax, it will be 1 lakh only. Because transaction cost will be allowed as a expense. It will be 1 lakh. Have you understood this point? Loan received is a liability, so it will be taxable deductible. Taxable deductible, taxable. Understood? Difference is 10,000. Sorry, 1,000. Can I say you have understood? Have you understood the tax base wala point? Tax base you understood? Look at the major understanding came. If you see, understanding came. Can I take some questions on the basis of this understanding? On the basis of this understanding. But before taking this, I should take some special points also. Because the question will be related to special points better. But I hope if this much you have understood now, so from examination point of discussion done, now I need to only take some important concept, or better I will come to this important concept with the questions only. Chalega? Because there are some important points that we need to give what? थोड़ा सा weightage. Can we take 5-minute break? Okay. We'll take 5 minute break, then we'll come back. Hello. Hello. Can we start once again, everyone? Now, one doubt came about point number 6. Point number 6. Just try to understand this all examples I have created. Okay. So sometime when we create a question, it might happen it does not provide a proper information to a student. What is the point number 6? Data 1 lakh, bad debt 10,000 which is not yet recorded. So of course bad debt which is not recorded will be recorded in the books of account. When you record, what journal entry you are doing? Bad debt to debtor. So debtor will reduce now. So that is 1 lakh 90,000 is the carrying amount. And bad debt is also allowed under income tax act. So under income tax also 90,000. So because of that reason I deducted it. So not yet recorded does not mean you will not record it. Sometime in my regular class also this doubt will come. It is given not yet recorded, why you are recording it? I am saying not yet recorded. So of course in the books of account bad debt will be recorded na. Are you getting? अरे बोलना नहीं. The doubt came, therefore I have discussed it. चलेगा? But don't worry, in exam they will give proper information because these all examples illustration I have created. So sometimes when we write, it might happen that it is not providing the proper information to you. But in exam, don't worry, they will provide you the proper information. Okay, sir? Yes, sir. Apart from this, no doubt. Now let us come to some questions. If the question is related to a special point, so I will first come to special point, then I will discuss the solution. Okay, let us come to one by one question. First question, there is no special point for the first question. Very important question. Right now we have done lease and the question is related to lease only. On 1st April 2001, S Limited leased a machine over a 5-year period. The present value of lease liability is 120 crore, discount rate 8% and recognized as a lease liability and corresponding ROU asset on the same date. ROU is depreciated under straight line method over 5 years. The annual lease rental are 30 crore payable starting from 31st March 2002. The tax law permits tax deduction on the basis of payment of rent. Means as per income tax act, there is no concept of lease liability. There is no concept of ROU asset. Whatever you are paying that become expense. Correct? In the year in which you have paid means in this question, better I will do with the solution only. Correct? So in this question, first we need to find out the carrying amount of lease liability. Closing balance we need to find out. So they have given how much? 120 crore. They have given how much? Initial liability 120 crore. Bola yes or no? 120 crore. So 120 crore plus interest. Interest will be calculated at 8%. So interest how much? 8%, 9.6 minus lease payment minus 30. And this become closing balance of lease liability. We need to also find out closing balance of ROU asset. So ROU asset 120 crore divided by, it is what is the lease term? Lease term is what? Divided by 5. So it is coming 24. So this become carrying amount of ROU asset. So either you can do separate or you can do on net basis also. That is your choice. I'll just give you one format. Correct. Means what they want to say. When I am saying lease liability and ROU asset and net amount. But what is the carrying amount of lease liability? How much we calculated? 99.60. What is the carrying amount of ROU asset? 96. What is the net amount? 3.60. What is the tax base? The tax base will be 0. It will be 0. So this is coming what? 99.60. This is 96. This is 3.6. Correct. Can I say for liability carrying amount is more than tax base? So this is taxable deductible. For liability, Carrying amount is more than tax base. It is deductible temporary difference. This is taxable temporary difference. And for net amount, we can say this is deductible only. Deductible temporary difference, because net amount is what? Liability only, because this is net liability. So either you can do on net amount or you can do gross amount also. Correct now. So if you want, you can create DTA on this or DTL on this and net DT on this. Understood? At what rate? What is the rate given? Rate is given how much? 30%. What is the tax rate given? 30%. So into 30%, if you do, how much it is coming? 1.08. So either you can do on net basis. You need to create DTA 1.08, or you apply 30% on these and 30% on this and calculate gross DT and gross DTL. Your answer will remain same. Very simple question, expected question. Chalega? Means only you can do mistake where in identifying taxable and deductible. I have seen the student normally do that mistake, or identifying tax base only. They don't know what is tax base. Correct. One more question can I take? Correct. Question 19. Correct. For the question 19, I need to go to business combination. This is a question of what? Business combination. Correct. So let me take a special point for business combination, or I will just inform you with this question what they want to say. Let us read the question. This is a question of business combination, very important. Either this question will come or similar question will come. Either this question will come or similar question will come. ठीक है ना? What they said? On 1st April 2001, A Limited acquired 12 crore shares representing 80% stake in B Limited by means of cash payment of 25 crore. It is a group policy to value NCI in subsidiary at a date of acquisition at fair value. Means NCI will measure at fair value. So I am assuming that you know business combination little bit. Okay? The market value of equity shares on 1st April 2001 can be used for this purpose. On 1st April 2001, the market value of B Limited share was 2. On 1st April 2001, the individual financial statement B Limited showed a net asset of 23 crore. So this 23 crore is the carrying amount of the net asset. Carrying amount now. Bolo. Carrying amount of the net asset in the books of B Limited, but we recognize at fair value in business combination. The directors of A Limited carried out fair value exercise to measure the identifiable asset and liability on this date. The following emerged. Property having a carrying value of 15 crore had an estimated market value of 18 crore. Okay. Plant and equipment having a carrying value of 1 crore had an estimated market value of 13 crore. Inventory, which is shown at a cost price, the fair value is what? 3 crore. The fair value adjustment have not been reflected in the individual financial statement of B Limited. The fair value adjustment will be regarded as a temporary difference for the purpose of computing deferred tax. The rate of deferred tax is how much? 20%. Calculate deferred tax impact. So what they want to say? What Ind AS 12 says that in case of business combination, on initial recognition of INA, we should create DT and DTL. Means can I say we need to find out fair value on acquisition date? Fair value on acquisition date. What is the fair value that we need to understand? What is the carrying amount given? Carrying amount of INA given how much? How much given? Hello? 23 crore. Correct. Can I say it will be increased by upward value in property? Property is 15. So 3 crore increase 18 minus 15. So increase by 3 crore. Then plant and equipment increase by, it is carrying value 1 crore and market value 13 crore. So this will be increased by how much? 12 crore. And inventory will increase by how much? 0.5 increase now. 0.5. What is the total fair value? 44.5. Understood. So can you see this is the carrying amount on initial recognition? Is the fair value is the carrying amount in the books of acquirer? So this is the initial carrying amount. Now we should compare with the tax base. So what India's 12 says that this tax base will be the tax base of acquiree. This is the tax base of acquiree. Because under Income Tax Act, if you know under Income Tax Act, so deduction will be allowed as per the cost of previous owner in case of amalgamation, etc. Means whenever there is a business combination, so what our Income Tax Act say that tax base means the deduction will be allowed as per the cost of previous owner. So it means tax base will be equal to tax base of acquiring. But in this question, what is not given? Tax base of acquiring is not given. So from examination point of view, if the tax base of acquiring is not given, we'll assume carrying amount of acquiring is equal to what? Tax base of acquiring. If not given, means first we need to find out what? Tax base. So we'll take tax base of, what is wrong? This is wrong. Total is wrong. Who has given this amount? I have not given. Who has given 44.5? You write into night. Why you are looking into my handwriting? Don't look into my handwriting. 38.5. You write into. Why you are looking into my handwriting? Blaming me. So you are not writing properly. Wah re wah. In my handwriting, what can I do? I am CA na. I will write down this way. You have seen doctors writing? This is crash batch. I am very fast. Okay. In class I write on this way. 23, 3, 12. Okay. In regular class, this is crash batch ना देखो my handwriting will be good only. So I show my notes. देखो कितना प्यार से लिखता हूँ. In my what? Regular class. Oh, 38.5. Now okay. What I was explaining I forgot. Ah, tax base. Now coming to tax base, carrying. Can you say what I was saying? This fair value is the initial carrying amount. When I'm writing fair value, this is not fair value. This is the initial carrying amount in the books of acquirer. Now, what is the tax base in the books of acquirer? So, what Income Tax Act says that in case of business combination, deduction will be allowed as per the cost price of previous owner. Means tax base will be the tax base of acquiring. Now, if the tax base of acquiring is not given, because in this question not given, so we'll assume carrying amount of acquiring is the tax base. Means, can I say the tax base is equal to 23 only? But don't take 23 in every question. It might happen in some question they have given what? Tax base of acquiring. So take the tax base of acquiring. If not given, we'll assume in their books there was no difference only. That assumption will prevail. If what is not given, tax base of acquiring is not given. Are you able to understand? Because not given. Now we'll compare. This is more than this. The difference is what? How much? 15.5. But the carrying amount is more than tax base. This is net asset only. So it will be taxable deductible. It will be taxable temporary difference. On taxable will create DTL. DTL at what rate? Rate given how much? 20%. So 20% how much? 15.5. 15.5 into 20% how much? How much? 3.11. So can you say now the INA will become what? How much? This minus this minus. So now INA will become 38.5 minus 3.1 is equal to what? 35.4. Understood. So this will be fair value of INA. Considering the DT and DTL, if DTL will add it, DTL will deduct it. Have you understood? Now we can calculate goodwill. So for goodwill we want fair value of consideration paid. So fair value of consideration paid how much? Is given initially. They have acquired 80% by payment of what? 25 crore. So 25 crore is what? PC. Then we'll add on fair value of NCI. So fair value of NCI will be how much? So how many shares they have acquired? They have acquired 12 crore shares. So how much they have not acquired? The 12 crore divided by 80 into 20 will do. So this is 12 divided by 80 is equal to 3 now. So 3 crore is not acquired. 3 crore is not acquired into what is the market price they have given. What is the market price of shares of B Limited? It is 2 rupees. So into 2, so 6 crore become what? Fair value of NCI. The total become how much? 31 crore. From this will deduct INA. INA is what? 35.4. So there is a gain on bargain purchase. How much gain on bargain purchase? 4.4. Understood? Have you understood this point? Whether our solution is correct? Check कर लेंगे. What mistake we have done? Fair value consideration paid 25. Add NCI 6. Net asset में what mistake we have done? What mistake we have done? 23 is what? This. Add 3. Acha, there is some printing mistake in the question. Printing mistake in the question. But 1 crore is given, that is 11 crore. I understood. But our answer is correct. Let us assume printing mistake is correct. Okay. Are you able to understand? There is some typo mistake in question. I understood. But as per question, we are doing correct. Don't refer solution. So this is the answer. Understood. Are you able to understand? What I want to say, in exam, they may give tax base also. Of previous or no. If tax base is given, take tax base. And if not given, assume carrying amount of previous owner is equal to tax base of previous owner. Understood? Correct. Understood. So what journal entry will do? INA account debit how much? Excluding DTL. It is 38.5. 38.5. To DTL how much? How much? 3.1. To cash how much? 25. To what? NCI how much? 6. The difference will be gain on bargain purchase. Transfer to capital reserve. How much? 4.4. It can be goodwill. So what India's 12 says that on initial recognition, whatever DT and DTL is created, that is adjusted in goodwill or gain on bargain purchase. It is not transferred to PL. So due to DTL creation, the adjustment is done in what? Goodwill or gain on bargain purchase. Have you understood this point? Any doubt? Have you understood? Have you understood this point? Next question. Question number 20 is related to what? Share based payment. This is also very important, can be asked in exam. Very important, very good question. On 1st April 2001, P Limited granted 1 crore share option worth rupees 4 crore subject to 2-year vesting period. The income tax law permit a tax deduction at an exercise date of intrinsic value of option. What does it mean? What they are saying, income tax permit a tax deduction on exercise date based on intrinsic value on that date. It is not based on fair value of option on grant date. Is as per Ind AS 102, we recognize expense on which date? Vesting period based on fair value of option on grant date. But income tax will allow on which day? Exercise day based on intrinsic value on exercise day. The difference will be there. The intrinsic value of option was 1.60 crore on 31st March 2002 and 31st March 2003 it was 4.60 crore. The increase in the fair value of option was not foreseeable on 31st March 2002. The options were exercised on 31st March 2003. Give the accounting treatment. Means what they want to say, let me explain. So what is the first date? 1st April 2001. 31st March, 31st March, and all the options will be vested. What is the initial fair value of option on grant date? The 4 crore they have given. Means as per Ind AS 102, it will be 2 crore, 2 crore will be recognized. Means as per books of account, my journal entry what? First journal entry is what? EB expense to SBP reserve. Same journal entry what? In the second year with the same amount. This journal entry, no doubt, this is as per Ind AS 102 already we have done. Now what income tax is saying that will allow you expense, but not today, will allow when? On exercise day. In this question, can I say this vesting day is only exercise day? So can I say right now we need to estimate what will be the intrinsic value on which date? We need to estimate intrinsic value on this date, and it is given what is the expected intrinsic value? 1.60. And what is the actual intrinsic value? 4.60. Understood? Means can I say as per Income Tax Act, if this is the expected intrinsic value, because this was not what they are saying, this was not known on this date, so it means we will do accounting based on estimation, and 1.60 is the expected deduction to be allowed in future. Expected deduction to be allowed in future, but for 2 years. But right now we are doing for 1 year. So how much expected deduction to be allowed for first year? It will be 1.6 divided by 2, that is 0.80. Just try to understand. You can see the carrying amount of liability is 0. There is no liability because it is equity settled now. But there is some expected deduction to be allowed in future. Whatever allowed in future is what? Deductible temporary difference. Means in this case, year 1, what is my deductible temporary difference? You only say. In year 1, what is my deductible temporary difference? What is allowed under Income Tax Act? Whatever extra is allowed under income tax, that is my deductible temporary difference. Okay, 0.80 is what? Deductible temporary difference. Have you understood this point? Follow. Once that's so, that I am saying is special point. So, chalo, let us do in that way. What is the carrying amount of liability? Zero only, na? Check karo. There is no liability. Where is the liability? EB expense debit to SBP reserve. SBP reserve is not a liability. It is what? Equity. There is no liability, na? But don't think in this way. In this you don't think in this way. You will be confused. Think in some other way. Can you see deductible means what? What is allowed in future? So right now, as per Income Tax Act, what is allowed in future? 0.80, that become deductible or not? Think in this way, you'll feel happy. In other way, you will be confused in exam. So in share based payment, think in this way. What will be allowed in future? Allowed in future is what? 0.80, that become current year deductible temporary difference. So it become what? Deductible temporary difference is what? 0.80 will create DTA at what rate? 30%, how much? 0.24. Have you understood this much? Correct. Now you say, everyone, if you can say this year 2 means you have understood. Year 2, if you have, you will say you understood. Now, can you say year 2 end, this is your actual allowance and this will be allowed? This will be allowed in this year now. So my question to you all, what is the deductible temporary difference in year 2? No, it is already allowed. Nothing. Zero. Deductible temporary difference is which will be allowed in future. 4 to already allowed na. What is allowed in future? So at year end 2, the game is over na. Now there is no allowance in, there is no extra deduction allowed in future. When I am saying deductible temporary difference, what will be deductible in computing the taxable profit of future? So can I say this is to now deducted only? So nothing is allowed in future. Are you able to understand what I am saying? Bolna re. So can I say now it becomes 0? It means GTA is 0. Means just try to understand this is what? This is what DTA created in first year. And now no more required. So we can see in this way. This is the closing balance of DTA. Opening balance of DTA is nil. And in this case 0.24. So can I say this was created in first year and this will reverse in second year? Means this is DTA created, this is reversal of DTA. So what journal entry you will do for creation? This will be DTA account debit to DT income. What journal entry you will do for reversal? DT expense account debit to DTA with the same amount only. Understood this point? Have you understood this point? Correct. Same to same question will come, but students are confused with this. Why we are taking 0? And they are saying why we are not comparing with carrying amount. Carrying amount to hai nahi na. Carrying amount is 0. Are you getting what I am saying? Carrying amount is 0. Are you getting? So in this, don't think in that way. You will be confused. You think how much deduction is allowed in future as per Income Tax Act, that becomes deductible temporary difference. Second year, nothing is now deductible in future. 0 ho gaya. Whatever you have created in first year will reverse in second year. Got it? I think understood. This question also you have understood. I am taking only questions because this chapter you can understand only with the question. Whatever concept we have done now, that cannot be applied in this question if you want to apply also. So this chapter you will better understand when you are doing more and more question. Can we take one more question if you permit? Question 20 done. Let us come to one more question. 21. Question 21. A limited profit before tax according to Ind AS was 100,000 and taxable profit is 104,000. The difference between these amount arose as follows. On 1st Feb, it acquired a machine for rupees 120,000. Depreciation is charged on the machine on a monthly basis for accounting purpose. Under tax law, the machine will be depreciated for 6 months. The machine useful life is 10 years according to Ind AS and as well as for tax purpose. Correct now. So it was purchased on 1st Feb. In accounting, we are charging depreciation for 2 months, but under income tax, we are charging depreciation for 6 months. 6 months, 180 rule है ना, 180 days. More than or less than, I forgot. There is a rule na 181 days. Less than, more than, bakwas. Why they so much? They should make it simple na. Unnecessary complicate. Unnecessary. If they want that we should earn more, this ye become more. That is complicated because to our value will increase na. Correct na. Otherwise, so everyone will understand. That should be complicated only. In the year 2001-2002, expense of 8,000 were incurred for charitable donation. These are not deductible for tax purpose. This is permanently disallowed. Prepare necessary entries taking current and deferred tax into account. The tax rate 25%. Also prepare tax reconciliation. Now, Ind AS 12 says that you need to provide a tax reconciliation if there is a difference between tax expense as per applicable rate and tax expense whatever you have created. This RTP they have given a very good question of tax reconciliation. RTP question, you to refer my RTP videos already I have created. I am not taking any question of RTP in this crash batch. Why I am not taking? Because there are some good questions. First you do revision, do by your own. If you are not able to understand, refer my video. The RTP question I have not taken. Intensely I have not taken. Correct. So a very good question. Means in that RTP, Ind AS 12 question is only one question which is very good. That question have been given. However, not complicated. But that type of question is not given in previous study material. So that question is very good. So only on tax reconciliation they have given. In my regular batch, I used to say very important point, very important point. They will create a good question on this and they have created on tax reconciliation. Okay? But let me do this. So can I say first we need to calculate current tax. First write down calculation of. I am doing this for your point of view. So what is PBT given? PBT 100. PBT means accounting income. How much depreciation allowed in books that will be added back? So 2 month depreciation. What is the cost price? 120. What is the useful life? So into 1/10 for how many months? 2/12. How much? How much? 2. This will be added minus depreciation as per income tax. This is 120 into 1/10 into 6/12. How much? 6 minus plus donation disallowed. How much donation? 8. Can you give me taxable income? Same thing is given in what? Question means what I want to see. If not given, you can calculate. Therefore, I have calculated. This question I am doing properly so that you can understand the concept behind that. So can you see if not given, you can calculate. What is current tax? At what rate? Rate of tax is what? 25%. What is the current tax? 26. Now we'll calculate deferred tax. बताओ. We have one machinery. Can I say donation is permanently disallowed? Ignore it. Ignore it. What is the carrying amount of machinery after depreciation? 120 minus 120 minus 2 na 118. What is the tax base of machinery? 6 means 114. So this is taxable or deductible? Taxable. Temporary difference 4 means we'll create DTL at what rate? 25%. How much? 1. Correct. What journal entry will do for current tax? It is current tax expense to current tax liability. How much? How much? 26. 26 na? What journal entry will do for deferred tax liability? It will be deferred tax expense to deferred tax liability. How much? 1. Understood. Now we'll prepare what? SOPL. SOPL mein how much PBT? PBT is how much? 100. Hence we will do less tax expense. A current tax how much? B deferred tax how much? Total become how much? What is the profit? 73. Correct. Understood. This much you understood? This much? How much? What is given? Solution. This is reconciliation. I am coming to this, Ray. I am not teaching you as per solution. I am just giving this. When I am doing now, I am giving you concept. Just think about this right now. So pull. Solution leave. I am giving you solution now. This is correct. This is SOPL. Now I am coming to reconciliation. Reconciliation means what? Ki on these, if you had applied, what is the applicable tax rate? So can you see it should be 25. So you need to reconcile why 25 become 27. The reason is permanent disallowance. So you need to prepare one reconciliation. Now tax reconciliation is done in two ways. One is done in absolute amount. You can see they have also asked you to prepare on absolute number and based on tax rate. So tax reconciliation based on absolute amount. First, can you give me what is accounting income? 100. So what is the tax as per applicable rate? What is tax as per applicable rate? 25%, 25. And what is the tax expense as per SOPL? 27. So you can see it has been increased by 2. The reason was permanent disallowance. So if some expense is disallowed, my tax expense will increase or decrease? Increase. Plus effect of what? Plus effect of permanent disallowance of expense. What was the amount of expense? Donation amount? 8 into 25%, how much? 2. Reconciled. This is known as reconciliation. This is known as reconciliation. Second reconciliation they ask based on tax rate. Reconciliation based on tax rate. Understood? So what is the applicable tax rate? Applicable tax rate is 25. Now to reconcile with effective tax rate, what is the effective tax rate? The effective tax rate is 27 divided by 100. It become 27%. So increase by 2%. So what is the reason? Let's write down effect of permanent disallowance. So how much increase? 2 rupees increase. So 2 by PBT 100, that is 2%. Understood? This is very easy, but you need to write down properly now. Reconciliation have been understood. So they may ask you reconciliation. But a very good question. If there is a one difference, then it is very easy. But if there are a lot of difference, one question is given RTP with a lot of difference. Very good question they have created. Very excellent question. So that question you do by your own. Chalega? Understood? This also you have understood? Correct. Come to the next point. Correct. Question number 22. A Limited prepare financial statement as on 31st March every year. The rate of income tax applicable to A Limited is 20%. The following information relate to the transaction, assets and liability of A Limited during the year. A Limited has shareholding 40% in B Limited. A Limited purchased this shareholding for rupees 45 crore. The shareholdings give the A Limited significant influence over L Limited but no control, which it is an associate, and therefore A Limited value account is interest by using equity method. You know equity method? India's 28 has given equity method for associate and joint venture. You know about equity method? The equity method carrying value is 70 crore as on first year and as on second year 75. However, in the tax jurisdiction in which A Limited operate, profit recognized under equity method are taxed if and only if they are distributed as dividend or relevant investment is disposed of. Which can say income tax act we do not apply equity method, which as per income tax act it will be recognized cost price only. So what will be the impact on this? First year end 1, year end 2. Batao. What is the carrying amount? 70, 70 and 75 na? 70 and 75. What is the tax base cost price only? How much? 45 and 45. So again there is a taxable temporary difference. How much? 25 and 30. So it means we need to recognize DTL at what rate? 20%. So first year it will be how much? 5 na? 5. Second year it will be how much? 6. So just try to, this is the closing balance of DTL, because this is DTL required. Now you'll compare with the opening balance DTL. This is what? 0 and this is 5. It means first year how much DTL created and second year how much DTL created? 1. So this will be the DT expense of first year. This is the DT expense of second year. Understood? Once again, what I am saying, this is what? This is what I am saying. When I am saying this is taxable temporary difference, so this is taxable temporary difference at year end. It means this is DTL at year end. Means this will come in balance sheet, this will come in balance sheet. So first year you created 5, now it is increased to 6. Means how much created in second year? 1 only na. It means first year how much you have created, and second year how much you have created? 1. Means what is the DT expense of first year? 5. What is DT expense of second year? 1. So they have asked DT expense, it is 1. If you say 6, it is wrong. What they have asked, check करेंगे. What they have asked. They have asked the charge or credit to both PL and OCI. Correct? Now there is a rule. The rule is what, everyone? Whether it will be transferred to PL or OCI. The rule is what? The transaction effect will go to PL. So DTL effect will be also go to PL. If the transaction effect will go to OCI, so DT effect will also go to OCI. Have you understood? So can I say this is equity method? In this case, always the transaction method will go to PL. Therefore, this DTL will be also transferred to PL. Have you understood? Suppose this is investment not in associate. Suppose this is investment in any other entity. And suppose we have taken FBTOCI. Let us assume. This is FBTOCI. So this fair value gain or loss is transferred to PLOCI. So therefore this DTL will be also transferred to OCI. Means DTL will be created and reversed through OCI. Understood? Suppose this is FBTPL then, because transaction effect go to PL, therefore their DT effect will also go to PL. The rule I have understood. What is the rule? The accounting treatment of deferred tax depend upon the accounting treatment of the transaction for which you are creating deferred tax. Understood? Understood this point? Yes, sir. Now, second point is important. This is also very important. A limited measure is head office building using revaluation model. बताओ, revaluation model, the revaluation surplus is transferred where? OCI. So their DT effect will also go to OCI. Okay? That I am saying. The building is revalued every year on 31st March. On 31st March, how many questions left? Oh. On 31st March 2001, the carrying value of building after revaluation is 40 and its tax base is 22. During the year ended 31st March 2002, A Limited charged depreciation in SOPL 2 crore and claimed a tax deduction of 1.25. Is as per book, what is the depreciation? As per income tax, what is the depreciation? On 31st March, the building was again revalued to 45 crore. In the tax jurisdiction in which A Limited operates, revaluation of property, plant and equipment does not affect taxable income. Means can I say revaluation profit is not taxable. Understood? Let us do. We are doing now for head office building. So can you give me what is the carrying amount in year end 1, then year end 2? So year end 1, so they have given how much? 40 crore. Tax base is also given how much? How much? So this is taxable only. How much? 18. Now they have said means depreciation how much? As per books 2. And they have given it will be revalued to what? 45. Means what is the revaluation gain? 7. Understood this point what I have said? And what is the income tax depreciation? 1.25. This is how much? 20.75. No revaluation under income tax. Huh? We are not doing plus 7. This have you understood what I have done? So this what is the taxable temporary difference at year end 2? 45 minus 20.75. 24.25. Correct. Have you understood this point? So what is DTL required? At a rate of 20%. Na? So 18 into what? 20%? 3.6. And 24.25 into 20% how much? 4.85. Correct. Now just try to understand. Right. In this, can you say in second year there was revaluation surplus? On revaluation surplus, because that is taxable in future, will create DTL, and because revaluation surplus was transferred to OCI, DTL will be also created through OCI. So on 7 into what 20%, how much DTL will be created through OCI? So can I say 1.4 will be created through OCI? Means can I say out of 4.85 in current year, DTL is created through OCI? So can I say minus DTL created through OCI in current year how much? 1.4. 1.4 na? Are you able to understand what I am saying? It was 4.85 na? 4.85. This is how much? 1.40. Means the balance become 3.6 and 4.85 minus 1.4. How much? 3.45. Means this is to created through OCI. Now you can see 3.6 become 3.45. So there is a reversal. Reversal. The reversal is due to depreciation, and depreciation is charged to PL. Therefore, their effect will go to what? PL. Are you able to understand what I am saying? So how much reverse? How much reverse? 0.15 got reverse. This is created. This is reverse. So reversal will be done through PL. Reversal will be done through PL. So in the second year, how much created? In the second, in this year, the current year. In the current year, means which current year means what? What is the year? 31st March 2002 na. Means in 0102 na. In 0102, how much DTL created? 1 point? Below 1.4. I am asking question. Why you are confused? So what journal entry will do? DTL created. So 2 DTL, but created to OCI, revaluation surplus will be debited. Means your revaluation surplus will decrease with 1.4. And how much reverse? So you will say PL or DT expense account, sorry, reverse na. So DTL account debit to what? DTL account debit to PL, or you can write down DT income. How much? 0.15. Have you understood this point? Have you understood? Very good question. Have you understood this point? I think you have understood. Let's see what is given in the special notes. I said that there are some special points. First, revaluation. Check karo. Revaluation. What I have said, if PP is revalued as per revaluation model, any upward revaluation is credited to OCI as revaluation surplus. Due to revaluation, DTL will be Due to revaluation, DTL will be created. It will be created. DTL will be created and adjusted in what? OCI. Understood? So due to revaluation, DTL will be created through what? OCI. Revaluation surplus is shown in balance sheet in other equity. Net of tax. So can I say now it will be shown in balance sheet net of tax. So revaluation should be shown in balance sheet net of tax. Subsequently, additional depreciation on revalued amount is transferred to PL. So subsequently, we will charge additional depreciation on revalued amount, and that additional depreciation is charged to PL. Correct. Therefore, due to this, DTF will be reversed and adjusted in what? PL. This have you understood? Correct? Yes, sir. Downward revaluation on impairment loss. Can I say we have done the accounting treatment that impairment loss, if any, can be impairment loss or downward revaluation. Accounting treatment is same. Downward revaluation and impairment loss. Here, both downward revaluation and impairment loss is first adjusted with revaluation surplus to the extent available and balance to PL. Or if it is cost model, then the impairment loss will be charged to PL. Means, in simple word, if impairment loss is charged to PL, their effect will go to PL. If impairment loss is debited to OCI, their effect will go to OCI. This understood? Yes, sir. Business combination also we have done. Correct. One question I have taken. You can read. Share based payment also I have done. This also you can read. Correct. This tax holiday they have not given any question. I am leaving it. I am leaving it. Distribution of dividend. This is what? This is they have not given any question. You can leave it. However, this point is not applicable in India. Withholding tax has been deleted because CDT and DDT concept has been withdrawn. Okay. This much any doubt? Means I have taken almost all the points. Correct now? Okay. The last question let us take. Can we take the one more question? Then apart from this, if any question you have doubt, you can ask me. This is one question. This is also very good question. X Limited prepare consolidated financial statement on 31st March each year. During the year ended 31st March 2018, the following event affected the tax position. Y Limited is a wholly owned subsidiary of X Limited. Made a loss adjusted for tax purpose for rupees 30 lakh. So there was a tax loss of Y Limited. Correct. Y Limited is unable to use this loss against previous tax liability. Of course, it cannot be set off with previous tax liability. Income Tax Act does not allow Y Limited to transfer the tax rates to other group companies. It cannot be set up with the profit of other group companies. However, it allows Y Limited to carry forward loss and utilize it against the company's future taxable profit. The directors of X Limited do not consider Y Limited will make taxable profit, means they will not make taxable profit in future. Will you create DT on this? No DT on this. Correct? So no DT will be recognized because management is expecting that no future taxable profit will arise against which such tax losses can be set off. Then, just before 31st March 2018, X Limited committed itself to closing down a division after the year end, making a number of employees redundant. Therefore, X Limited recognized the provision for closure cost. This is provision for restructuring as per Ind AS 37. Remember, in a statement of financial position, income tax allows the tax deduction for closure cost only when the closure actually takes place. Means what is the carrying amount of provision 20 lakh? Tax base is nil. Tax base is nil now. For liability, carrying amount is more than tax base, but the taxable deductible. For liability, provision for restructuring cost is the liability now. So for liability, carrying amount is more than tax base, taxable deductible. So 20 lakh deductible. Deductible means DTA. DTA means we should have sufficient profit. We need to wait, In the year ended 31st March 2019, X Limited expect to make a taxable profit which will be in excess of 20 lakh. Means we have taxable profit. Therefore, we can recognize the DT on this. Understood? Understood? आगे चले. During the year ended 31st March 2017, X Limited capitalized development cost which satisfy the criteria of Ind AS 38. The total amount capitalized was 16 lakh. The development project began to generate economic benefit from 1st Jan 2018. Means 3-month depreciation will charge. So 16 lakh is the what? The capitalized amount. And what is the useful life? 5 years. So can you give me 3-month depreciation? Yeah, amortization. It will be 16 lakh divided by 5 into 3 by 12. How much? 80,000. Means it will become 15 lakh. 20,000 is the carrying amount. Correct? The development expenditure was fully deductible against taxable profit, but under income tax it will be charged to PL immediately. Is under income tax means tax base is 0. So can I say carrying amount is more than tax base? So it will become taxable or deductible? It will be taxable. Taxable means we need to create DTL without any conditions. Understood? Can we proceed? On 1st April 2017, X Limited borrowed 1 crore. The cost of arranging the borrowing was 2 lakh. It is deducted from borrowing only. It become 98 lakh. And this cost qualified for tax deduction. Means this 2 lakh will be allowed under Income Tax Act. The loan was 3-year period. No interest was payable on the loan, but the amount repayable will be this amount. This equate to an effective annual interest of 10%. But how much interest rate, how much interest expense we will add? So 10% of 98 lakh. 10% of 98 lakh now. So 9 lakh 80,000 will be added. EIR is given 10%. And there is no contractual payment. What is the carrying amount? Carrying amount become how much? It is 1 crore 7 lakh 80,000. This become carrying amount of loan. Correct. Can I say as per income tax carrying amount will be 1 crore only? As per income tax carrying amount will be 1 crore only. So difference become what? 7 lakh 80,000. And carrying amount is more than tax base for liability, but or taxable deductible. For liability, carrying amount is more than tax base deductible. So on this deductible will create what? DTA. For DTA we want taxable profit in future. It is given in the previous that it has sufficient taxable profit. So if sufficient taxable profit will create DTA. Understood? This type of question can be asked. So I have done some good questions. Some other questions are there that if you do then it will work on. Correct now. But I think I have done my part. My part is done. Time is also over. Well, today we complete financial instrument chapter, a big chapter. Then India's 116, that is also very important. India's 12 question may or may not come, but normally sometimes India's 12 is asked with some other chapters. For example, it can be asked with business combination. Business combination one special point or share based payment chapter. It can be asked. Correct now. So be careful about India's 12. Okay. Any more doubt? Yes. What is the doubt? Huh? Have you understood? You have some doubt. 115? Yeah, that is left from my side. I will do it. Don't worry. Don't worry. I will do that. Huh? Have you understood this much? Correct. Don't bother about that. But this much have you understood? Correct. Okay. I think for today this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day. Okay. Tomorrow, which we will take? Let us discuss today only, because some of the student is asking, sir, please give us the details so that we can revise for revision. So we'll do consolidation tomorrow and India's 19 tomorrow. Correct now. So consolidation pakka, India's 19 pakka, or India's 108 is small chapter, that also will do. So these three to I will check. Only India's 115 is left, that I will do at the end now. India's 115 I will do at the end. However, we are going as per schedule only na. Up to this everything is over, only India's 115 is left. Apart from India's 115 we are going as per schedule. Tomorrow target will be what? India's 19, India's 108, consolidation. We will start with consolidation. Okay? Then because initially we will have be what with full power bank, then धीरे धीरे our power will decrease, then we'll come to India's 108. ठीक है, okay. Thank you very much. We'll meet tomorrow. Till then, bye bye. Enjoy your remaining day.